How we doing tonight, apes? Thanks. You didn't miss much. You guys seeing this? Just a sec. It's gonna be a little different. I'm finding this as we go. This isn't prepared. I just stopped. I wanted to stop, and we're just gonna do this live. So I just need as many eyes on this if you guys want to help out. I was here and I was watching my video and I was reading all the comments and somebody, asynthification, thank you. EDXM, missing link. Citadel, Virtue, Fidelity, Charles Schwab, Sequoia, Paradigm. I just made a video a few days ago on Fidelity. Fidelity just got permission with the UK regulators, FSA, to do tokenized swaps with Citadel and Virtue's company, Hidden Road. That was activated on Friday. So if you guys want to help out, you can do your own. This is real time, so we're just figuring this out. So if you guys want to check any of this stuff out, could really use some help. And I'll walk as we go because I did find a lot. Actually, we're just starting at the beginning. But we're just going to do this as we go. MasterCard. Where did I find Silvergate? They're under investigation. For the FTX. But it gets crazy, guys. Marc Andreessen. A16. Does that ring a bell with anybody? This is it. I found the, we got to get to this. I got to show you how we get to this. Wormhole just launched zero slippage. I don't know if you guys saw my video yesterday. It'll all make sense once we... We're going backwards here, so I gotta get here. Silvergate. Anchorage. Leverage partner with Anchorage. Anchorage is under investigation with the FTX. Like big time. That's the bank. These are the banks. I think these are the guys that lost all the money. If you guys want to look into that, so if anybody can look into the Silvergate. But it led me to Anchorage, so so maybe Anchorage, I don't know. Sorry guys, it's a mess. That's why we're doing this real time. I'm just having some coffee, I'm not sleeping tonight. We're just going to do this. Anchorage Digital, Anchorage Lending. How did I get to Marc Andreessen? Look at, you guys remember this?
Investment or security and is not directed at any investors or potential investors in any A16Z fund. For more details, please see a16z.com/disclosures.
Welcome to 16 Minutes, our show on the A16Z podcast network, where we talk about tech trends that are dominating news headlines, industry buzz, and where we are in the long arc of innovation. Today's episode actually features a look back at the GameStop saga, the stock market drama that some headlines described as a David and Goliath battle that, quote, upended Wall Street. For quick basic context, here's what happened. A group of Reddit users mass purchased and drove up prices of stock in the video game retailer GameStop, forcing short sellers, including hedge funds and institutional investors, to back out in a short squeeze, pushing prices even higher. But beyond the news, this also portended other broader trends, including redefining the power of retail investors, the phenomenon of meme stocks, and more. So in this episode, which is from a conversation that originally took place live on Clubhouse, and which, by the way, can also be found on the A16Z live feed, A16Z co-founder Marc Andreessen talks to Ken Griffin, founder and CEO of the hedge fund Citadel, which was a key player in GameStop as both a market maker and investor. You also hear A16Z general partner and fintech expert Alex Rampell join later in the conversation. Griffin also just purchased in a Sotheby's auction a little over 2 weeks ago one of the original copies of the US Constitution, an auction in which a decentralized autonomous organization called Constitution DAO also bid on buying it in Ethereum. They touch briefly on this at the very end. Now, on to the conversation.
So let's dive right into GameStop, because GameStop was a little while ago, so I'm going to just do a quick, there's a little blurb here on Wikipedia, and I just start by saying I don't represent, by no means do I represent what's on Wikipedia as the truth, but rather just sort of as an expression of kind of the gestalt of the commentary, you know, especially around that time, and just to kind of refresh people who have kind of fuzzed out on the details. So January 25th, it was announced that Griffin Citadel would invest $2 billion into Melvin Capital, which was the hedge fund that had suffered losses more than 30% on its short positions, particularly on GameStop. On January 28th, Robinhood, an electronic trading platform favored by many traders involved in buying GameStop stocks and options, which, by the way, my firm's involved in, abruptly announced that it would halt all purchases of GameStop securities, except to cover shorts, and would only allow those securities to be sold if already held but not sold short. So in other words, Robinhood cut off basically the ability for the retail traders who were torturing GameStop and Melvin Capital at the time from being able to trade. The price of GameStop stock declined steeply shortly thereafter, because Robinhood receives a substantial portion of its revenue through a payment for order flow relationship with Citadel Securities LLC. Many commentators criticize the potential for a conflict of interest where the same entity plays the role of market maker and also participates in the market that it makes. And of course, in this case, also was a major investor in the hedge fund on the other side of the GameStop situation. So.
Okay, I got it. I'll take a break for that for a second. Wait, Anchor Digital's a regulated crypto platform that provides institutions with integrated financial services and infrastructure solutions. First federally chartered crypto bank in the U.S. First one? When was this? June 9th. Institutions' unparalleled combination of secured custody is important. We're finding out custody is really important. Regulatory compliance, $3 billion. Horowitz, Anchorage, Visa, Goldman Sachs. I don't know. I haven't seen them yet. Where are these guys? Okay. We'll go on. Horowitz going to be talking to Marc Andreessen is going to be talking to Ken Griffin here.
More generally,
you guys remember this one?
Here, and I know everybody would. Kind of from your perspective, like what happened? Like what is the true story of what happened during that period?
So, in broad strokes,
This was like in February, right? This was like February 3rd. Do you guys remember when this was?
Melvin Capital was short a variety of stocks that became of interest to rather savvy and sophisticated retail investors who realized that the amount of stock short was just disproportionately large relative to average daily trading. And these retail investors, realizing that there were these unduly sized short positions in the marketplace, started to buy these stocks that caused the hedge funds that were short these stocks to start to incur losses. And you know, when firms are losing money, they almost reflexively start to cut their own risk. So in this case, they start to cover their shorts, and you end up in this reflexive pattern that as retail's buying the stock, pushing it higher, the hedge funds that are short are covering their shorts, pushing the same stock price higher. And this virtuous circle becomes incredibly painful for the hedge fund managers that are short the securities of interest. And we saw this playing out in the marketplace. And on the day that we invested in Melvin, we thought that this had run its course. In fact, it was very clear in the morning of the day that we made the investment that this short squeeze was apparently dying down. And we invested money into Melvin to take advantage of the fact that a number of their shorts had become very inflated in price, and we expected those prices to revert in due course, and we'd have made a successful investment. At that moment, the world changed. We had the social media landscape with some very important influencers really lit up on the story of GameStop as being a stock to get long and to ride to the moon. Melvin continued to cover their short very aggressively over probably the next 48 hours, give or take. I can't remember the exact timing of this. Now, ironically, I'm almost certain that Melvin had covered their entire short before the 28th. In fact, they put out a press release. The press release would give the exact timing of it. I don't recall that off the back of my hand, but I'm pretty certain that by the time that Robinhood stopped trading on the 28th, Melvin had already covered their short and moved on.
And basically just taking the losses would be the way to think about that, right?
Yeah, they'd taken their loss and they moved on. I mean, part of what good risk managers do is when they're wrong and they can't understand what's taking place in the marketplace, they take it on the chin, they take their loss, and they move on. Now, Robinhood had a distinctly different problem than Melvin had. They had a problem of too much success. Robinhood had opened accounts with millions of retail investors who, seeing this price dynamic playing out in GameStop, seeing some of the really important influencers in financial markets.
Somebody's breathing a little heavy there, huh?
Advocating the purchase of GameStop, we saw an absolute deluge of retail buyers of GameStop unlike anything I think the markets have ever seen before. The problem this created for Robinhood is this very concentrated position of buying required them to post good faith margin with the clearinghouse that everybody on Wall Street uses. And I believe that good faith collateral requirement was order of magnitude $3 billion of cash. And Robinhood simply didn't have $3 billion of shareholders' equity to draw on to post that margin. And so because of their incredible success, they needed to restrict trading at that very moment in time where I'm certain they would have wanted to continue to trade to gather the revenues associated with trading, but they couldn't because they had to let some of those purchases work their way through the settlement cycle to release the demands for cash collateral. And of course,
how are we doing? You guys following along with any of this? Are we doing okay? I'm not seeing any comments. You guys following along? This is insane.
Of course, as you know, Robinhood was out trying to raise capital at that moment in time to generate more cash to give them the flexibility to make the margin calls that they had to make.
there's a couple of kind of claims that have, kind of went viral around that time that I think, probably are still, or, kind of still circulate around, so this idea that on the one hand, you've got this relationship with Melvin Capital, where you're now a big investor, on the other hand, you've got this relationship with Robinhood, where they get a lot of their revenue for payment for order flow through your market maker. And so there's this perception developed that you're kind of sitting in the middle of this web and kind of pulling strings, and then there's this kind of shadowy consortium or whatever they call it in the background, and they're issuing this overnight demand for money, and that's presumably like somehow rigged up by Wall Street. So like, what was your reaction to kind of finding yourself in the spotlight on that kind of thing, and how do you kind of process through trying to explain to people what the reality of the situation was?
Well, I have to say that processing conspiracy theories is not one of our core competencies. So we were a bit slow out of the gate to dispute this ridiculous set of claims, just given like we don't find ourselves in the middle of conspiracy theories very often. So as a large market maker, in fact, the largest market maker in the market in late January, in GameStop, in AMC, in the other meme stocks, we were very interested in seeing the continuation of trading both buys and sells. One-way flow is a really difficult proposition for a market maker. So if people keep selling you stock, you keep accumulating inventory, what are you going to do? You make your money as a market maker from the bid-ask spread of buying and selling, getting into and out of a security over the course of a day. So we, as a market maker, were the largest market maker in this period in late January because of our operational capacity to take on the operational risk, capital demands that were inherent in this incredible increase in participation by retail investors. So in contrast to Robinhood, we had the financial strength to meet our collateral calls. We had the operational bandwidth to meet the demands of the marketplace on our business. And then with respect to Melvin, their short in GameStop was, to the best of my knowledge, like already gone or virtually gone.
This is a big one. Here's all of their investments. If you guys want to scroll through this, if anything pops out, I know a bunch popped out for me. Solana's in here. Is Wormhole in here? I bet FTX was in here. I bet they took it out. Synapse. Oh man. So, what was it called? Okay, thanks. We're doing a little different tonight. I'm just nothing's really prepared. I'm just finding this stuff, so I just want to do it live. We're just and I could use some help if you guys want to help. So I'm sharing what I can. If you guys just joined us, I was watching my show. I was watching the comments, and somebody dropped a hint. Thank you. I'm such a mess. Where is all this stuff? EDMX. That's EDM. That's the new Citadel exchange, right? The crypto exchange. So I didn't even look into it yet. They teamed with Fidelity, right? Fidelity Digital Assets just got approved on Friday with FSA, with UK regulators, to lend to Citadel and Virtue's prime broker called Hidden Road, which is owned by TPCAP. If you guys want to look into these guys. I mean, I checked all the... If you check the Edgar, you're on this. That's the prime broker Fidelity's using. TPCAP. No way. BlackRock? No, that's just TCP Capital. It's not them. I don't think. Sorry guys, you can check it out. I had it. Which one was that in?
You're fast.
Sologenic. Hidden Road. Fusion. Gotta remember them. They come up again. I think Anchorage or the A16. Is it on the list? Can you guys look on the A16 list? Is Fusion on there? Where is it? There it is. TPICAP. TPICAP. TP. Okay. Right, so these guys bought Hidden Road. I don't know if there's liquid in it. I don't know if anybody recognizes any of those. But I did find Citadel and Virtue like own both or one, Hidden Road and or this company. London. There you go. You guys seeing this? He was checking out my stuff, but he really needs some help right now if you guys want to check into this. Okay, so you guys got those two links? Okay. Citadel, Coinbase, FTX in July for Hidden Road. Sorry I'm not like talking as much. You guys are just finding this stuff with me. Okay? We're just going to do this together. I'm kind of freaking out right now, so I just wanted to do this with some people. 0.72. I checked them out in my last video, in that earlier video. So, So again, Fidelity Digital just went active on Friday. I want to go back. This custodian thing is really important. More engagement from traditional financial institutions. February 25th. Anchorage, A16. Is that on the list? There we go. What's up with this going to? It's like a big deal, right? Really? Fusion multi-systems, yeah. Yeah, I don't think they've closed up the bad guys yet. Yeah. Custody and staking. I don't understand what the difference is between staking and using customer funds. Isn't that what staking is? On leverage. Or do we have any crypto guys in here? Do you guys know any crypto guys? We're in crypto land now. Oh yeah. EVM stands for the Ethereum Virtual Machine. Okay. That was the one. It's just called Sam a Criminal. Goldman Sachs, Alameda. Goldman Sachs helped out with Twitter. I think Marc Andreessen got involved with the Twitter deal. Right? Like, don't tell me Twitter's I mean, did they just buy Twitter for this? I mean, that's a little much for me right now. Kraken. But there it is, Andreessen Horowitz. He's here, sitting here. I think this was February 3rd, right?
It wasn't even in our minds on the day of the 28th. And so the fact that people made that connection ex post was certainly not a connection that I'd made a priori.
Right. So you weren't sitting there thinking we have to optimize the value of this investment we just made in Melvin Capital.
No.
And then two things that are just something I knew intellectually but didn't realize kind of emotionally or viscerally until I saw it happen, which is you can't, if you are short a stock, you know, if you're a fund and you're short a stock, you cannot, and Ken, correct me if this.
I mean, you got to wonder why he's asking Ken all these questions on the 3rd right now. And why would they stream it? For his clients?
Wrong. You can't close out that short without delivering that stock. Which is to say, like, I can't, if I'm short and I offer you $100 to close out the position, $500 to close out the position, $1,000 to close out the position, $10,000 to close out the position, I can't close out the position without the actual share of stock because basically.
This guy's involved in buying in Twitter, I think, guys. Can you look into this?
Okay, there, you know, there's in theory potentially a limited downside if the stock keeps rising. Is that technically true?
For 99.99% of the situations, of which this was one of that 99.99, you had to buy the actual shares back if you were short and trying to cover your short. So for all intents and purposes, one should view if somebody's short a stock, they're going to have to one day buy those shares back in the marketplace as a regular way trade.
By the way, just out of curiosity, what's the 0.01% exception?
You know, sometimes professionals over the years, I've seen people willing to settle a short for cash in lieu, but that's almost always the context of things like tender offers for a company.
Okay, right.
So if a company's being bought for for cash, let's call it, you know, General Electric's going to buy a company, they're going to pay $24 a share. Once the tender closes, if you were short that stock, since the tender's closed, the company's been bought, you can, under those circumstances, settle your liability for cash.
Yeah, but and what you're describing is a particular kind of bounded situation with presumably minimal risk. In contrast,
yes, the shares are gone, the company's been bought, and how do you wrap up that contractual situation amongst the parties?
But if there's unlimited potential future downside, you can't get a counterparty who won't settle, who will settle you out for anything short of the actual stock.
If one of the challenges that you have as a short seller is your risk is unbounded. That's why when people are constructing portfolios of longs and shorts, their short positions tend to be much smaller than their long positions on a relative basis, because the risk on the short side's unbounded in comparison to the risk on the long side positions.
And then that leads to the second thing, which the GameStop stock price. You know, we're sitting here now, almost a year later, and it's still the market cap of the stock price is still $179 a share, which is, you know, is up 1,000% from a year ago, and the market cap of the company is almost $14 billion. And if you look at the chart, it's not quite, you know, it's not at the all-time high that it got during the truly crazy period, but like it's not that far off. It kind of peaked out at over 300, and it's still at 179. It certainly hasn't fallen back to where it started. You know, the suggestion I think that price might be telling us is there are still funds out there that are short that haven't been able to buy back, and the Reddit horde is still torturing them. Or maybe the company's, by the way, much better, right? Is the other possibility. But like, are you surprised that stock has held up? Because I think a lot of, you know, the commentary at the time was obviously this thing is going back to, you know, near zero.
Well, I think it's an incredibly complicated situation. First of all, the management team of the company did a great job of buying back its own stock, you know, ballpark 2 years ago at much lower prices. The company bet on its own future and bought back a fair number of shares. I think it was in the single dollars per share back, you know, roughly 2 years ago. And that's rough strokes. I'm not a GameStop expert per se, but my memory serves me right. That's what they did about 2 years ago. And then there's been the rise of a significant new investor, the founder of Chewy, and he has an incredible reputation as being an entrepreneur and of really understanding how to connect with the consumer in a profound way in an e-commerce environment. And if somebody's going to figure out how to turn GameStop into a successful e-commerce based platform, he'd be behind the list of people to do it. And that's the question. Can they pivot from a huge footprint of stores around the world with a relatively high cost of distribution to an e-commerce-led company with a broader mandate that's able to engage the consumer in a profoundly different way? And the market price today reflects people's views on that very same question.
Yeah.
The current short position in the stock is actually quite trivial compared to what it was just a year and change ago. Virtually all the short players are long since gone from this name. They've given up trying to understand how to price GameStop with the founder of Chewy at the helm.
Yeah. If you look at, by the way, if you look at the 5-year chart, it looks, pardon the metaphor, it literally looks like a corpse that suddenly came back to life. It's just this flat sag for like 4 years, and then there's this crazy spike, you know, during the Reddit drama, and then there's this kind of choppy, but like fundamentally, as you said, kind of, you know, this kind of new normal, at least for the last like whatever 9 months.
Yeah, the question here is, I play my Xbox.
Yep.
I just got Call of Duty Vantage. I downloaded it. I didn't walk into a store.
Well, I mean, that was the presumption, right? Prior to the Reddit guys figuring out the short situation, right? That was the presumption, right?
That was the presumption. The presumption was the world was going to go to digital downloads so fast that GameStop would not be able to change its cost structure quickly enough to adapt to that brave new world, and they were going to meet the same fate as Blockbuster. And so that's the question: will the management team at GameStop find ways to connect the consumer that are different than what they were doing 3 or 4 years ago, that create value for consumers for which they get paid to do?
Well, the reason I brought this up, the 5-year chart, is it goes to the point you made, but I just want to explore one more level, which is this is a situation, like you can tell a very different story here, and the story basically is they had this, you know, they were in trouble. Then they had this exogenous event caused by, you know, the mechanics of the stock market. And then, to your point, they have seized, in the best case scenario, they've seized on the exogenous event to now construct a better future for themselves.
Oh, no doubt. And
right.
they raised a tremendous amount of capital to create a war chest that gives them the flexibility to pursue a variety of different business strategies.
And so it's like speculation creating reality, like potentially, in a really positive way.
So the markets will judge that in retrospect.
Right.
Were the people that bought GameStop stock from the company over the course of the last year brilliant or not? And we'll find out based upon the success, the failures or success, the merits of where GameStop takes their business.
Okay,
Larry, by the way, that's what makes America's capital markets work. Differences of opinion drive our capital markets. Just remember, a few months ago, Hertz was left for dead in the middle of the pandemic. They were in bankruptcy,
he's right. He's everywhere.
and they went to raise.
Like, how come I didn't see this guy before? Here it is, right here. LayerZero, guys. LayerZero. This is it. LayerZero. We see you. Connect decentralized applications across multiple blockchains. That's their Wormhole. So Solana made a Wormhole. FTX made one of these. It's called Wormhole. This gets crazy though. Wormhole was hacked last year. Where did I put that? I got so many windows. Wasn't it the these guys?
Intrusion, back them up. So all of the basic components.
They're security guys.
Hi, my name is Chris Dixon. This is the A16Z video series. Today I'm here with Nathan and Diogo from Anchorage, a crypto custody company that we're investors in. And so we're going to talk a little bit about how you guys got into custody, what is custody.
Custody.
There's also was recently an announcement that you're involved with the Facebook blockchain project called Libra.
Facebook.
Talk about that.
Dude,
Maybe if you could start with a little bit of your
Did you see that
backgrounds,
look?
how you got into
wait a minute.
Libra, and we're going to talk about that too. Maybe if you could start with a little bit of your backgrounds, how you got into security, your time at Square, and then how that led to Anchorage.
That's
Did you see that look?
Time at Square, and then
Look at, he's laughing.
a Facebook blockchain project called Libra, and we're going to talk about that too. Maybe if you could start with a little bit of your backgrounds, how you got into security, your time at Square.
Sorry, I'm looking into
and
that a little
how
too
led
much.
to Anchorage.
That's a fun story. I think every time we talk about this story, it really is more than Anchorage. It ends up being how Nathan and I actually met. The story there actually goes back 9 years
How'd you
ago.
guys meet? I don't even know how you guys
This thing. And I was working on something that was candidly very useless back then, 12 years ago. 12 years, a credit card reader that I'm sure you've used.
Pretty small still.
Yeah, and so we were just tasked with, the first thing that we did was we actually were part of the team that created the little encrypted credit card reader that I'm sure you've used before. So we actually are on the patent for that, so that's pretty cool. That's a
That
cool thing.
explains MasterCard.
We usually tell people. And so for 4 years, we just worked together on everything. And so we were at the end
And
of it,
Visa?
Square was a lot larger organization, and we were leading the security team. And throughout those 4 years, we worked on everything, candidly. We worked on hardware security modules, the systems that integrate with all the payment card networks, worked on integrations with ACH, with Swift. We work on implementing
February
projects
25th.
around chip and pin, on just general infrastructure, operational security. So anything that touched security in one way or another. We actually set up the original cameras, the safety deposit boxes in the vaults that Square used, and even like the physical security of the office of access control of the actual cards to be accessed.
Security must have been a huge investment at a company like Square.
Yeah, Square, if I remember correctly, there was being bashed in the media when we joined because they were offering out free credit card skimmers. That was the narrative that was
OCC.
being tried to
I remember they were.
So there was a lot of focus on.
I remember when the OCC was tweeting some stuff around some of these subjects. Digital Asset Bank. OCC, huh?
Security and really bringing people that could just heavily develop these platforms and making sure that we were prepared for the future. It was actually Square, the first company that we were part of, that had this narrative of every single security person must also be and meet the bar, if not exceed, of software engineering. And so as security engineers, we're actually building the platform that all the other engineers used for security. And so
Yeah, okay. So they're all security guys.
Square still to this day has that kind of culture.
As opposed to sort of separating the two, having security people watch over.
That's important because Solana got hacked. Jump Trading had to bail it out. They could have been testing systems or its competitor.
The software engineers?
That's right.
But I would imagine they would just be like helping each other out.
Basically,
Or I mean, I don't even know.
what
Sort of a
happens.
deeper integration between the two teams, yeah.
Sometimes what people tend to do is they have a security team, and the security team is somehow isolated from the engineering team. And so what you have is you don't have alignment of incentives, because if you have security engineers, or if you have a security team that is not actually doing engineering, the engineers themselves don't actually respect the security team. And so when they hear a no, you can't do this, then immediately you create a rift in between the cultures of the company. So we had a couple of policies on the team. One of them was get to yes. So we never said no. We always
yeah.
tried to create
If you guys haven't seen my shows, like it's never like this. We're just doing this in real time right now because I feel like I kind of find the boss man. I need help. With this right now. If you guys want to help out, we got to Marc Andreessen and LayerZero in Anchorage, and they're all like, so Anchorage is tied with FTX. Marc's fund and A16 was involved in the funding of Anchorage. So they're exposed to FTX. We know that. We know Citadel is exposed through Sequoia, Andreessen, Horowitz, FTX Ventures, 135 million Series A, and did LayerZero. Omni-chain is big. Omni-chain just went live. 1 billion. It's a little more than 50 million. These companies usually get. Co-led by Sequoia, FTX, Andreessen, Horowitz. It's not even, yeah, so it's the firm. So it's him and the Horowitz guy. From Coinbase, PayPal, Tiger Global, Uniswap, that was in the ledger. LayerZero Labs, 1 billion, March 30th. Accelerate the development of cross-chain decentralization. Zero Labs, Omni-chain. I think this just went live this week. Six days ago. July 20th. Omni X Smart Spot. NFT. Retail users. Game ecosystems. Want to get those gamer retailers. Ethereum virtual machine. This is the first time I've heard of Ethereum virtual machine, even though it sounds like super standard. I guess I just don't know enough about Ethereum yet. Conducted from a single location. Omni X. Come on. Okay. Premium users who seek anonymity. Conduct private sales and make purchases. Secure Findora-powered marketplace integration. Here we go. That's what we want. Let's just copy that whole thing. Confidentiality while making transactions, eh? Yeah, sorry guys, this isn't gonna be like my other videos. We're just doing this. You guys are doing this with me. So thanks for joining me. I didn't want to do this alone. Not this time. Fiat on-ramp, in-app achievement. This is top dollar stuff here. A VR clubhouse. Semi-funkable. Omni Exchange. Daniel Koshman. Yeah, top dollar. It's like Solana, right? Findora, right? We saw that earlier. Polygon, LayerZero. Isn't that Binance? Interesting. Binance threw FTX under. These NFTs, I swear. What's with the NFTs, guys? Mint. Oh, they got a Web3 wallet. Can you come up with like the worst name ever? Who's Greg? I mean, is it going to be this stupid? Yeah. Whoa. Wait, was it? Can't be that stupid. Nah. You never know. Man, they got the stupidest names. Okay, here we go. Phantom, there it is. Ethereum, blockchain, Binance, Avalanche, Arbitrum. These are important. Binance, Phantom. You know, Polygon and Avalanche are pretty big. These ones aren't. Phantom's not big. Phantom's theirs. I think it's theirs. Block and Binance. Anybody want to go for that? Is that a devil? Holy shit, with green eyes. Are those right, so it can go across all the chains, so they got all the different symbols right there. Oh. Oh, really? You know, I want to find Hester Pierce's to the moon. What's Hester Pierce's Rule 195? She did a speech. Crypto mom. Oh no, it was right here on the SEC website. Look, she like totally tips off the industry on how to like bypass the SEC if you read this. It's crazy. But why was I looking at here? She said something. Oh yeah, she had requirements to even use tokens. So if they don't abide by these requirements, she wrote Rule 195, right, to give them a freebie and safe harbor for 3 years, and she wrote up these requirements. But what if they broke the rules on Rule 195? I think she said they had to have their team and identities and everything. Holy shit. Oh, maybe that's just Discord in general. I don't use this much. Dorman. 11:48. 11:45. Looks like they all came in at once, right? As a class. It's either developers, like in a class, or bots. It's all at the same time. Oh, that's me. Malfunkin, that's me. Capital Com for awesome. Mod couple, thank you. You guys, how long you guys been in with us? We are finding some stuff, and I could definitely use some help. We found links with A16Z, Anchorage, and Marc Andreessen, which leads us to LayerZero, Sequoia, and Andreessen, and Citadel funded LayerZero, which just launched Omni. So now they are across all blockchains. When did they go live? I swear. Wait, Twitter maybe. I was banned from Twitter like 2 days after Elon got it, and they never told me why. But this guy's like totally, look at this. On capital.com. Or is it just capital.com? Powered by AI, yeah. Some weird language. Okay there. You okay? Huh. Would I look at too many articles, or is it just gone? Some things are missing. Yeah, you're gonna find tokens everywhere, and that's kind of what this stuff is, right? So you're gonna find it everywhere, like every chain. Preferred equity. That's interesting. Yeah, but are these guys are SEC, right? That does look like a... It is a crypto. Man, this is a messy, messy website. But I think, like I said, what you're gonna find these tokens everywhere. Man, I can't do this website. What a horrible design. They must have a back end somewhere for but we're kind of hitting some big fish here. LayerZero Labs, 135 million from Sequoia, FTX, Andreessen, Horowitz, with Coinbase, PayPal, Tiger Global, Uniswap, and they got some from Citadel as well. There we go, Solana, and Stargate. That was right, Stargate. Here's some names. Facebook AI research. So yeah, so these guys are way more in the social app space. And I feel like this guy was involved with Elon's takeover of Twitter.
Money in the stock market, and the SEC said you can't do it, and offering your bankrupt, right? And now Hertz is this incredible success story. So I think we have to all have some level of humility about our ability to forecast how any given company is going to progress, prosper, or fail.
Well, I think that's one of the great things here is that it turns out retail is very smart.
That's right. We're on to you guys. And OmniChain, I swear, OmniChain, where's their Twitter? September 16th. Sorry guys, I don't have Twitter, so I have to deal with this. Might not work. This might be why they banned me, I don't know. There's your chain link. I didn't see it. I guess it would have been September 16th. That's just what they call it, omni-chain Fidelity is tied with all this, guys. So EDXM is Citadel's new crypto exchange, and they're specifically working with Fidelity. And I just uncovered last Friday that Fidelity got permission to lend tokenized assets to Citadel's prime brokerage in the UK. And then it turns out Anchorage and all these guys are involved with the FTX thing. Look at all these. Look at all that. Coinbase. Okay, let's do a proper. I mean, you guys know a bunch of these cryptos. I'm trying to find things that aren't cryptos in here. Cryptos are given. Here. Share it again. See, there's Anchorage. Apollo? Like as in the... Not the clearinghouse. No. Arc? BuzzFeed. Canopy Labs, isn't that the it's the weed company, right? No, customer analytics. Yeah, so it's AI to, you know, track your shit. I hate those companies. Census. I always wondered who's tracking all of our data from our phones, you know? It's all these people. Citadel. Follow the money. Compound. Yeah, I mean, we're going to see... I looked for Maker in here. That's what I was wondering if there was going to be... But would that be Maker... That would be Maker DAO, right? Lift. What was it? Fulcrum? Right, what was it? Fusion. Fusion Multi-Systems? Utah. California. Cloud computing, big data. There you go. Can't do AI without big data, cloud computing. No wonder they're out in the middle of nowhere. Probably just a big warehouse with fucking computers in it. Fusion Multi-Systems. Okay. GitHub. Is Instanet in here? They seem to have a lot of that. Instagram, Instacart. Twitter. Ooh, here's a good one. No stock twits. How are we all doing out there? Sorry, this video is not going to be like my other ones. None of this is prepared. We're just we're finding stuff in real time. If you guys want to help out on any of this, that'd be really cool. I got us to LayerZero. Here we go. Look, I mean, valued at $1 billion. Investors include Coinbase, PayPal, Tiger Global, Uniswap, Binance, Citadel, Fidelity, Sequoia, Andreessen Horowitz, who's found interviewing Ken Griffin. I swear this was on February 3rd, 2021, right after the Memestock. I swear, wasn't it? I remember finding it on Spotify back in the day. Why don't any of them have a fucking date? Come on. I swear that was on February 3rd. But what the hell is going on with this guy? Gotta go after those gamers, right? Game X consumer. There's that X. X marks the spot. Didn't Elon say something about X? $600 million? Yeah. It's only 600 million. Through A16. Won't show me that one. Omni Creator Products. Private. Privately held. North Carolina. Ooh. They're just around A. Andreessen, Horowitz. Okay, yeah. So we knew that. Andrew Chen. FTX Ventures, Everblue. Okay, kind of boring actually. Let's see. So Robinhood did reach out to Sequoia. FTX had Robinhood. Oh yeah. Wonder. I haven't done this in like a couple years, so let's see. Jump. Whoa. Oh, really? When was that? June 4th? June. Oh yeah. Now you guys are going to find tokens everywhere, on every single chain, on almost every exchange. You're going to find them everywhere. They're everywhere. I'm like, we're finding quadrillions of tokens, guys. Quadrillions. Turnover algorithms records. Ooh, see? Look at this. They're going in for the kill. June 4th. Oh, it's 2012. So you know they're getting kids from the same places if they're in the same little social circles like that. Okay, so that was a long time ago. Right. 2012. It looked like 22 for a second. Yeah. I mean, okay. So that means jump trading is in the AI business. I didn't really know that. Okay. But here's the here's Hester Pierce's speech, right? So she writes the safe harbor. That's me, by the way. Okay. So she writes the safe harbor. Yeah, of course they would say that. That's XRP, by the way. World Economic Forum is Ripple. They're suing the SEC. They don't want the SEC to control them. It's a big, it's like the big crypto lawsuit right now. It's been going on for a long time. So Hester Pierce does this safe harbor on 2.0 on GitHub. You'll see me mention this stuff January 26th, 2022. But then she goes on here, a proposal to fill the gap between regulation and decentralization. 2020. This was April 13th, 2021. Oh, that was the last commit. So she started this on the 13th of April 2021, but she did this on the 2020. Is there a way to, like, Jesus Christ, lady. No. Scrutinize token sales. An investment contract is one type of security under our federal laws. The Howey case dealt with the sale of orange groves. The subsequent case involved the sale of a host of other esoteric assets. Howey case purchased a unit. Like, so she like basically gives them tips on how to avoid the SEC through all this. So if they fuck up, maybe we just gave SEC an in, right? Like, I think she tells them they have to have their name and contact on their websites. So like these guys in LayerZero Labs, right? If they don't abide by this stuff, they break her safe harbor rule. Exemption from the definition exchange, exemption from the definition broker, exemption from the definition dealer. I mean, Jesus, lady. Any token offered and sold in reliance on Rule 195. Of course she would do Springsteen. Oh, yeah. Well, it's good to know. SEC suing them. Well, that makes more sense. Get them. Go. Get him, Gary. Thanks, the one. See, I told you guys. Okay. Yeah, okay. So, where's FinHub? If we go... FinHub. Okay, Wyoming. So something's going on with Wyoming, guys. November 2020. Like, the Wyoming Division of Banking, NAL, on custody of digital assets and qualified custodian. Like, they... What's the representative of Wyoming? No, it's not representative. It's a FTX Wyoming. Loomis. So, what's going on with Loomis and new regulations? Because there's something about Wyoming being a safe haven. Custody rule to digital assets. Qualified custodian. What's with this custody stuff? Yeah, see, this is the non-DVP, non-delivery versus payment custody. So non-delivery, so if it's a non-delivery, custody can stay in one place, right? Because they don't have to deliver it. So non-DVP means the custody doesn't move. So when Fidelity has custody of digital assets, I mean, a lot of these are getting custody access now, but they can put them where they want, like let's say Wyoming, but there's advantages, Wyoming law, there's advantages to putting them where they want, like Wyoming. No action letter on custody of digital assets. And here we go. October 23rd, 2020. Whoa. What? Isn't that public? Two Ocean Trust, Chartered Public Trust Company, Jackson. Of course it's Jackson. I knew it. I lived in Jackson. That's one of those places with like some of the world's richest people, and fucking the working class can't even find a fucking place to live. I'm not, it's bad. Virtual currency, digital token securities. There we go. So, here's a question. The Fed battled him. traditional, alternative, and digital assets. Jackson Hole. Help build a house up there. Some crazy banker guy. I mean, they got a bunch of banker guys up there. Yeah, I want to know about your... Should I? I don't want to dox myself here. I totally just did. Please don't fuck with me. I'm just a guy. Somebody want to figure that out? Somebody want to check that out? Digital assets. Coin trust. Oh, here we go. So they making like a little haven for this stuff? So like, cause I've been seeing, so there's these prime brokers and there's a form you can fill out at the SEC, and it's just like asking the SEC to remove your firm from SEC regulations, cause they're moving into these states. I feel like New York might be another one. No, I mean, it's on the site. Like, these guys definitely started it. This no action custody. Who? Like, who did this? Who's Chris Land? What? Who? That little... What? General counsel? This little shit?
Complicated? Accrue lets you focus on what is really important. Life.
Stock footage.
Invest in premium commercial real estate for as low as $1,000 without hassle and worry.
God, these guys are that trashy, huh? It's in the video.
Accrue, making the exclusive inclusive.
Oh my God. They're that trashy at the Token Summit?
Anthony, what a great session. I'm very excited for this P2P reveal. They've been working on this for quite some time now, and it's led up to this moment today. And with me on stage, I have Jessica Walker from Be In Crypto. How's it going, Jessica?
It's going good. Adam, thank you so much for the invite today. The conference agenda looks amazing. I'm really excited to see what is in store.
And I'm excited for you to take the lead here. Guys, Jessica is wonderful. She's going to be hosting the remaining of the show and guiding us through session by session. And shout out to Being Crypto for being a dedicated media.
Chris Land. Chris Land is the
Look at this
general
guy.
counsel for Senator Cynthia Lummis,
Sorry.
the freshman senator from Wyoming. He is the former general counsel for the Division of Banking of Wyoming.
Loomis is was just in an interview. She's trying to pass a bill. And she took a donation from FTX. She found it. She just randomly found it. And we know that Sam was, in his last interview, he was equally donating to both sides, but for the Republicans, he was doing it in the dark. And then she finds this donation. She said she didn't know how much. Is that the full one? Ooh. Because he's just going to talk about all that gunk. They keep on saying lack of guidance, and that's like, it's almost like they want to push all their loopholes into like legislation. But so who is that kid? Like, seriously. I lost that one. This little guy. General Counsel Policy Advisor? From January 2021? What? Really? January 2021? For the first time. Yeah, no shit. You're like 17, dude. What the This is the request. Chris Land. January 2021. General Counsel. Like, when in January? We can figure that out. Right. Come on. Jeez, I can't. Law, Stanford. Weird. Why can't we find when he was appointed? pronounce that stuff. Odd. So yeah, they're definitely paying attention to this. They can get a lot of business. Whoa. Holy shit. Holy shit, guys. He joined A16. It's Brian Quintens from the CFTC. Right here. Like, so here's them actually rolling back the swaps reporting on July 23rd, 2020, right? So Tarbert was the head. Okay, appointed by Trump, appointed by Trump, appointed by Trump. Okay, we have Benham now. Berkowitz, old school Republican. Berkowitz was with Gary Gensler in the CFTC during the 2008 crash. So Berkowitz helped Gary Gensler write the Dodd-Frank Act, right? And they put in swaps reporting. So here they are. If you guys saw my other video, it might be in the links on the description, but Gary Gensler bank swaps. So in this article, it's a really, really, really good article, 2015. So it was a few years after he wrote the Dodd-Frank Act with Gary Gensler, right? And banks were hiding all this shit overseas, right? Here, let's just read some of this. They got around the derivative rules imposed by the CFTC after the financial crisis, fixed, tweaking contracts, and shifting deals offshore. That's what we're seeing, right? With Hidden Road. Okay, actually, I'm getting some coffee. How are we all doing out there? Holy shit, guys! Brian Quintens joined A16. Holy shit! That's Andreessen. That's the Citadel interview. The guy interviewing Ken Griffin. This guy. Ken Griffin, that was on like February 3rd. He joined like the week before Gary Gensler got in, like a day before Gary Gensler got in, right? You guys remember that? A day before Gary got in, Quintens and Stump over here rolled back. They did a swaps reporting letter, right? We can look that up. We're going to find that after this. We need to we're going to hit that this time. It'll be on the SEC. Okay, I'm going to get some coffee. Just that. That's right. Okay. We're getting somewhere. So he leaves the CFTC to join A16, right? And they're teaming up with Citadel and Sequoia and all of them. And he rolls back swaps reporting, okay? And then joins A16. Tarbert is the head of this, and he's really rolling it back. He's the guy like in charge here. And he's like, I'm not rolling stuff back. This isn't deregulatory. I'm not. And what does he do? He rolls it back, and it's like super heated, I guess.
But yet we have heard critics.
And then he's just like super political, like angry.
Interpretation.
And that's Berkovitz. Berkovitz is awesome. Berkovitz leaves CFTC to help Gary Gensler at the SEC because he's a fucking badass. So if you're watching this, Berk, you rock. Berkovitz is Republican, but he's like old school by the book Republican. He's like, honest, blunt, to the point, badass. The vanishing of the trades was little noted outside the circle of specialists, but the implications were big. It's story time with Mel Funkin. Okay, let's do story time. New York, this spring, traders and analysts worked deep in the global swaps market, began picking up peculiar readings. Hundreds of billions of dollars of trades by U.S. banks had seemingly vanished. Poof, they're gone. We know, like kind of like our failure to delivers, huh? We saw strange things in the data, said Chris Barnes, a former swap trader, now with Claris FT, a London-based data firm. The vanishing of the trades was little noted outside a circle of special. This is going to be a long article. But the implications were big. And missing transactions reflected an effort by some of the largest U.S. banks. Oh, here, you know what we can do? Yeah. I don't know if you guys have checked out my Greek gods, but they're good. Or actually, we got another one here. Violet. Yeah. Why not? So the missing transactions reflected an effort by some of the largest U.S. banks, including Goldman Sachs, J.P. Morgan Chase, Citigroup, Bank of America, Morgan Stanley, to get around new regulations on derivatives enacted in the wake of the financial crisis, say current and former financial regulators. The trades hadn't really disappeared. Instead, major banks had tweaked a few keywords in swaps contracts and shifted some other trades. Thanks to a loophole in swap rules that banks successfully won in 2013. So they fought and they got loopholes. Rate swaps. Let's see. No, I can't do that. It's too much. Representatives of the 5 largest U.S. banks met with the regulator more than 300 times, according to CFTC records. Goldman Sachs attended at least 160 of those meetings. Can you imagine them like 300 fucking times? They were just prodding at him. Consistent rules around the world are better for investors in markets. Goldman Sachs. So like I was saying earlier, like they crash our markets. They were hiding all this shit. They crash our markets. Nobody goes to jail. And then they spend years, 300 times in like 2 years, prodding at CFTC to roll this back. Many of the CFTC employees who were lobbied in these meetings went to work for the banks. between 2010 and 2013, there were 50 CFTC staffers who met with the top 5 U.S. banks 10 or more times. Of those 50 staffers, at least 25 now work for the Big Five or other top swap dealing banks, or for law firms and lobbyists representing these banks. Okay? So, like, you know, Tarbert goes to Citadel. Quintens goes to the A16. I don't know if Stump's still in there. Benham's the head now, and this guy's at SEC, right? So Benham didn't go to the banks, right? Benham didn't go to the banks. He's the head now. Berkowitz didn't go to the banks. He went to SEC to help Gary, okay? Right? The lobbying blitz helped win a ruling from the CFTC that left U.S. banks overseas operating largely outside the jurisdiction of U.S. regulators. After that rule passed, U.S. banks simply shipped more trades overseas. By 2014, U.S. swaps market had been 95% of their trading volume, disappear in less than 2 years. This were some regulators who fear that Washington turn, who will be on hook for another bailout if these too big to fail banks are hit by a fresh shock, right? This is how it happens. This is how they fuck us. And then we fucking bail them out because they're hiding all their shit and they fucking know it. And then this little fuck fucking helped them. This fuck.
Say, on the scope of
Berkowitz was the only one. So Berkowitz helped draft the Dodd-Frank Act with Gary Gensler, this exact clause. And so Berkowitz is in here defending it.
Is essentially as broad, potentially as broad as in the guidance. And I'm pleased about that. And I want to recognize commend the commission today and the majority for actually adopting, in many respects, not in all respects, there's some that doesn't go quite as far, but essentially the full scope of the extraterritorial reach of 2I and our laws is affirmed today. It doesn't apply it as far as the guidance did, and that's the nub of the issue. There is much more deference for the reasons I just mentioned, a belief in other regulators to capture these risks than was taken in the guidance. And we'll discuss some of those specifics and whether the alternatives that are relied on by the majority today are truly adequate.
The majority, it's the three on the right. I don't know what Benham voted on this.
Guaranteed entities that are also registered swap dealers to put them on substantially
Here we go.
same footing as foreign branches for the Group B
Non-U.S. swap
As you will see
entity.
in Table C, the Group B requirements generally apply under the final rule to all swaps except where a non-U.S. swap dealer, that is an other non-U.S. person, enters into a swap with another non-U.S. person or an
You hear that? So they have to be two non-U.S.
end user. Now for the exceptions from the Group C requirements in the final rule. Would you please put up slide 6?
Right there. No. Other U.S. non-persons. So non-U.S. person, non-U.S. person. No. That was their opening right there. That's the opening. That's what they do on July 20th. This you were watching. You're like, this is the meeting where they pass this.
Thank you. This slide shows the application of the Group C requirements taking into
That's
account
all they needed. That's all they needed. Ooh, we got these two. Granteed entity, SRS, non-U.S. persons. No. Oh, they got a bunch of them. I don't even know what those are. Okay, so these are all non-U.S. person up here. U.S. branch, yes. So that's what they do. So they start a prime brokerage in the UK.
Following two exceptions from the Group C requirements in the final rule, and also the exchange traded exception I noted earlier, which applies to the Group C requirements as well as.
So I mean, we could look. What is SRS? SRS. Finance. Security risk solutions. Right? Could be that one. Swaps? When was this? 2020, okay. So we had the Security Exchange Act of 1934, and then after the 2008 crash, we had the Dodd-Frank Act. When did that go? Like 2012, 2013, right? So Gary Gensler and Berkowitz helped write that. And then here you're going to see them in 2020 roll that clause back that Gary Gensler fought for years. Despite tighter rules, the top 5 banks still hold over $200 trillion worth of derivatives. The new order, late 2010. Lawmakers were doing about face. Passed a law barring regulation of derivatives. Barring. 2000. I can't even remember that. Okay, see, that makes sense. They're deregulatory. Regulation derivatives, but times the change. Yeah, because they changed that, right? Dodd-Frank Act required better reporting and record keeping to keep tabs on risk, and it implemented trading rules aimed at minimizing the chance that collapsing bank would bring down the others. Most commonly used swaps were required to be traded on an electronic exchange, open to all buyers and sellers, but much like the stock market today. Again, we're talking about Gary here, because he's a badass. The new rules would make it easier for new competitors to enter the swaps dealing market worth an estimated $40 billion. Worried about another meltdown risk. See, regulators, Gary and Berkowitz, were worried about another meltdown risk and dispersing among more institutions. He tapped Gary Gensler, then 51-year liberals grumbled about Gensler's ramble. See, that's interesting. Liberals didn't like him because he was from Goldman, right? He's from Goldman. Son of a cigarette and pinball machine salesman. Ah, Gary. Youngest banker to ever partake at Goldman Sachs. And he turned out okay, huh? Okay, so among other jobs, he oversaw banks derivatives trading in Asia later. Ooh, but that is... Later, as an undersecretary to Treasury, Gary helped push the 2000 law that had banned regulation. There you go. Okay. But he had insider knowledge at this point. Goldman. He had seen how U.S. banks took advantage of differences in regulations. So he got his experience right. He got the inside scoop. I mean, this is kind of fun. It's a long article. Let's see. Cayman Islands, yeah. Yeah, so this isn't like my other videos, just so you guys know, if you guys are new. We're finding this stuff together. I haven't read this article in maybe a year. I always reference it. So we're just going to go over it again. The Dodd-Frank bill, powerful Republican Congressman Spencer Solomon put forth an amendment that would keep his bank's overseas operations outside the new rules. See? Republican Congressman Baucus. He's not there still, right? Tell me he's not there. Be interesting. Okay, 2015. Import, export. He was appointed by Trump as part of the Export-Import Bank. XM. Didn't make it that far, did you? Okay. That's silly. So he tried to keep overseas operations outside the new rules. Alarmed, the Democrats co-sponsored of the bill, Rep. Barney Frank, asked Gensler to craft a counter-proposal. Gary and his staff tucked a 17-word insert. Here it is. In Gary, Gensler and his staff, Berkowitz, right? A 17-word insert into the 228-page amendment to the Dodd-Frank bill. This addition seemed to assure banks that the new derivatives rule wouldn't apply to their overseas trading operations. Sneaky, I love it. Backus backed off, but the insert was craftily worded to leave wiggle room. If those activities have a direct and significant connection with activities in or effects on commerce on the United States, then those rules would apply, is read. So that's exactly what Berkowitz says in this meeting. And I want to say it's closer to like 2 hours.
The United States. Is that
there he is.
The definition. Questions which we're discussing here today. This is
Oh, God, this is so great. You guys want to hear this? Like, so now we're going to try to hear Berkowitz defending this clause that was passed in the Dodd-Frank bill with Gensler, right? After they saw Backus try to let banks get away with these overseas things, right? So now we're going to hear Berkowitz say exactly the same thing here. They have a direct and significant connection with activities in or effect on commerce of the United States, because maybe we'll get it from him. I'll sum it up real quick, but basically you got a firm here, you start a branch there, you throw all this risk there, and it comes back to bite you here, right? We saw that with Archegos. Like, you can try to hide it overseas, but it's just going to come back to the United States and it's going to fuck us. So that's the whole concept here.
Prior iterations of cross-border considerations. And so I'm not suggesting that those who were in... I have several other...
And these get pretty heated.
Fill in the record
at the beginning, anyway.
On a few comments that have been made previously, provide more context. The first, I'm sorry to have to return to this topic again, but I believe the comment was made, I think, Mr. Chairman, and I don't mean to be too picky about words, but I think that you referred to the guidance as being, quote, outside the APA. And that is exactly what partially the litigation was about, but somehow this guidance was not in accordance with the APA. But one of the holdings of the court in SIFMA v. CFTC, and it's a fundamental principle of administrative law, that an agency has the flexibility to proceed by rulemaking or adjudication. We can issue policy statements, we can issue interpretive guidance. The challenge to the guidance was we didn't follow the APA when they issued the guidance, when we issued the guidance. And let me just read from SIFMA versus CFTC. In the absence of any congressional indication to the contrary, the court concludes that Section 2I operates independently without the need for implementing regulations, and the CFTC is well within its discretion to proceed by case by case adjudications rather than rulemaking. So that's exactly what the guidance indicated we would do. We would do case by case adjudications. And in that context, in the context of administrative law, adjudication doesn't necessarily mean formal on the record adjudication. It can be an informal adjudication, and informal adjudication can be, just somebody calling up and asking the agency a question even. So that's a flexible term, but I just want to emphasize once again that the guidance was fully in accordance with the Administrative Procedure Act. At the time, in 2013, we were rushing, the agency was rushing to implement the congressional mandate to do all the Dodd-Frank rules within 1 year. And this was 2.5 years later. At the time, many of these thorny questions, which we're discussing here today, this is 10 years after the passage of the Act. We're discussing and debating exactly how far to extend our cross-border jurisdiction, what factors should we consider in putting somebody in, and how you balance international comity and how much risk. Back then, it was even more uncertain. It was a new regime, the CFTC was struggling with how to apply this overseas, and frankly, we're still in the very
So he's talking about this. Look, 1 year later, one of Gensler's legal aides declared that the passage, in fact, gave the regulator worldwide reach. Okay, so they didn't even tell the banks till a year later. They snuck this in, and banks were fucking pissed. They were so pissed because Gary's a fucking badass. I'm fucking telling you. And hear this guy. Love it.
In the recession caused by the financial crisis, and there was an urgent need. Congress gave the agency 1 year to put many of these rules into effect to proceed expeditiously. And on a cross-border context, the agency chose to proceed in a manner to provide flexibility and that would not definitively state out positions in an area where the CFTC hadn't regulated before. I know there's a great clamor now for clarity and certainty. We have to define everything. We have to get it absolutely clear right here. The agency can't. I mean, the industry can't stand all the uncertainty and the vague terms and the circumstances, the factors and circumstances, tests and considerations. But frankly, we just did a rulemaking. We've just proposed a rule where we took exactly the opposite approach. Let's take the Reg AT issue. In Reg AT, the agency did exactly that. Actually, it didn't do exactly that. It did more of that. There was more certainty and clarity. You have to have this, you have to have that. Although it did give flexibility in how you're implementing. And then the cry was, we need flexibility. We can't have all this prescriptivity. So when we're prescriptive, they say we want flexibility. When we get flexibility, they say we want prescriptivity. So to me, the terms of clarity and certainty, they don't necessarily add a whole lot to the debate because.
See, he gets it. Like they're just saying we need clarity, but what they're saying is we want to insert all this bullshit into regulations.
So whatever side doesn't like whatever approach is in effect at the current moment. If it's prescriptive and they don't like the prescriptivity, they say we.
Yeah, it's like there is clarity. We have 100 years worth of regulatory laws, right, based on contracts of negotiation because people got fucked. And then crypto world comes and goes, we want clarity. It's like, dude, we got 100 years of clarity, okay? Read the fucking rules. We got them. Abide. And they don't like that.
We want flexibility. If it's flexible, but they might not like the outcome under the flexibility. They say we want certainty that flexible outcome indeed won't occur. So it really gets down in the end, not just to providing clarity in regards to the substance. So we'll have a good substantive debate here today. The other thing I want to mention is the harmonization with the SEC issue. The fact is that if my dates are approximately correct, in August 6th, actually a week from, or 2 weeks from now, let me just read you the timeline on the SEC's website. April 6, 2020, effective date for cross-border security-based swap rule amendment. August 6, 2021. August 6, 2021, counting date for thresholds and SPS entity definitions.
Did you guys catch that? What did he say?
Issue. The fact is that if my dates are approximately correct,
you say right before that.
And they don't like the prescriptivity, they say we want flexibility. If it's flexible, but they don't like the outcome under the flexibility, they say we want certainty that flexible outcome indeed won't occur. So it really gets down in the end, not just to providing clarity in regards to the substance. So we'll have a good substantive debate here today. The other thing I want to mention is the harmonization with the SEC issue. The fact is that if my dates are approximately correct, in August 6th, actually a week from, or 2 weeks from now, let me just read you the timeline on the SEC's website. April 6, 2020, effective date for cross-border security-based swap rule amendment. August 6, 2021. August 6.
See, it's hot. All the banks are in on it. and they're going to give them everything they want. And Berkowitz knows this. He's calling them out.
2021, counting date for thresholds and SDS entity definitions. October 6, 2021, compliance dates for certain rules applicable to SDS entities. Now, I understand the SEC has a lot on their plate, and they have, a lot of priorities. And frankly, security-based swap dealers, I think the percentages of swaps versus security-based swaps, I think, based on perhaps notional amount, it's a rough estimate. It's something like we have 95%, they have 5%. It's not to diminish the percent or the task that they have. But the fact is, again, we move quickly. The CFTC, Mr. Chairman, you talk about being a global leader. We were the global leader. We moved out first in the world and in the United States on the CFTC regulations and implemented.
See what I mean? They're kind of heated about all this.
The Dodd-Frank Act that we're celebrating the 10-year anniversary of proudly. I think we're all proud of what we've done in those 10 years. And the agency in the world, we were the world leader and moved out to protect the U.S. markets and the U.S. economy. And
so he's defending the Dodd-Frank Act, and he's defending the integrity of the CFTC right here.
Other folks, it might not have been totally harmonized with the SEC, but the SEC was years behind us. The SEC was years behind us in the implementation of this. And frankly, much of the world was years behind too.
And so he's talking about, Gary Gensler was head of the SEC during this time that he's talking about.
No, I remember, and there was an outcry at the time. How dare the United States come into our territory and tell us what to do in our markets, et cetera, et cetera. And it was disruptive. But the fact is that we were first out of the box, and it was always intended, and it has worked out that way, that as other jurisdictions come online, we would grant substitutive compliance and we would defer. And we've done that, and we're doing it today. Okay, we're going to do it right after this. And I'm going to support that just like I've supported all of it before. It's not like we're running roughshod over the world and everything applies all the time. We have a balance right now. And the balance has been working, and other jurisdictions have come online. And Mr. Chairman, we're very close to another difficult negotiation completing, and you're involved in that and showing excellent leadership on that, on another international issue regarding regulation of certain entities, and hopefully that will turn out well. And so it's a difficult process, back and forth, and feathers get ruffled and whatever, and we work it out over time. But part of this was that we were first out. Now, we've gained experience over those 10 years, and so I'm not saying we need to continue guidance. I'm fine with codifying some of these now that we've got a lot of experience under our belt. But the question is, what are we going to codify? Codification for codification's sake, clarity for clarity's sake, or a rule versus a guidance just for its own sake isn't the question. The question is, what are we codifying, and whether there's going to be certain objective tests that are going to include or exclude certain activity from our regulatory sphere based on other criteria. So I'm going to go into exactly that issue in my questions right now. But first, I want to just confirm. I'm going to read again. I'm going to read from the release for the benefit of the folks that might not have it, and I'm going to ask about guarantees and conduits affiliates. So I just want to confirm what the Commission is confirming here in the document. In this sense, we're talking about financial groups, global financial entities. A global financial enterprise effectively operates as a single business with a highly integrated network of business lines and services conducted through various branches or effective legal entities that are under the control of the parent entity. Branches and affiliates in the global financial enterprise are highly interdependent, with separate entities in the group from financial or credit support to each other, such as in the form of a guarantee or the ability to transfer risk through inter-affiliate trades or other offsetting transactions. Even in the absence of an explicit arrangement or guarantee, a parent entity may, for reputational or other reasons, choose to assume the risks incurred by its affiliates, branches, or offices located overseas. Swaps are...
See? So he's breaking it down. Like all that risk comes back to the parent companies. So So Virtue and Citadel get private road in the UK. Fidelity gets approval on Friday. That was what, T3 ago? So Fidelity just got approval on Friday. And it's on that company's, on the actual company's books. They're doing business with Fidelity. So I'm not even like saying, oh, they could be doing business. They are doing business with each other. That was either with it's either on these guys or their parent company that Virtue and Citadel own. Let's try the other one. Was it TP? I pulled up all these papers in one of my other videos. Here we go. Combines our expertise in market infrastructure with Fidelity's track record as a custodian, right? So you buy stocks with Fidelity and their custodian, they convert it to tokens. That converts it to an ISDA contract, and they're a custodian of those tokenized assets, pending FCA approval. So this was written before they got FCA approval. So FCA approval. This is weird. $10.28. Fidelity Crypto, right? Because it's Fidelity Digital. Why can't I find this? It was just Friday. Here we go. December 7th. Fidelity Digital Assets receives FCA approval for UK business. That was on December 7th, y'all. Well, these guys posted, it was actually Friday. This article's from yesterday. Why can't I find the original article? That's weird. Fidelity announced today. That was yesterday. This must be a copy-paste job. Firms were originally supposed to meet January 10th. They extended it. We have applied to be registered to continue trading. As he is advising customers of crypto. Before 10. Wait a minute, what? From this date, existing crypto asset firms operating immediately before January 10 have had to comply with, right? So they had to comply with money laundering regulations. Such firms were required to be registered with FCA by 10th. New businesses who began offering after January 10th, 2020, before conducting business. That's a lot. Why is that so confusing to read? Anybody, any wrinkle brains want to figure that double negative? I haven't slept tonight. We're pulling one. Still being assessed. Pending their application. Okay. So they kind of put things on a hold. Looks like they got spooked. Yeah. So existing businesses before 10 had to compliant with the money laundering terrorist financing. But what does that mean for firms after the 10th? Right? Is that just weird language or what? This is the UK's regulator. It's FCA is like their SEC. But why, since 10 January 20, existing businesses carrying on crypto asset activity in the UK have needed to be compliant? As amended and need to be registered with the FCA. Temporary registration regime. What does that mean? Regime. I guess a group of them to allow existing crypto assets who applied to be registered with the FCA to continue trading. So if they're grandfathered, right? That's what that means. Just say grandfathered, guys. FCA is advising customers of crypto assets should have applied to FCA but have not done so to withdraw their crypto assets or money before. Okay, so there were people trading that didn't get approval yet, and the FCC is saying, withdraw your money before the 10th. And if you did get approval before the 10th, you're grandfathered in. And it's because they have this anti-money laundering, counter-terrorist financial requirements. Full registration. So Fidelity got that on Friday, even though this article is saying it was yesterday. I think it's a copy-paste job article. Kraken, 2 Gemini entities. So Kraken's important. That's in the let's take a look at that. I keep going to that Goldman Sachs report. That's actually got a lot of good information in it.
Also traded by an entity in one jurisdiction, but booked and risk managed by affiliate in another jurisdiction. The final rule recognizes that these and similar arrangements, okay, among whatever those are, among global financial enterprises create channels through which swap-related risk can have a direct and significant connection with activities in or effect on commerce of the United States. So, just confirming It's not just the formal.
Okay, so it's 5x on Kraken. That's not the worst. That's still, I think, huge. They're in the US. So they're going to the UK. They just got approval from the SCA. Now, like, you're hearing this guy, right? Berkowitz's like, this risk comes all back to your parent companies and your sister companies back to the States. It's going to bite us in the ass. We're going to have to bail all these fuckers out.
Guarantees that are defined in the final rule between a non-U.S. affiliate and the U.S. parent, but all sorts of other relationships between that affiliate and the U.S. parent can effectively bring the risk of the swap activities of that affiliate back into the United States.
So we found that link. From Fidelity right here. Fidelity? You guys, if you guys are with Fidelity, man, I DRust. I don't trust brokers. Fidelity we know they can tokenize our assets. We know they can custodian it. They just got FCA approval. They're with Hidden Road here. This is with TP. We'll do it right here. Let's do Citadel. Money market funds? Are you shitting me? Jane Street. So Sam Bankman-Fried and Brett Harrison met at Jane Street. Jane Street was a big customer for jump trading and FTX. And of course, Virtue and Doug. Over-the-counter marketplace for spot crypto asset trading, including Bitcoin, Ethereum. Post-trade infrastructure. Straight-through processing. Never heard of that one. Or maybe I have. Network of digital asset custodians, such as Fidelity, right there. So there you go. So everything he's talking about here, it's going to come back, it's going to bite us.
Is that correct?
Mr. Commissioner, this is Director Josh Sterling. Thank you for your question, sir. That is indeed a correct recitation.
Right there. Look at that. Hidden Road closes 50 million funding round for like Citadel, FTX. I haven't heard some of these other names. Coinbase. It's hot. It's active as of Friday. Hidden Road, TP, ICAP. Let's do that. Right? Am I missing any links? Because I did these links on my own, right? So let's just do it here. There is a connection here. Was it in? See, they got their onshore and their offshore. And where did they move? Delaware. Cayman Islands. Of course. Oh, come on. never know which one to put anymore. Oh, it's the old page. Man, I'm having a hard time right now. Okay, fuck it. Why do I feel like I saw more here? Cayman. Oh yeah, let's do Hidden Road FINRA. Yeah, did you guys see that one? Jesus. But it should be easier than that, right? TP ICAP. Yeah, so basically, and I explained this last time, so Hidden Road, they let Fidelity hold custodian, and then they let their customers deal with cash. So Citadel and Virtue and those guys are their customers, and they send them cash. So because Citadel and they're not allowed to play with crypto, right? So Fidelity holds the custodian, just like Wyoming would be a custodian, right, for stuff. And so it doesn't have to move, right? We're seeing all of our tokens in all these places that they don't have to move. Once they got on FTX, they didn't have to move them. They just keep custody of them. And after that, they move cash. And that's what Hidden Roads does. So Hidden Roads takes cash, and they give Citadel and Virtue a website, and they can make all the trades that they weren't legally allowed to do, because they're saying that they're doing it with cash and not the crypto, even though these guys are trading the crypto for them. Citadel and Virtue trade cash. So it's like a super sneaky workaround, right? Terminated. That's right. Terminated because they terminated their registration status with the SEC because they don't want to be regulated by the SEC. So you can actually find that on the Edgar. I thought. Apart from the initial company registration. What about the
of the language, and we do talk about the transfer of risk, and I would add as a corollary to that, that also
These guys are
applies
big.
necessarily the transfer of return. But yes, these are indeed sort of global markets.
And we've talked about conduit affiliates, and one of the criteria for conduit affiliates is back-to-back swaps. And could you just explain that concept of a back-to-back swap?
So I wonder if this is the delivery to delivery. Would that be the same back-to-back? I guess he's about to explain it.
Between an affiliate and a parent, and why that might be done.
Oh, sure, Mr. Commissioner. Happy to do that. Director Sterling again. Sure. It's
Sure.
like, well, this is over. I don't mean to oversimplify, but it's not unlike the transitive property in math. So I enter into a trade as an affiliate with a customer, and then I, as the affiliate, may enter into an offsetting trade or a trade to transfer to another of my own affiliates. And that could be done for a variety of purposes, for internal risk management. There could be other financial planning or business planning reasons for doing it. There are myriad reasons within the business judgment of companies to do back-to-back transactions, sir.
Okay, but when there is a back-to-back, the risk ultimately would be borne by the U.S. parent. Is that correct?
Well, sir, again, Director Sterling, I think that is true if we're talking about a pure one-to-one transfer of all risks, yes.
Long-term fixed rate.
Okay, so would a parent, we've talked about guarantees, and it is correct that, or I just want to confirm that the guidance had a broader definition of guarantee, flexible definition of guarantee. And I'll just read again. The commission this is from the guidance, would interpret the term guarantee, generally to include not only traditional guarantees of payment or performance of the related swaps, but also other formal arrangements that, in view of all the facts and circumstances, support the non-U.S. person's ability to pay or perform its swap obligations with respect to its swaps. The commission believes that it's necessary to interpret the term guarantee to include the different financial arrangements and structures that transfer risk directly back to the United States, disregarded as the substance rather than the form of the arrangement. So would a U.S. parent, do you think U.S. parents are aware or knowledgeable of activities of their overseas affiliate that effectively put the parent on the hook for the affiliate transactions? If the CEO of the bank calls in the general counsel and the CFO say, okay, we're doing these swap activities of our affiliate, are we in the U.S. on the hook for those? Can the CFO and the general counsel answer that question of the CEO of the major international bank as to whether the home office is responsible for the affiliate, for paying the affiliates, backing up the affiliate?
Yes, Mr. Commissioner, happy to answer that question, and thank you for it. I would just like to note, as an initial observation, in terms of the definition of guarantee, I think is proposed and final. It's consistent with the guarantee definition in our cross-border margin rule. I just note that for the benefit of the public, sir. To your point, sir, I don't know, and I can only postulate as to what the CEO, general counsel, or CFO of a particular financial institution might know at any given time about anything, including what's on the lunch menu. But to your point, I get it, sir, that is there indeed a transfer of risk, in particular, in connection with particular trades. What I can tell you is that I have, from my experience, a degree of confidence that our rules exist and operate in such a manner that risks that are material to a banking organization that includes a swap dealer would be knowable. We have a requirement for a risk management program, that's for sure, and if everything is rolling up into a Fed supervised or banking supervised financial services organization, there are supervisory requirements and on-site supervisors in many cases that would also be aware of that. And then there are many financial reporting, tax, and other reasons why one would be able to appreciate the size of trades, where the risks lie, and in what manner the risks apply. And I think a corollary to that is sort of a strong understanding of where the risks stop in, for example, the context of bankruptcy and remoteness. So I guess the answer is I think the tools exist to understand and evaluate risk, financial services, in many respects, the business of risk. So I do think, to sum it up, yes.
Yeah.
All right. A forward starting swap, an interest rate swap in which the swap terms are set at the outset, but the start of the cash flow accruals and exchanges is delayed until some future day, right? So it's like a future, right? Hedge position, yeah. So it's, okay, yeah, it's like a hedge. Deferred or delayed, so that would mean risk, right? Like a delayed, the future specified in the swap agreement. Okay, so if they're using something like Ledger X with like perpetual swaps. I mean, they could do like a year contract or 3. Seems to see a 3-year pattern in a lot of this shit. Liabilities from 2 different financial instruments. A forward swap delays the start date of the obligations agreed to which. So that's interesting. So the start date is delayed. Like, we're going to go into this agreement, but like next week, whatever, wherever the chips fall, right? Okay. That makes it so it's a forward swap. That's why it's a forward swap. Can theoretically include multiple swaps, like a basket. So you can stagger the start dates of multiple agreements. Wants to hedge for a 5-year duration. I mean, look at the, come on. Beginning 1 year from today. I mean, they can just stick this shit out there and just let it sit. It can just be dormant with forward swaps. And that's what we're seeing. There's no, you know, even with custodians, they're not moving it. They may not even be activating it. They could tokenize everything. They could have tokenized everything last Friday. And they can just sit on it. Hedge their borrowing. Removes the need to pay for the transaction today. Oh my God.
Okay, yeah. So to me, just another predicate here that the final rule that defines guarantee is basically a written document that formal written guarantee that provides recourse to the U.S. parent. Correct.
So this is logical.
Yep.
You know, in the definition, it's an arrangement pursuant to which one party has rights of recourse against the guarantor, and it's a conditional or unconditional legally enforceable right to receive or collect payments from the guarantor. But we also note that the terms of the guarantee need not be included within the swap documentation or reduced to writing, provided that under the laws of the relevant jurisdiction, the swap counterparty has a conditional or unconditional legally enforceable right. In all part to receive payment.
Thank you. But the reality is that the language that I read from the preamble states that there are arrangements. There are similar arrangements or risks that the parent may assume the risk, and there may be other arrangements whereby the parent is liable for the risks of the affiliate, even without that specific document that you mentioned.
Okay, so look, so this is far out to me. So there was this attack on Wormhole, the Solana Wormhole, in February between Solana and Ethereum. So Wormhole was a bridge between Solana and Ethereum, right? So they minted our tokens on Solana or Ethereum, right? We saw that ledger. What's weird is we're seeing the ledger for Ethereum. They tokenized AMC and GameStop on the 26th. But I know that the FTX website and everything was based on Solana. So somehow they had our tokens in Ethereum and Solana, but before they had this Wormhole, right? But the wrap tokens are what go across these bridges. But they had the wrap tokens before they even had Wormhole, right? So they built Wormhole for these products that they had in two places. Jump Crypto, there it is. See, so Jump Crypto had to bail Wormhole out after this attack. But this kind of gave me a red flag because Andreessen's company, the A16 guys, are all security guys, right? They're all security guys. Like, you know, Solana's right in here. There's Solana. So, I mean, they could have been like, that could be hacking their, it could be laundry. Maybe they owed them money. Maybe they didn't know. But Jump Crypto bailed it out. Oh, so they go to LayerZero. Isn't that funny? So they get hacked, and so they go to LayerZero for help. Funny how that works. Think of it as a decentralized form of Swift. I mean, come on, red flag. They want to take over. This is Citadel. I mean, so this is their bridge, LayerZero and Stargate. So it's interesting how their competitor had to come to them for help. That was April 5th. Omni Layers, Stargate, 1 month ago.
What you know about layer 1 DeFi, greatest in the world, and they finally about to see why. What you know about XRD, I'm smart money, y'all ain't never on a decline. What you know about NFTs, it's not just Ace, where you finally gonna realize.
Yeah, that guy comes up a lot, Pellegrino. Co-founder, CEO of LayerZero.
We realize that value transfer is just a special case of a generic message. And so, you know, our background way back at this point, you know, 17, 18 years ago was
He's way up there.
testing and performance, very early stages of like internet technology. And we're just thinking about the primitives of the internet. A lot of this new systems, but a lot of these things have been solved before. You look at the primitive of a packet on the internet. It's very simple. You're just taking a small piece of data and like passing it between computers. But then what you can do with that simple thing is like near limitless, right? Now we're talking now over this, and you have Netflix and everything else that has happened, right? So LayerZero is really that's all it is. It's this core primitive that is just passing data between two smart contracts. So it's coordination between contracts, general messaging.
Yeah. And why does that matter in today's world? And like why have you guys why are you doing something that is better than what you're currently seeing as the way of essentially moving assets between chains?
Yeah, sure. So why does it matter is really interesting. Like it depends on what you think the shape of the world will be. And I think if you look at even the most sort of like staunch and ardent defenders of their ecosystem. So let's take like Vitalik and like Anatoly, right?
And like the stock market.
Both of those strongly believe that they will not be the only chains that exist, right? And so there's these worlds where there's lots of different layer ones with like strong kind of orthogonal trade-offs. So you can imagine a world where maybe you're using Arweave for storage and Solana for computation and Ethereum for you know whatever, right? You're using sort of leveraging each of these. There's another world where like Ethereum is a settlement layer and there's 1,000 layer 2s, and so there's all these different like outcomes of what that might look like. But in all of these cases, like in a world where somehow it's just Ethereum as a settlement layer and a ton of layer 2s, like you still need horizontal composability between these layer 2s. A great example of this is Arbitrum. Arbitrum is just splitting into Nitro and...
So let me just break that down a little bit, because I think there's a couple of concepts that we've introduced simultaneously. So there's the LayerZero relay network, which is a LayerZero construct. It's part of the actual protocol itself, and anyone can come along and they can run a LayerZero node. And the LayerZero node's responsibility is to relay messages between two target blockchains that are integrated. And what you're saying is to make this scalable. What I think you're saying is to make this scalable, what you need to do is you need to select subsections. So for this message, it's going to go to this subsection of nodes that have said that they're available to you. And then that message is then relayed by those relayers to the other blockchain. However, the thing that LayerZero has done has gone, well, instead of going down the route of going, how do we make sure that these relayers are as secure as possible and put a consensus system in there and put tokens in there and put incentives in there, like in the form that, you know, REN would be, or the other bridges that sort of are common. Any.
See, he mentioned REN. That's the one that we saw on the ledger go to Dogecoin. They pumped Dogecoin on end of January. Why is it different than wrapped assets?
Isn't that just sort of a wrapped token of a different description, that you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So I stake Sol on one.
What?
ETH on Ethereum, send out a message and borrow against that collateral position. And I think that is like a far cleaner.
Isn't that just sort of a wrapped token of a different description, that you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So I stake Sol on one. Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap, you're taking some risk of the underlying Uniswap code.
And we saw a bunch of Uniswap on the ledger on these tokens the day of issuance.
Right. But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there.
Are you guys hearing this? Are you guys fucking hearing this?
Risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's risk on the underlying.
Holy fuck, guys. That was it.
And in perpetuity, as long.
In perpetuity, Ledger X. Oh my god. Let's roll up into this. This is it.
Some asset there to have a pricing and a DEX. Maybe you want to trade against the price of Solana on Phantom. So then maybe you either need to have a derivative, you can have a perp, so you don't actually need to have underlying inventory. But for the large majority.
Let's go further. Holy shit. This is how does liquidity emerge? Okay.
So where's the token contract then? Is it the token contract on every single ledger? Right, okay, fine.
Yep.
So, but you're talking about inventory here, which means that Stargate and obviously that makes sense, right? If I've got USDC on Ethereum and I want USDC on Avalanche, if you're not actually wrapping it, then there has to be, if you're putting USDC in on the Ethereum side, there has to be some pool in which you're pulling USDC out on the Avalanche side. So how does that liquidity emerge, and how do you basically pay the people who are providing liquidity enough to be interested in doing it in the first place?
Yep.
So how do we pay market makers?
Stargate, exactly right. Pools of liquidity on every single chain. You need to incentivize those pools. So one of the big thoughts of Stargate early on was that renting liquidity in perpetuity sucks. So the goal has always been grow protocol and liquidity as much as possible. So Stargate has about $150 million of protocol and liquidity. So it has like a lot of its own liquidity. And then it rents the rest. And over time, through fees, through everything else, it's growing the protocol and liquidity such that it needs to rent less and less, and it gets to own and maintain more and more of the fees that are being generated on it. But right now, people are basically being paid in Stargate token, or rewarded in Stargate token for providing LP of USDC, of ETH, of USDT, of all of these stables across these
And that's called staking.
chains. And then the users on top are paying 6 bips on every transaction that go to these people who are providing LP. And so that is sort of where the pool TVL comes from.
And that's retail. So retail pays transaction fees.
Right now, yeah.
Okay. So until people start the process of issuing tokens where the supply can be managed cross-chain, where you can simultaneously burn on one chain and mint on another, which you can with the Stargate token, but no one has yet sort of like pushed that out on.
So nobody's doing that.
Stablecoin. You will always need to incentivize pool liquidity, and for things that are finite supply by design, so things like Bitcoin or something like that, you're always going to be doing that. There's no other way around that. Is that right?
Yep. Yeah, for all native gas tokens, right? There's no contract thing that can like mint you ETH on another chain. So all gas tokens will always be wrapped assets. Like it just has to be that way, but everything else doesn't need to be. And actually, there's some hope for me that, like, okay, I don't think there's a word like I don't think it makes that much sense to have like wrapped Solana on Phantom. Like, do we really need to have wrapped Solana on Phantom? Do we really need to care? Like, what people want is to have exposure to the assets on Phantom, have exposure to credit there without losing underlying exposure to their SOL in that case. And so there's a world where lending protocols, and again, this is definitely happening, but there's a world where you can simply, let's say every chain has a pool of USDC, some stable, let's say USDC, and native gas assets. You have ETH and USDC, Phantom and USDC, SOL and USDC, etc. And you can simply, through messaging, collateralize on chain A and borrow against that, take a credit position against it on chain B.
So you guys realize we're watching this because they tokenized our stock, right? So once they tokenize it, they can do all of this stuff. Once Fidelity tokenizes your stock, they can keep it on chain A and do all this stuff on chain C.
You stake your SOL on Solana, and then you take credit against it on Phantom. You do whatever you want in the Phantom ecosystem. You repay, it comes back, your collateral's unlocked. Like, why do we need to bring SOL to Phantom and Phantom to ABAC?
So that's what I was talking about with this custody stuff. So once they custody these tokenized assets, they don't need to move them.
Right? It makes no sense for the majority. There are some corner cases where you might want to have some asset there to have a pricing and a DEX. Maybe you want to trade against the price of Solana on Phantom. So then maybe you either need to have a derivative, you can have a perp, so you don't actually need to have underlying inventory.
See, and you don't need to actually have the underlying. That's why they did the perp swaps. That's why they bought Ledger X. Okay.
But for the large majority, like, we don't need to have WETH on all of these chains. We could have people just collateralize ETH on Ethereum, send out a message, and borrow against that collateral position.
Did you hear that? Did you hear that? So they tokenize our assets on Ethereum, and it just sits there, and it's collateral. And they can do whatever they want. So Fidelity just got approval on Friday. Okay. Because they're holding your shares in Street Name. Okay.
I think that is like a far cleaner.
Isn't that just sort of a wrapped token of a different description that you're essentially issuing an
This is where it gets
IOU
crazy.
on a different ledger, which is kind of what a wrapped token is, right? So I stake SOL on one. Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap, you're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B.
Okay. Did you guys just fucking hear that? So we got the blockchain. They did it all on the 26th, and then they can just do synthetics like anywhere on, like all these cross chains. They link to 17 different chains. They can do synthetics on all of them. That's why you guys are going to find tokens everywhere. You guys are finding tokens everywhere right now, right? You're sending me links of like tokens. Look, they're finding tokens here. We're finding tokens there. Yeah, you're going to find synthetics. We're going to find quadrillions of them everywhere on every fucking chain. Well, they hold it in one place, right? Like Fidelity is going to custody your guys' shares, and then they could just like that's so. Fidelity got approval Friday. What's happened since Friday, guys?
And in perpetuity, as long as that IOU exists, the asset over there now carries risk.
Okay, in perpetuity, as long as that item exists. So not only do they have LedgerX, so Tarbert at CFTC approved LedgerX, right? Before joining Citadel, right? So this guy approved LedgerX before joining Citadel. FTX buys LedgerX, and there's the only perpetual swaps allowed in the States. So when FTX crashed, they salvaged LedgerX. It's up for sale, and we think Paradigm and Sequoia and Citadel are up to buy it, and it can exist in all perpetuity forever. And this is, wait till this line.
And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
Did you fucking hear that? Did you fucking hear that?
Transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's
Guys, I've been right this whole fucking time.
risk on the underlying.
Guys, that was it. Got him. We got him. We got him. This is, that's LayerZero. That's owned by Citadel. We got him.
Contract that is hacked and drained. Now your IOU is worth nothing. There's risk at the validation layer. There's all.
Yeah, guess what? FTX just crashed. That IOU is worth nothing.
All of these different layers of.
What happened? What happened to our securities since FTX crashed? We should listen to this more. I could listen to this over and over and over again right now. I've been obsessed with this for over a year. I was right this whole fucking time, and this guy's fucking spilling it.
Worth it. You use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's
Boom. Motherfuckers. Here you guys go. Share this shit. Who is he? That's LayerZero. We got him. We got him. Omni chain. Boom, motherfuckers. Sequoia, FTX, A16. We got him. Bitcoin, Ethereum, Solana, Avalanche, FTX, Sequoia, Andreessen, Horowitz. We got you, motherfuckers. Cheers, apes. gonna have coffee. You guys want a coffee? This feels so good right now. I'm just gonna soak this in. Okay, here's one. Let's do a poll. Okay, let's see. What do we want to do? To the moon? Or Diamond Hands Club? I'm gonna make a coffee. Fresh coffee. Yeah. I love you guys. Oh my gosh. Woo! Did it. Whew. I fucking love you guys. I fucking love you. What do we got? What do we want? Oh, come on. I can't read that. It's the second one? Which one was that? That's Diamond Hands? Let's do it. I love you guys. Cheers, apes. Amazing. That is amazing. Those stupid motherfuckers. Oh, God, that feels good. I lost it. Can't even find it now. Oh. You stupid motherfuckers. I love you.
There's risk.
Yes.
Can we loop this?
The general problem with wrapped assets is, okay, you use Ethereum you use Uniswap, you're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's
It's amazing. Cheers, apes. We got him.
There's risk. Assets is, okay, you use Ethereum, you use Uniswap, you're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's
I can just listen to that over and over and over right now. These stupid motherfuckers. Yeah. I'm waiting for this for 2 years. You stupid, stupid motherfuckers. I love it. I love you guys. Marc, Ken, all of y'all. We're coming. We're coming.
There's risk. You're taking like majority, like we don't need to have WETH on all of these chains. We could have people just collateralize ETH on Ethereum, send out a message, and borrow against that collateral position. And I think that is like a far cleaner.
Isn't that just sort of a wrapped token of a different description? That you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So I think sol on one. Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap, you're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's
oh, the stupid motherfuckers. That's so good. Oh, I fucking love you guys. We're just gonna stream this all day. Cheers, apes. Guess what? We're going live all day today. I didn't sleep last night. Thanks for doing this with me. Love you. It doesn't mean it's worth nothing. No. It means we're right. They tried to break us to nothing. They couldn't. The stupid motherfuckers. We caught them. We just caught them. Oh, it feels so good. I love you guys. I made this song for you guys. Did you know that? It's called Diamond Dance Club. It's for you. Yeah. Cheers, apes. Go get him, Gary.
There's risk on
Berkowitz.
You're taking some risk of the underlying Uniswap code, right? But at the end of that,
IOU on a different ledger.
It's like a far cleaner.
Isn't that just sort of a wrapped token of a different description? That you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So I think it's all on one. Yes.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
Oh, it's so good. Oh, I love it. Oh, it feels so fucking good right now. I'm gonna crash hard on this one, man. Fuck. I love you guys so much.
There's risk on the underlying contract that is hacked and drained. Now your IOU is worth nothing. There's risk at the validation layer. There's all of these different layers of risk in the underlying asset existing on. So now we're to the point where you have, tens of billions of dollars of assets that are existing in all of these ecosystems carrying the risk. And so you have the ability to at least take some out of the asset. You still have these contracts that hold, you basically have APE effectively across both chains, but there are so many mitigating factors that you can do to make that cleaner than what we're doing right now in wrapped assets.
So let's talk a little bit about some hacks and exploits, because obviously in the news today, there's been some pretty big hacks like
yeah, you should keep holding.
Like Wormhole. As a non-technical user, how can you, in sort of like the simplest terms you can think of, how can someone understand why LayerZero Stargate implementation and combination is more secure than all of the other bridges that we're currently seeing sort of getting hacked?
Yeah, so I think there are a lot of things. One, there's like a list of things that I think people do poorly to could do better, right? And so one of the things I think people do the worst is every contract for all of these systems are fully upgradable, which is literally complete and utter insanity. So there is no world that these should be. So in most of these systems, the contracts that are handling all of the parameterization, the contracts that are handling all the security properties can be upgraded at any time by the underlying team. So no matter whatever fancy methodologies are being used. So, Nomad is a great example. So optimistic fraud proof. People got very...
From just a LayerZero point of view, if this application over here on Radix wants to talk to Uniswap on Ethereum, then the Radix application would have to integrate and to build the calls that it wanted to do across LayerZero to the Ethereum ledger and the returns that it would expect on the other way, so that you essentially have a per application implementation. You go, okay, well, I care about this application here speaking to that application on a different ledger. Now, that's not with some things that makes a lot of sense, especially if you're trying to do multi-chain of the same application and allow that application to essentially feel like one user experience regardless of what chain you're on. But for assets, that you kind of want a more generalized approach a lot of the time, right? You want to just, I have an asset, it exists on many chains. I just want to be able to arbitrarily move it between different chains, and I don't necessarily want to wait for the applications to have integrated themselves with LayerZero for the particular cause of the things that I care about. So I think this is where Stargate comes in, right?
Yeah, so the main curve, like we realized, okay, general messaging, super cool, tons of things you can do with it. But if we don't provide a liquidity transfer layer, then it will be 6+ months before people start to build like the Legos that allows all the DeFi to be composable. So like a very simple example is like Stargate solves this inventory. You're a yield aggregator. You want to unstake $100,000 on chain A in some farm on chain A and stake it in some farm on chain B because it has 3 times the APY. On a single chain, it's fine. You unstake and then you stake. Across 2 chains, you unstake 100,000 USDC here, but you don't have 100,000 USDC here to stake, right? And that's the problem. So all these systems, whether it's Sushi Swap or Pancake or yield aggregators, right? They ran into this problem of you do something here and you want to do something there, but you don't have inventory. So users would like swap on Sushi, leave, find an external bridge provider, end up with wrapped token, unwrap it or do a swap to that, and maybe make their way back to Sushi for like the other leg of the trade, right? The ideal user experience is clearly sign a transaction and the whole flow is executed. So Stargate solves this inventory problem such that you can treat USDC on Ethereum exactly the same as USDC on Avalanche. So now you're a yield aggregator and you say, I want to unstake here and stake there. You compose Stargate in the middle, done. User signs 1 transaction and magically their money is in that farm on Avalanche, farming away, getting the API APY. So, what's happening behind the scenes is unstake, add to Stargate, subtract to Stargate, and stake. But Stargate basically is that liquidity transfer layer of just abstract away liquid inventory and solve that for the applications. And so that was Stargate's entire purpose. And actually, ultimately, it's like a cleaner way to do this. So Stargate's amazing in that, we within 2 weeks of launching, I think we were the fastest growing DeFi application of all time. We had $4.4 billion of stables. We had all of this fun. So we have really deep liquidity that we're able to, move around and do all these things that we're talking about. But, let's say there's a world where a stable coin or a Stargate token itself, interestingly enough, does not use the Stargate protocol because Stargate token was built on LayerZero such that all of the supply is managed at the contract layer. The state is held in the contracts across all 7 of these chains. And so that supply is completely elastic. If you want to go from, Ethereum to Polygon and then Polygon to Binance Smart Chain, it doesn't matter because all that you do is basically just burn here, mint there, burn there, mint there. The total supply is elastic. So that means you don't need any standing inventory because you can now move all of that. So in the world where like a stable coin, was built on the OFT. So, and this will definitely, this will happen for sure. But in the world where this is happening, where stables, where other tokens are, now you have the ability to move $100 million from Solana to whatever other ecosystem for only the cost of gas. So let's say you're going like Solana to Avalanche. You can move $100 million for 8 cents, and then that gives you the ability to basically arb spreads between pairs. So you're no longer paying 4, 6, 8, 10 bips to any external bridge. You're no longer needing to go through wrapped assets and carry this risk. Now you have the ability to freely move that around, which should make the capital efficiency of markets so much tighter, which also is super interesting.
So where's the token contract then? Is the token contract on every single ledger? Right, okay, fine. Yep. So but you're talking about inventory here, which means that Stargate and obviously that makes sense, right? If I've got USDC on Ethereum and I want USDC on Avalanche, if you're not actually wrapping it, then there has to be, if you're putting USDC in on the Ethereum side, there has to be some pool in which you're pulling USDC out on the Avalanche side. So how does that liquidity emerge, and how do you basically pay the people who are providing liquidity enough to be interested in doing it in the first place?
Yep. So Stargate, exactly right. Pools of liquidity on every single chain. You need to incentivize those pools. So one of the big thoughts of Stargate early on was that renting liquidity in perpetuity sucks. So the goal has always been grow protocol and liquidity as much as possible. So Stargate has about $150 million of protocol and liquidity. So it has like a lot of its own liquidity. And then it rents the rest. And over time, through fees, through everything else, it's growing the protocol and liquidity such that it needs to rent less and less, and it gets to own and maintain more and more of the fees that are being generated on it. But right now, people are basically being paid in Stargate token, or rewarded in Stargate token for providing LP of USDC, of ETH, of USDT, of all of these stables across these chains. And then the users on top are paying 6 pips on every transaction that go to these people who are providing LP. And so that is sort of where the pool TVL comes from right now.
Okay. So until people start the process of issuing tokens where the supply can be managed cross-chain, where you can simultaneously burn on one chain and mint on another, which you can with the Stargate token, but no one has yet sort of like pushed that out on, say, a major stable coin. You will always need to incentivize pool liquidity, and for things that are finite supply by design. So
that's
like
Brian
Bitcoin,
Pellegrino.
Something like that,
Yeah,
you're
okay.
always going to be doing that.
That's him. That's Brian Pellegrino. Okay.
Is that right?
Yep. Yeah, for all native gas tokens, right? There's no contract thing like mint you ETH on another chain. So all gas tokens will always be wrapped assets. Like it just has to be that way, but everything else doesn't need to be. And actually, there's some hope for me that, like,
I've been reading his name all morning.
I don't think there's a word like, I don't think it makes that much sense to have like wrapped Solana on Phantom. Like, do we really need to have wrapped Solana on Phantom? Do you really need to care? Like, what people want is to have exposure
You get why they use Solana
the
now?
assets on Phantom, have exposure to credit there without losing underlying exposure to their SOL in that case. And so there's a world where lending protocols, and again, this is definitely happening, but
This
there's a
is
world
definitely
where you
happening.
can simply, let's say every pool, every chain has a pool of USDC, some stable, let's say USDC, and native gas assets. You have ETH and USDC, Phantom and USDC, Sol and USDC, etc. And you can simply, through messaging, collateralize on chain A and borrow against that, take a credit position against it on chain B. So you stake your Sol on Solana, and then you take credit against it on Phantom. You do whatever you want in the Phantom ecosystem. You repay, comes back, your collateral's unlocked. Like, why do we need to bring Sol to Phantom and Phantom to AVAX, right? It makes no sense for the majority. There are some corner cases where you might want to have some asset there to have your pricing in a DEX. Maybe you want to trade against the price of Solana on Phantom. So then maybe you either need to have a derivative, you can have a perp, so you don't actually need to have underlying inventory. But for the
You don't
large
actually need to
majority,
have
we don't
underlying
need to
inventory.
have WETH on all of these chains. We could have people just collateralize ETH on Ethereum, send out a message, and borrow against that collateral position. And I think that is like a far cleaner.
Isn't that just sort of a wrapped token of a different description? Like you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So stakes are on one. Yes.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, as that is broken, infinite mint, now your underlying
Infinite
is worth
mint,
nothing.
and now
There's
it's worth nothing. We got him. We got him. Oh, it's so good. Fuck. I love it. I love it. You stupid motherfuckers. We got him, apes. It's Citadel. Citadel and LayerZero and Sequoia and FTX and All of them. That's for investigators. It's done, dude. We got him. You know what I mean? You guys know what I mean? You guys know what this means? That's so good.
Risk on.
I could just play that over and over all day.
No. The general problem with wrapped assets is, okay, you use Ethereum. You use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists,
Ledger X.
the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's risk on the underlying contract that is hacked and drained, now your IOU is worth nothing. There's risk.
You see that? You hear that? You hear that? That was it. We got him, guys. We got him. Sure. What are you guys doing? No. It means they're making counterfeits of our stock market. And they've been trying to run it down to zero. And we caught him. That's what that means.
That they were just the tip of the iceberg.
Don't you get it? Fidelity got approved on Friday. Oh, you guys. Fidelity has your shares in street name. I don't know if I don't care, man. I caught them. They're crooks. They know it's illegal. They know what they did. It's fraud. It's manipulation. It's launder. I don't know how many laws they broke. I want my fucking money. To the moon. They can pry my shares out of my diamond fucking hands. Those stupid motherfuckers. They have no idea how much those shares are worth to me now. It's so good. As long as they're open in all perpetuity.
On a bipartisan basis to advance legislation that would give the CFTC regulatory authority over the trading of crypto tokens.
Guess who didn't get shut down in the FTX?
To be clear, there currently is no federal market regulation of spot crypto assets that are not securities. These include Bitcoin and Ether, the two most heavily traded crypto assets. The White House and the Financial Stability Oversight Council have urged Congress to close.
So Solana is not a security. Solana's not. Solana's a security, right? So that's SEC, and then this Ethereum stuff should be CFTC.
The Protection Act does exactly that, and I want to thank Senator Bozo as my partner, and I want to thank our co-sponsors as well. I've said this before, and I'll say it again. The Digital Commodities Consumer Protection Act does not take authority away from other financial regulators, nor does it make
I hate
the
that smile.
CFTC the primary crypto regulator.
Nope.
Because crypto assets can be used in many different ways, no single financial regulator has the expertise or the authority to regulate the
Get
entire
him.
industry.
Good job. Good job.
We continue to work with our colleagues on the Senate Banking Committee and at the
Yep.
Securities and Exchange Commission and other financial regulators to bring greater protections to this market, regardless of whether the asset is a security or a commodity.
Get him.
The crisis created by FTX further confirms the need for a whole-of-government approach to regulating this market. The risks of trading crypto have come into sharp focus in the past few weeks, but we have known about them for years.
I
The
love
lack
you
of
guys
clear,
so much.
consistent rules has allowed crypto to flourish despite the
You don't
harmful
get it,
conflicts
dude.
of
You don't
interest
fucking
and
get it.
absence of responsible
We got him.
governance and risk management.
We got
And
him.
a failure
I got him.
to safeguard customer assets. This is the very conduct
Oh, fuck.
our legislation is designed to prevent.
Game over.
And where federal regulators, including the SEC, already have authority to register and oversee crypto firms, they must use that authority. Fraud prosecutions are a critical tool, but far too few and far too often they are brought after customers' money has been lost, with little recourse for those affected. Senator Bozo and I have called today's hearing to do two things. First, to understand what went wrong at FTX. We won't have all the answers today because the story is just beginning to unfold. But the committee will hear from Chairman Dunham about what may have triggered such a staggering collapse in such a short period of time. Second, we want to ensure that the Digital Commodities Consumer Protection Act sufficiently addresses these risks.
We're getting to it.
One thing is already
I want to show you guys this.
the crypto industry lacks the customer protections that Americans expect and deserve when trading
I'm
in
gonna get
U.S.
to it.
markets. When exchanges accept customer funds for trading, they must not be allowed to gamble with those funds. They must not be allowed
Yeah, I gotta
to
show you
invest
guys this.
products that have little or no intrinsic value and accept them as collateral for loans. And they must not be allowed to self-deal. FTX did all of those things, emboldened by a lack of federal oversight. And let me just conclude by saying that there is one exception.
Oh yeah? Which one? Tell
One
me.
exception is LayerZero,
Oh.
a derivatives exchange and clearinghouse purchased by FTX and registered with the CFTC.
Oh.
John Ray, the CEO appointed to navigate the FTX companies through bankruptcy, said that LayerZero has a, quote, solvent balance sheet.
Oh yeah, John
and
Ray?
responsible management. Customer money was safeguarded and is accounted for.
Did you guys hear that?
The purchased by FTX. There's one exception in this story. One exception is LayerZero, a derivatives exchange and clearinghouse purchased by FTX and registered with the CFTC. John Ray, the CEO appointed to navigate the FTX companies through bankruptcy, said that LayerZero has
LayerZero.
a, quote, solvent balance sheet.
Solvent
and
balance sheet
responsible management.
and responsible
Customer
management.
money was safeguarded.
Customer money is safeguarded. John Ray said that. Right, John Ray? He said that, right, John Ray?
Let's get the validation layer. There's use Ethereum to jump off with of Solana on Phantom. We could, and I think that is like a far cleaner.
I'm going to play this
Isn't that
over
just
and
sort
over
of
all day.
A wrapped token of a different description that you're essentially issuing
Yeah.
an IOU on a different ledger, which is kind of what a wrapped token is, right? So I think
It's an IOU on a ledger.
Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists.
As long as that IOU exists. What'd you say, John?
Customer money was safeguarded. Is accounted for. The DCCPA replicates these commodity markets.
What, John? What?
Raw.
I didn't hear you, John.
And
what's going on here? Fuck you. I'm trying to show some people some stuff here.
Crypto tokens that are not securities. To be clear, there currently is no federal market regulation of spot crypto assets that are not securities.
Where's John?
The primary crypto regulator. Financial responsible governance and risk management. Firms, they must use that authority. This hearing to do two things. First, to short period and deserve and accept them as collateral for loans, and they must not be allowed to self-deal.
Okay. They think they're
one exception
there.
is LayerX.
One exception
a
is
derivatives
LayerX.
exchange and clearinghouse purchased by FTX and registered with the CFTC.
Tarbert.
John Ray, the CEO.
Tarbert's at Citadel now, guys. He approved LayerX.
Appointed to navigate the FTX companies through bankruptcy, said that LayerX has a, quote, solvent balance sheet and responsible management. Customer money was safeguarded.
Customer money was safeguarded. What does that mean? What does it mean, guys? What does it mean?
That on chain B, and in perpetuity, as long as that IOU exists.
In perpetuity, as long as that IOU exists. What do you mean? What'd you say, John?
And is a management, solvent balance sheet, and responsible management.
Yeah.
Customer money was safeguarded and is accounted for.
Oh what?
With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists.
As long as that IOU exists. LayerX, they kept LayerX alive, guys. It's alive. It exists. As long as that perpetuity exists, and it can exist in all perpetuity, then what can you do?
The asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
What? Do you guys get it? You get it? You get it yet? I'm gonna play this all day. We got him. We got him. Don't you get it? I'm not going anywhere. I'm gonna play this all day. I got music all day. I'm gonna go over this. You guys got any questions? Let's go. Shoot me a question. You guys get it? Okay, I'll try. Okay. January 26th, they mint tokens. Okay, they mint them on Solana, they mint them on Ethereum. That's two different chains. Okay, we saw the wrapped tokens on Ethereum. We're seeing other tokens everywhere. You're finding synthetics everywhere. We're finding quadrillions of them everywhere. Okay? they're hiding FTDs in swaps, but swaps have rollovers. So you need a special type of swap. You need a perpetual swap. Now, there's only one perpetual swaps in the United States that's approved. And let's see, where is that? That's approved by Ledger. That's approved by this guy, Tarbert. Tarbert approved LedgerX, rolled back foreign swaps reporting right here in this meeting on July 23rd, 2020. And then he joins Citadel. They're all appointed by Trump on the right here. They all approve it. Majority. He joins Citadel. He joins A16. Right? They're involved in all this. Okay, so now LedgerX exists, and then FTX buys LedgerX. Okay? So you got perpetual swaps. They're hiding them in perpetual swaps. They don't have to roll it. They can hide them forever. As long as they exist. And then this guy, so Citadel, all of them, where's all their names? Let's just look it up. LayerZero. Fucking LayerZero. You stupid. Oh, I love them. I love it. Where's my LayerZero page? I got so many pages open. I love it. Okay. So, LayerZero started by Citadel and Sequoia and Virtue and Fidelity, because Fidelity just started a digital asset branch, guys. So all you guys holding your stocks in street name, because we all left Robinhood to go to Fidelity. So Fidelity works with all these guys. They open up Hidden Road prime brokers in the UK, right? Fidelity tokenizes your shares and holds them in custody. They don't move. We saw the ledger from January 26th. They tokenized them. A bunch of people bought them up and they didn't move. They've been sitting there this whole time. Okay? They don't need to move them. Let's see. LayerZero raises 135 million. Sequoia, FTX, Andreessen, Horowitz. This guy. With participation from Coinbase, PayPal, Tiger, Uniswap. More. Okay? So they buy LayerZero. And this is LayerZero right here. This is Pellegrino. This is LayerZero that Citadel and all those guys just bought. Put 50 million in, right? And then he's going to tell us exactly what they're going to do with those tokens right now. You got our stock, but then they tokenize them and stick them in. Fidelity's a holder. FTX was a holder. All of these exchanges were custodians. And then he'll tell you what he'll do with our stocks. So those tokens that they tokenize from our stocks are called, we'll call them the underlying. Well, no, our stock's the underlying. Okay, our stock is the underlying. And then they're going to tokenize it across all these different chains. Okay? And then what do they do?
No.
Isn't that just sort of a wrapped token of a different description that you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So I stake Sol on one. Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum. You use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, You mint a synthetic IOU on chain
Mint a synthetic on chain
and
B.
in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's
poof. Where are they getting all these shares? You know what? There's some lawyers out there. I caught them. They figured out. They broke so many. They probably broke so many laws. I mean, fraud, manipulation, laundering, racketeering. I mean, they hacked our stock market. Don't you see? This is a cyber attack on our stock market.
There's risk IOU on chain, but it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain.
Okay, you lock up an asset. Fidelity is tokenizing stocks right now, or FTX did it. We have it on Ledger. Okay, so FTX tokenizes our assets, okay, as a wrapped Ethereum, okay?
A, you mint a synthetic IOU on chain B.
And you could do that on Solana, on all of them. You can just mint infinite synthetic shares on the blockchain, in the crypto. You just mint infinite. Okay? And what happens?
And in perpetuity, as long...
In perpetuity, with LedgerX, which they kept alive. They kept LedgerX alive, guys.
The DCC and registered with the CFTC. John Ray, the CEO appointed to navigate the FTX companies through bankruptcy, said that LedgerX has a, quote, solvent balance sheet and responsible management. Customer money was safeguarded.
Well, I'm sure they are. I'm sure it's super safe. You know why? You know why they kept LedgerX alive, guys? You know why? Because as long as it's open...
As long as that
Tell us, Pellegrino. Tell us, Pellegrino.
IOU on chain B, and in perpetuity, as long as that IOU exists, that...
In perpetuity, as long as that IOU exists, because LedgerX is alive. It isn't in perpetuity, and it does exist. They kept it a lot. They kept it alive.
Asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
Boom. That's how they drive us down, guys. They've been trying to drive us down. They're printing infinite shares on crypto. And we caught them. We caught them. I love you guys so much right now. I'm just so happy. They're so... I love it. I'm gonna just sit here. I'm gonna play music all day, and I'll try to answer whatever I can. You know, people can figure out when they want to figure it out. But we got it. It's right here. They can... I'll be here. We know now, yeah, like Fidelity just got approved Friday with FSA in UK. And we know Virtue and I think Citadel and Virtue were funding Hidden Road, which is bought by CAP. Where's that? Let me pull that up. Oh God, I love you guys. I wouldn't have my shares in Fidelity right now. I would DRS all of them. I had Vanguard. I DRS'd all of it, almost all of it. I kept like a little bit. Because we caught Vanguard lending to Fidelity. And I'll show you guys. Oh, it feels so good. Where is it? It's in the TCAP. TPCAP. Interim results right here. Here, I'll link it for you. You can read it yourself. If you have Fidelity, check it. This pertains to you. I put the link right there. Okay. And if you go in there, just do a little search for Fidelity. They come up twice. Combine our expertise in the market infrastructure with Fidelity's track record as custodian, pending FCA approval. Custodian, pending FCA approval. Fidelity Digital Assets. They got FCA approval, guys. They got it on Friday. What happened this week? You guys are freaking out. Why are you freaking out? They're freaking out. I'm trying to, dude, don't talk to Fidelity. Fuck Fidelity. Talk to Department of Homeland Security. Talk to SEC. Talk to CFTC. Don't talk to Fidelity. Fuck Fidelity. Fuck those guys. Let them bleed. I would DRS my shares. Fidelity has your shares in Street Aim. Fidelity's able to tokenize your assets as custodian. With FCA approval, which they got Friday, with Hidden Road, which is owned by this company, which got $50 million in funding from Virtue and Sequoia and Citadel and those guys. Okay. And then these guys, they take those assets and they cross them to all these cross chains. That's what they do.
You exist. The asset over there now carries risk. Underlying Uniswap code. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap, you're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
We don't know that. You don't know that. They want to get them. They just don't know. Safety does. They don't want to look like out. They don't want to look like shit. Everybody's saving face right now. This is the time. You don't know that. And they're not the only ones. Did you hear her?
The not what fans expect and deserve when trading in U.S. markets, when backed to safeguard customer assets. This is the very conduct our legislation is designed to prevent. And where federal regulators, including the SEC, already have authority to register and oversee crypto firms, they must use that authority. Fraud prosecutions are a critical tool, but far too few and far too often they are brought after customers' money has been lost, with little recourse for those affected. Senator Boozman and I have called today's hearing to do two things. First, to understand what went wrong at FTX. We won't have all the answers today because the story is just beginning to unfold. But the committee will hear from Chairman Benham about what may have triggered such a staggering collapse in such a short period of time.
Did I go too far?
Second, we want to ensure that the Digital Commodities Consumer Protection Act sufficiently addresses these risks. One thing is already apparent. The crypto industry lacks the customer protections that Americans expect and deserve when trading in U.S. markets. When exchanges accept customer funds for trading, they must not be allowed to gamble with those funds. They must not be allowed to invent products that have little or no intrinsic value and accept them as collateral for loans. And they must not be allowed to self-deal. FTX did all of those things, emboldened by a lack of federal oversight. And let me just conclude by saying that there is one exception.
One exception.
One exception is LayerX, a derivatives exchange and clearinghouse purchased by FTX and registered with the CFTC. John
Tarbert.
Ray, the CEO appointed to navigate the FTX companies through bankruptcy, said that LayerX has a, quote, solvent balance sheet.
Who's John Ray, guys? Who's John Ray think he is now? John Ray handled the 2008 crash, didn't he? What'd you say, John?
And responsible management.
What, John?
Bankruptcy said that LayerX registered with the CFTC. John Ray, the CEO appointed to navigate the FTX companies through bankruptcy, said that LayerX has a, quote, solvent balance sheet and responsible management. Customer money was safeguarded and is accounted for.
Oh.
The DCCPA replicates these commodity markets.
She also says it's not just the CFTC. The CFTC can't just ring this in on them. They can't have ultimate control over this stuff. She told them that. Who approved LayerX? This guy. This guy right here, Chairman Tarbert. Guess where he works? Can you guys guess? Guess where Tarbert works? He's at Citadel. Guess where this guy's at? Remember, like the day before Gary got in and the extended swaps reporting? Or the day before this guy, before Benham came in, or whatever. These two, I think we could find it. Remember? Guess where he works now? He works for this guy's company. These guys, A16, that's where he works now. Guess what they're doing? They're doing this. This is them. Marc. What'd you say, Marc? Wait, that's not a crime, is it? I don't know, is it? Is it a crime, guys? What was Marc doing around? What's this? Oh, we got Marc and Ken Griffin. Talking about, I think, wasn't that February 3rd? 2021? What's going on? Sounds like Marc wants to know.
Welcome to 16 Minutes Maker and in talk to clients deeply shortly thereafter, because Robinhood receives a substantial.
Sounds like Marc wants to know what's going on with his investments. You guys remember
portion of
that?
its revenue through a payment for order flow relationship with Citadel Securities LLC. Many commentators criticize the potential for a conflict of interest where the same entity plays the role of market maker and also participates in the market that it makes. And of course, in the
So, this guy works for him now. After he extended swaps reporting. And what does he do now? Where do I even put that? You guys don't know how many windows I have open? Do you have any idea how many windows I have open? This is ridiculous. A16. There you are. There he is. Look at that. Look at that. It's amazing. New head of policy. I don't know who needs to hear this, but Those guys were all Republican. They're all deregulatory. Berkowitz is Republican. He's old school. Berkowitz is badass. What does Berkowitz do? Berkowitz helped write the Dodd-Frank Act with Gary Gensler. You can read all about it here. This was a big, big deal, and all the banks fought it for many years. It's a good story. It's a really good story. In fact, Gary had to sneak it in on the banks, and the banks didn't know for a month, because Gary's a fucking badass. And then they spent years trying to get rid of it. They were paying off Gary's employees at the CFTC, and they were all running off to the banks, but not Gary. Gary fought. Oh God, I love it. So here we are. We're in July 23rd, 2020, and this guy appointed by Trump rolls back that clause right here. All three of them do. They're all paid off. Right? He goes to Citadel, he goes to A16. She might still be there. Right? Now Berkowitz. Berkowitz in here. He's in like 2 hours in. What does Berkowitz tell us? Berkowitz tells us about the risks about foreign swaps reporting. Okay? This caused the 2008 crash. They were hiding their risk. They were hiding their risk beyond Washington's reach. That's what we're seeing right here. Hidden road in the UK. Out of reach. So Gary, while he's at the CFTC, sneaks in this clause. And the banks don't see it for a month because Gary's a fucking badass. Berkowitz helps Gary write this Dodd-Frank Act, which is the second largest regulatory reform. We're about to hit the third one. And it's going to get a lot better now that we know this. And Berkowitz talks about the risks.
So I'm going to go into exactly that issue in my questions right now. But first, I want to just confirm. I'm going
This
to
is
read,
it.
Again, I'm going to read from the release for the benefit of the...
And Berkowitz explains to them. Berkowitz is like, guys, you get... Where's my batteries? Let's do this. It's like, guys, you get foreign swaps unreported, right? You got Citadel and Virtue, right? They're throwing 50 million into Hidden Road. You dump all this fucking risk off, all these tokens. And what happens? All that risk comes back to us. It comes back to the parent company in the States. Okay? It's what caused the 2008 crash. It's what's going to cause the next crash. Right? So he defends it.
That might not have it.
So Tarbert goes to Citadel. He goes to A16. Berkowitz goes to SEC to help Gary. Because they're fucking badasses. Don't you get it? We got him. We got him, Berkowitz. Okay. So all that risk. FTX.
There's risk on the underlying contract that is hacked and drained. Now your IOU is worth nothing. There's risk.
You get it? You get it? We got him. We got him. We got them all. We got them with their pants down. When was that? March 8th? This guy's been sweating. Sweating big time. Aren't you, Marc? You? You talking about me? Did I do that? I don't know. Actually, I don't know if I was on it that early.
at the validation layer. There's all of up an asset on chain A. You mint a synthetic IOU on chain B.
October 8th. October 8th. Stupid motherfuckers. I love them.
And in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
I'll be here all day. I'll answer whatever you guys want to know. I'll try my best. I got videos that lead all up to this. This video is different. I didn't have this shit ready. We did this together, guys. Thanks for doing this with me. We got him. You know what happens. You guys, you know what happens when you get synthetics? Right? We got any Matrix fans in here? Huh? They're clogging our system, aren't they? Oh God, it's so gorgeous. Fucking love it. Should you do more music? How are we doing? We got a song request in here? I'm only allowed to play mine. Margin calling? To the moon? Gorilla Gang? What are we feeling? Margin calling? Is this one too violent? Not feeling that. We're going to go to the moon. To the motherfucking moon. Boom boom candles. I don't know about you guys, but APE was so cheap lately that I got more APE in the last week than I exceeded all of my AMC shares altogether in the last week. Super cheap discount. Hot dogs are 1/8 the price. Get your tendies. That is a good question. My research shows this inserted extreme systemic risk into our markets. 2008 shit. FTX just blew up. It hasn't even played out yet. I mean, I'm showing you in just a few links here. Where are we? Keep losing my pages. Oh, I love it. So, I put the links there. Routers. Read that article. "2008 crash happens, and they were hiding billions a day in swaps, foreign swaps." Gary's at the CFTC with Berkowitz. Right? I think this guy's still in there. Where's this guy? Basically, some Republicans were trying to help out the banks and let them get away with this still. So the Democrats caught on, and they go up to Gary Gensler, and they ask Gary Gensler to put a clause in the Dodd-Frank Act. Okay? 17-word clause. And he hides it in the Dodd-Frank Act. Right here. Okay? And the banks don't see it for like a month. Gary snuck it in. They didn't even know. Because Gary's a motherfucking badass. Right? So Gary and Berkowitz tucked this little insert in this 228-page amendment to the Dodd-Frank bill. And they thought the derivative rules wouldn't apply to their overseas trading operations. 1 year later, at the late 2010 meeting of the CFTC board, one of Gensler's, oh God, what a kick to the balls. Fuck yeah, Gary's a badass. God damn it, I love him. One of Gary's legal aides declares that the passage in the fact gave the regulators worldwide reach of the US banks trade. They were fucked. It's right here. Direct and significant connection with activities in or effect on commerce of the United States. Because all that risk comes back and it crashes our markets when they hide this shit. Right? So what happens? They fight this shit for years. They're paying off CFTC members. They're all going to the banks. What happens? What happens with Trump's administration? Tarbert, Quinten, Stump. Right here. I put the link in there. This is the meeting. They roll it back. They roll it back. Berkowitz is the only one that we're defending. Berkowitz is Republican. He's old school Republican. He's like true school, like a real conservative. He fucking calls them out. Like, guys, this is how 2008 crashed. What the fuck you doing? We know what they're doing. Tarbert went to Citadel. Quinten's went to A16. Right? Quinten's went to go join Gary at the SEC because they're fucking badass. Because they're motherfucking badass. Right? So, Tarbert approves Ledger X, rolls back the swaps reporting, joins Citadel. Quinten's, the day before Benham gets in, they extend the swap reporting. Remember that letter? Okay? And then he joins A16. A16, this guy's doing stuff with Grin. This was February 3rd. He wanted to know about his investments.
A major investor in the.
You remember that? So Sequoia and Virtue and Citadel, all those guys, they're starting all these crypto things. They start this LayerZero, cross-chain. And I mean, there's so much in there. I'm just trying to go the abridged version, guys. There's so much crud in there. It's in all my videos now. It's all there now. So what does this guy say? We're finding tokens. We're finding tokens. We're finding them on FTX. We're finding them everywhere.
Just sort of a wrapped token of a different description that you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So I stake SOL on one. Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum. You use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
Okay. If it's held in all perpetuity, how do we know it's being held in all perpetuity right now? Ledger X.
Second, we want to ensure that the Digital Commodities Consumer Protection Act sufficiently addresses these risks. One thing is already apparent. the crypto industry lacks the customer protections that Americans expect and deserve. FTX did all of those things in this story. One, that there is one exception in this story. One exception is LayerX, a derivatives exchange and clearinghouse purchased by FTX and registered with the CFTC.
By this guy.
John Ray, the CEO appointed to navigate the FTX companies through bankruptcy, said that LayerX has a, quote, solvent balance sheet and responsible management. Customer money was safeguarded.
Safeguarded. It's safeguarded.
There's a risk contract that is broken, infinite mint, now your underlying is worth nothing.
Get it? They're being held in all perpetuity.
There's risk action. Assets is.
I can't believe I only have 437 views. You guys are killing me. I'm here. It's good. We don't know how this is going to end. I don't know how this is going to end. Nobody knows what's going to happen. Nobody knows. Does it change anything? I'm not going anywhere. They can pull my shares out of these diamond fucking hands. You know how much my shares are worth to me now? Do you have any idea how much this shit is worth to me? How much is worth to you? You should be asking yourself that. If you have somebody in the desert and they need water, they're gonna die. They need water. And you got a cup of water. And if they had that cup of water from you, maybe they won't die. How much do you think they'd pay you for that cup of water? If let's say that person has $50 billion. Let's say they're handling trillions of dollars worth of assets. How much money would that person pay you for a cup of water? How much is that water worth to you? I don't want to hear that. I don't want to hear that stuff. You know who rocks is Zeus. That guy's a fucking badass. You know Zeus? You guys seen my Greek gods over here? I highly recommend it. It's in my playlist. You guys like any Greek gods you guys like? What's your favorite Greek god? I got 36 of them here. You know which one I like? I like Pontus.
Hey, it's Ryan Reynolds, owner of Mint Mobile. With a holiday offer,
Hey, I know that guy.
that you're gonna like. When you switch to Mint now,
Pontus. Listen. Who's Pontus? Pontus was the primordial god of the sea. He was the sea itself, not merely its resident deity. He was born from the earth at the dawn of creation. That's Pontus. What a fucking badass. Pontus is a fucking cool god. So fucking, he's the sea itself, bro. Don't fuck with Pontus. War, Mars, Aries. I'm an Aries. Couldn't tell. You guys are lucky. You get to hear all my favorite ones. Any other gods you guys like? You guys like any Greek gods? Should we? I like this one.
Pig on Vox, sure.
Electronic.
Nice to unwind after a long week of telling people how Liberty Mutual customizes your car insurance so you only pay for what.
God, I love you guys. We did it. We did it. We did it. I'm gonna be here all day. I'm just gonna. We caught him. I don't know if you guys know that. I don't know if you guys know why I'm dancing. Yeah. Genzo, are you in here? I love you, man. Why would you think that, bro? Gigi's a motherfucking badass.
They were just the tip of the iceberg. Since that time, members of this committee have been working on a bipartisan basis to advance legislation that would give the CFTC regulatory authority over the trading of crypto tokens that are not securities. To be clear, there currently is no federal market regulation of spot crypto assets that are not securities.
Doing? Are you guys? I'm celebrating all day. I don't even have alcohol. I know, I'm dry. Hey man, we're listening. Dude, the Bible doesn't even exist yet. We're listening to Electrona. She's a goddess. Have you heard of her? Let's learn about Electrona. Goddess of sun and morning. She was the Greek goddess of the sun. That's fucking badass. Waking from slumber. I don't know what time it is for you guys, but we are waking from our slumber.
These include Bitcoin and Ether, the two most heavily traded crypto assets. The White House and the Financial Stability Oversight Council have urged Congress to close this gap. The Digital Commodities Consumer Protection Act does exactly that, and I want to thank Senator Bozeman as my partner, and I want to thank our co-sponsors as well. I've said this before, and I'll say it again. The Digital Commodities Consumer Protection Act does not take authority away from other financial regulators, nor does it make the CFTC the primary crypto regulator. Because crypto assets can be used in many different ways, no single financial regulator has the expertise or the authority to regulate the entire industry. We continue to work with our colleagues on the Senate Banking Committee and at the Securities and Exchange Commission and other financial regulators to bring greater protections to this market, regardless of whether the asset is a security or a commodity.
I heard Citadel's poised by him. Sequoia, Paradigm, Citadel, I heard they're right up there to acquire LedgerX, or they can. Now with this video, they can't. That's why I'm dancing. It's a day to celebrate, apes. I haven't even looked at the stock market. That's how you trade. I mean, that's not how you trade. This is how you invest. DD. Okay. You guys check out my Gods playlist? You got any requests? Should we listen to Pythia? I've been talking about Pythia. Let's see, is this one? I can't remember this one. God of the West Wind. Mr. Krios? Oh yeah, Krios is badass. One of the Elder Titans. God of the Constellations. That. Yeah. It's just begun. Nice little meeting yesterday. It was like 7.5 minutes. I watched it on the Masked Investor. You guys follow him? Nice chill vibes. Who's on here?
Building your business online.
Kind of ruined my vibes there, man. Hope you don't mind, bud. It's a good little broadcast, though.
That's the call right there.
It's probably why it's running today. Oh. Keep doing that.
I will now turn the call over to GameStop CEO, Matt Furlong.
Good afternoon, everyone. I want to begin by acknowledging the dedication and focus of the teams managing our stores, fulfillment centers, and e-commerce platforms. As the holiday season begins, they are going the extra mile and working exceptionally hard.
You guys don't follow, Mask.
Customers.
Follow that guy.
I also want to take the opportunity to acknowledge our stockholders who continue to demonstrate unrivaled enthusiasm and support. As we work to transform the company and do something unprecedented in the retail sector, that sustained passion is a major tailwind for us. Similar to last quarter, I'm going to spend some time at the outset of this call recapping where we've been, where we are now, and where we're looking to go. Throughout 2021 and 2022, we were extremely focused on repairing our decayed foundation, reestablishing a culture of operational intensity, and setting the right long-term priorities. This translated to building a strong balance sheet, modernizing a crumbling infrastructure, and putting together teams that are now able to operate with the nimbleness and efficiency our stockholders and customers expect. Today, we're in the process of aligning corporate costs to our go-forward needs after completing the majority of necessary upgrades to our systems, fulfillment capabilities, and overall foundation. A large portion of our cost cuts will stem from reductions in corporate headcount that have been made during the back half of this calendar year. In some cases, individuals who helped us complete key initiatives have left on their own accord and are not being replaced. In other cases, we've made the decision to eliminate or streamline parts of the organization where we can leverage the work completed over the past 18 months to operate with increased efficiency. We now have a firm understanding of the resources required to pursue opportunities in gaming, as well as high potential growth categories like collectibles and pre-owned businesses. Looking ahead, we have two overarching priorities: achieving profitability in the near term and driving pragmatic growth over the long term. Now that the necessary investments have been made and we have identified the aforementioned opportunity set, we're going to be very judicious with respect to how we allocate capital to the core business.
Yeah, and it sounds like
maintaining a sizable cash position will maximize our optionality and keep us strong against a challenging economic backdrop. If a strategic asset or complementary business becomes available in the right price range, we want to be able to explore those acquisitions. As a result of these steps and our planning, we believe GameStop is well positioned heading into 2023. We stand to benefit from our strong cash position, lack of debt, healthy inventory mix, shrinking cost structure, and disciplined focus on categories where we have competitive positioning. We are also fortunate that the company's exposure to digital assets has been very modest thanks to risk management efforts. The company has proactively minimized exposure to cryptocurrency risk throughout the year and does not currently hold a material balance of any token. Although we continue to believe there is long-term potential for digital assets in the gaming world, we have not and will not risk meaningful stockholder capital in the space. Let me now turn to our financial results for Q3.
they knew.
Net sales.
They knew. Did you hear that?
For one, risk has been very modest thanks to risk management efforts. The company has proactively minimized exposure to cryptocurrency risk throughout the year and does not currently hold a material balance of any token.
Did you hear that? They knew. It's the earning that was yesterday. That was GameStop. That's the. You guys know how it is. I love it. I got 41 people in here. How are you guys doing? I love it. Can't believe you've been here this whole time. This is why Loomis wants to write legislation, because her firm's been profiting off of being a crypto safe haven state. And when they do that, they deregister with the SEC. This fucking lady. You want to hear what she says?
Its fair share of supporters on Capitol Hill, but two of its most vocal proponents are Senators Cynthia Lummis and Kirsten Gillibrand. They're joining us at Consensus by CoinDesk in Austin. Together, they have introduced a bipartisan comprehensive crypto responsibility bill. That's why Senators Cynthia Lummis and Kirsten Gillibrand
so
share
responsible.
a spot on CoinDesk's most influential 2022. Joining us now to discuss is Senator Cynthia Lummis. Welcome, Senator. So right before the market crashed in June, you introduced a long-awaited bill, the Responsible Financial Innovation Act, that aims to establish comprehensive regulatory guidelines for the crypto industry. And I wonder, could it have prevented the collapse of FTX, which was one of the largest crypto exchanges at one point in the world?
Yes, Christine, it could have. Thank you for having me on. The type of rehypothecation that's going on with FTX and some of the other attributes of FTX which caused it to fail would have been prevented had the Lummis-Gillibrand bill.
I don't trust this lady at all.
And so it's given Senator Gillibrand.
Look at what she did here. She did a no action letter on all these products.
Enthusiasm for
with
our
this
bill,
little
and
twerp.
we are continuing daily during these
That
waiting
little-
days of the 2022 legislative session to
look at that.
prepare our colleagues for 2023, when we will reintroduce our legislation.
He liked this.
And really make
That was a
full
day
court
ago.
press for its passage.
I wonder how it could have helped because
That was yesterday.
First of all, FTX
Guys,
is a
that was
Bahamas-based
yesterday.
entity. Also,
So much noise going on. Okay. Okay, so you guys see this connection here? So if you go to the I brought this up because I was watching this interview yesterday with her,
freed himself.
and she's so giddy, right? Because she thinks she's going to be writing regulatory reform. She's going to get in and write her clauses, right? But she if we go to FinHub, public input, right here. Staff statement on Wyoming Division Baking's custody of digital assets. She asked for no action regarding digital assets, just like Hester Pierce did with the safe harbor. Okay? Signed by this little twerp. Fresh out of college. This kid. Look at this. January 21. General Counsel, like straight out of college. Wyoming. For her. General Counsel policy. Sign this. For their firm. Wyoming Division of Banking. And Two Ocean Trust, a Wyoming chartered public trust company. She's greedy little lady right there. Okay. Now she'll go like, oh, Sam donated to the Democrats. It's like,
Backed the DCC.
Actually, he donated to you too, didn't he?
PA, and also another legislation floating around in Congress is the DCA, Digital Commodities Exchange Act. Could these bills have prevented FTX's downfall? Because CFTC Chair Rossen Benham suggested that there are still gaps.
Well, the legislation that was in the Senate Ag Committee, to which the FTX group contributed significant ideas and thoughts, is different from what is in the Lummis-Gillibrand bill. So Senator Gillibrand and I are hoping that the bill that's introduced in the Ag Committee next year that's related specifically to the Commodity Futures Trading Commission will look more like what is in our more comprehensive bill.
I'm sure it will.
And that's the approach that we intend to take next year. The provisions that would prevent it again are to make sure that there's a clear definition between what is a commodity and what
because she doesn't want SEC to touch it.
Security.
She doesn't.
Right now, the way things sit, it's starting to look more like Bitcoin is the only thing that would qualify as a commodity because of the way that Ethereum
Wait for it,
and
but
other cryptocurrencies on which that use the Ethereum.
You know she's going to do it.
Do you think Ethereum could be a security?
I do right now. I think it's possible for it to be sufficiently decentralized that it could later be deemed a commodity. But right now, I
see what she's trying.
I think it's a security because of the way when they move from proof of work to proof of stake, the way in which it is validated or
Custodial services, guys.
Used on the staking and the inability to de-stake right now, I think makes
So they're haven, they're
to be
crypto haven for prime brokers to be custodians out of the purview of the SEC. She's been a safe haven in Wyoming. She's making bank. She's like a little Cayman Islands in the States here. Aren't you, Loomis? She wants to write regulations because the FTX crash.
Yay. Security.
Look at that
What
smile.
do you think of Sam
My little
Bankman-Fried's
smug
media
smile.
tour happening right now? And, you know, House Representative Maxine Waters has also invited Sam Bankman-Fried to come down to Congress and talk to lawmakers on just.
You know, I don't know about you guys, but I really want to get drunk with her at a bar because I bet she's got like the fucking darkest sense of humor ever. I swear. She's got to be so fucking dark.
December 13th. He's been lukewarm on the invitation, but what's your overall impression?
Well, if I were one of his attorneys, I would advise him not to come and visit with Congress. I think that there is potential liability under civil and criminal statutes for things that were done at FTX. Not having a board of directors, having 135 companies, not having a board, a clear financial opening for people to look at what they were doing. It just smacks of fraud, and I think that they need to pay attention to what's going on in the bankruptcy court, cooperate with the bankruptcy court, rather than worry about their public image or testifying in front of Congress.
Now, Sam Bankman-Fried was a frequent visitor of Congress and a huge donator of Democratic campaign causes. And I understand he.
And also, did you guys see the interview with him? Where he, oh, come on. Of course, he can show me every interview but that one. The one where he talks about how he donated to both parties equally. But he donated to the Republicans in the dark. Why is that important?
Had a visit with you. What did he talk about with you, and what did he want?
Well, I think he just wanted to introduce himself and his company and put a face behind himself and his team, visit a little bit about the approach that Senator Gillibrand and I were taking, just to learn more about how we viewed the difference between commodities and securities and just the basic framework for our legislation. So it was more introductory in nature and learning about each other's approaches to digital assets.
What do you think his overall goals were? I mean, a key one I understand was he wanted a bill passed that would allow FTX.
So you guys are asking, like, what's going on here? Like, this is regulatory reform time now. Like, so legislators are going to fight over bills to do their job. And some of them are going to try to make it easy for crypto because that's what they've been doing for the last 10 years. And some of them are going to regulate crypto because that's what they campaign on and do. Some of them are paid off, right? So we're going to have to be extra scrupulous of every single legislator that's touching this stuff right now because they all want to touch it. Okay. LedgerX is not shut down. Oh, if LedgerX is shut down. I don't know where they could move it. To me, it's a hot potato. It's a time bomb. It's a ticking time bomb. We don't know how much is in there. And if any of that goes to zero, that's systemic risk for the rest of the market, right? I mean, how many times do I have to loop that video? Right? Any of that stuff. That stuff's a ticking time bomb. And it's all easy to manipulate. LedgerX is a hot potato. And maybe it depends on who gets access. Maybe somebody wants to use those. Maybe some people don't. But, you know, this little twerp is the one that signed this no action letter. That little kid. Yeah, I called you kid. Little greedy kid. Jeez. Because, you know, she could figure this shit out. That's for sure. Did he dodge the FTX bullet? Sounds like he was short. Right, I mean, actually, so wasn't he involved in GameStop? Yeah. Can't find any. So how did he get out? May have dodged the FTX bullet. The firm's reputation as crypto visionary far from secure. 40%. Helium, which is teaming with Solana. They're gone now, right? Maybe. How did he get out of this alive, huh? Jesus. Yeah. That's it right there. They do this Friday. I wouldn't, if I were you, I'd DRS. These guys just got permission Friday with Europe. They can digitize tokens. See everything I just showed you guys. Oh, hey Kareem, did you just get here? Because guess what? We got him. We got him. We totally got him. I gotta find those again. I just gotta play that on loop all day. It's just so good. Where did I put all that? Look at all this junk. I'm gonna run out of memory. Uh-oh. Connect them all together. There we go. Sequoia, FTX, Andreessen, Horowitz, Coinbase, PayPal, Tiger, Uniswap, and more. And there's more. Yeah, this video is a little different. I just went real time with this. You guys got to find this with me. today. And we did. We found it all. It's done. I'm done. My business is done here. I've been doing this for 2 years. And I'm done today, guys. Today is the day I retire. I did my job. And it feels real good. It's up to authorities now. I'm going to send this to authorities after this is done. They can watch this video. They can listen to my music. That means Gary Gensler's going to hear my music. Or at least his assistants will. I hope they like it. Well, you know, so I'm going to call these people out, and this is how this country works, right? So what's going to happen here is I'm trying to inform you guys. Now it's up to you to do your job as citizens of this great country. And you get to apply pressure. Lots of pressure, because we're apes. You get that? We are the biggest force they've ever seen, and we are bipartisan, and we are apes together strong. We are a force they have never fucking seen. You know what I'm saying? So what's cool is I get to show you guys this DD, and you get to share it, and we get to talk about this. And we get to hold these people accountable, and you get to put the pressure on them. You go, yo, Loomis, it looks like you're using Wyoming for a safe haven for all these custodied crypto assets. Looks like you got a little snug smile there, and you want to put your legislation in. Well, we're going to double check that legislation. We may not even let her pass hers. Oh yeah, they know. Look at that smile. Yeah, I mean, it's on the SEC. Look, here it is. Staff statement on the Wyoming Division Banking, now custody of digital assets. In fact, I think if you go to the SEC, you'll see public statements on it. And it's all... Make a statement. Right, here's the statement. Here's Hester's speech. So Hester... Here's your lawmakers. There's Hester Pierce. She passes Rule 195. That's Safe Harbor 2.0. Okay. It's this. This is the law. That's the Safe Harbor she wrote. Boom. To allow them to do all this. You go to issues. That's me. January 26th. Okay. I told them this. They knew about this. They knew. She knew. She knew I was after him. Check this out. July 1st, 2021. Getting suspicious of AMC tokens not being backed by real shares. Might be affecting stocks market 1-to-1. Naked shorting, market cap. Could be some affirmation that I'm not crazy. You might want to address it in this harbor. I was giving her a benefit of the doubt. Guess what? I may be crazy, but I'm not that crazy. Turns out I was right. Turns out I've been right this whole fucking time. And I just found the proof. I just found the video. I just found LayerZero? Dude, this guy just told us how they do it. And I gotta find the video because I want to just play it on loop for you guys. I want to play this on loop. We got him. We got him. We got him. I got him. That's right. It's a good day, apes. It's a good fucking day. Here we go. Right here. Who's new with us? I don't know, give it a like. I never do this stuff. You don't have to. I'm not into that, you know. Only if you want to. But here, check it out. Oh, my memory's just gonna die. I got so many windows open.
Okay, you use Ethereum. You use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset.
With wrapped assets, the ones we found on the ledger, January 26th.
On chain A, You mint a synthetic IOU on chain B.
Okay, and we've seen that everywhere on every single chain. We're seeing quadrillions of these synthetics. Okay.
And in perpetuity, as long
In perpetuity.
as that IOU exists.
In perpetuity, as long as that IOU exists, guess what? They saved LedgerX. LedgerX is the only approved in perpetuity, approved by Turbert before he went to Citadel. And FTX crashes and they keep LedgerX alive. Why? Because this guy will tell you.
The asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
Boom. It's done, guys. We got him. We got him. That was it. That's it. He just told you how they do it. That's how they've been trying to run us down. And guess what? Fidelity just got approval Friday. Guess what's been happening since Friday? Guess what's been happening every time these guys open shit? DTCC opened on the August 22nd. The day APE was issued. They opened their digital assets. ION. Okay? Catching on? Catching on? He just spilled the beans. He doesn't know. He doesn't know. He's a cog in the wheel. He doesn't know that he just told us everything. I know. Because I'm paying attention.
There's transaction position. But for the cases where you don't send out a message and borrow against that collateral position. And I think that is like a far cleaner
let's try that
rebate. Comes back, your collateral's unlocked. Like, why do we need to bring Sol to Phantom and Phantom to AVAX, right? It makes no sense for the majority. There are some corner cases where you might want to have some asset there to have a pricing and a DEX. Maybe you want to trade against the price of Solana on Phantom. And so then maybe you either need to have a derivative, you can have a perps, you don't actually need to have underlying inventory.
See that? You can have perps, you don't even need the underlying. You just need perps. So that's what they minted on January 26th, perps. But they rolled over every month. They had to roll over, and we were seeing that, right? So what do? They buy LedgerX in all perpetuity, perp swaps. Okay? They can stick them there forever. John, can you hear me? Are all those funds safe, John? Mr. Bankruptcy 2008, John? Huh? Are those funds safe, John?
The large majority, like, we don't need to have WETH on all of these chains. We could have people just collateralize ETH on Ethereum, send out a message, and borrow against that collateral position.
Did you hear that? Did you hear that? That's why she wants it in Wyoming. They get to be custodians. Fidelity's custodians now. FTX were custodians. Jump Trading was the custodian for Robinhood. Guess what happened after all this? Guess who's the #1 Dogecoin wallet? Jump Trading. Right? You guys catching on? Today's this day to celebrate. I'm like crying all morning. I'm just so happy. I love you guys. I love you guys so much. We caught them. I'm not going to stop streaming all day because I'm just going to repeat this over and over and over. And I'm going to try to explain it to you guys as much as possible. If you guys have any questions, just ask. I mean, I'm right here. Okay? This is my best outlet. Elon banned me from Twitter 2 days after he took over, and then he started bashing Gary Gensler. Okay? They won't tell me why. That's not free speech. I'm pro Gary Gensler. You know why? Because he's a fucking badass. I'll show you. You know why? You know why? This is why. Because they tried this. This is what caused our crash in 2008. Gary's at CFTC. Right? And I fucking love Gary. I love Gary so much. Gary, I could kiss your forehead right now. I fucking love you. Look at this. Gary and his... So Republicans tried to like let banks stay to do this. I think this guy's still in there. So again, Spencer Backus of Alabama, any Alabama apes in here, hold this guy to the wall. Don't vote for that guy. Just don't. Fuck that guy. Okay? He wants this stuff. If you catch any Democrats, let us know. We won't fucking vote for them. We will hold them accountable. We're apes here. Does that make sense? This is the most unifying movement I've seen in years. We are apes. We are strong together. We are apes first. We're Americans first. You get that? So what we're doing here, this is democracy. We're going to learn about these people. We're going to vote accordingly. We're going to hold them accountable accordingly. We're going to put pressure on them accordingly. We're going to run accordingly. We're taking this is our place now. Okay? And that's why our country rocks, man. God damn. I love it. So this guy, yeah, fuck that guy. Okay? So these guys, so the Democrats caught on, and they're like, yo, Gensler, do a counter proposal. So Gensler and his staff, so Berkowitz, where's Burke? This guy, Berkowitz. Berkowitz Republican. Berkowitz is a badass. Okay? How am I on batteries? I gotta get some batteries going. What does Berkowitz do? He helps Gary, right? Berkowitz helps Gary. And they write this 17-word insert in the 228-page amendment to the Dodd-Frank bill. Right? There it is. 1. Have a direct and significant connection with activities in or effect on commerce of the United States. Right? That was it. That's the little... You got it in there. Right? Banks didn't even see it. They didn't see it for a fucking year. Okay? I mean, they fought and fought and fought. They were paying off Gensler's staff. They were trying to, you know, Gary stood strong. He fought for us. So it was like a year went by. And then Gary had one of his staff members read it out loud, and they finally figured out that they were being regulated with their foreign swaps. Fucking Gary's a badass. Amazing. So what do? They spend the next 10 years trying to get rid of that. And they got it. They got it with Trump's cabinet. These guys on the right. All three of them appointed by Trump. He's at Citadel. He's at A16, which we just found out is involved. Anchorage, A16, Marc Andreessen. Mr. Andreessen. Wait, that's not a crime, is it? I don't know. Is it, Marc? Is it a crime? I don't know. Whistleblower, expert, fact checker, senior government official, you. I don't know, Marc. How you feeling? You feeling okay, Marc? Oh, it looks like you deleted something, Marc. Why would you delete something? March 8th. What happened March 8th, I wonder? I got batteries yet? Hey, there we go. You guys connecting these dots yet? You guys figuring this out yet? Here's A16. It's probably scrubbed a little bit after the FTX. You guys can see what they have. It's gonna have all this stuff. Right? What's that one company? Who are these guys? Can't even remember. LayerZero? Let's look. LayerZero, there you go. A16. Guess who's in there? This guy. Heath Tarbert. He's in this meeting right here. He's a little shithead, actually. He's actually not even that smart. And they made him like the head of... God, that guy's an idiot. What an idiot. It was embarrassing hearing him represent our country on this call. It's a good video. Fucking Berkowitz is a badass. He's in this video. So these guys are rolling back the infamous 17-word insert that Gary put in. All right? These guys are rolling it back. Berkowitz is sitting here like, guys, I helped write this. Like, this is what caused the 2008 crash. You get Citadel or these firms, right? They start a firm in the UK. Like, you know, I don't know, Hidden Road? TPCAP with Fidelity? Huh? So Citadel starts these branches overseas. And they hide all these swaps. Hide all this shit. Hide it. What happens?
I think that is like a far cleaner.
Isn't essentially issuing just sort of a wrapped token of a different description, that you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So I stake SOL on one. Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B.
So we saw the wrapped on January 26th. They mint them all over the fucking place. Quadrillions of them. Unlimited supply. Just print yourself collateral. Print yourself tokens. Okay?
And in perpetuity, as long as that IOU exists.
In perpetuity, as long as it exists, they not her, but FTX and John salvaged LedgerX, which is the only perpetual swap, which was approved by Tarbert before he went to join Citadel. And this is where he rolled back. So he approves LedgerX, rolls back swaps reporting, joins Citadel. FTX crashes. They keep LedgerX alive. All those perpetual swaps are still alive, John.
The asset over there now carries risk. And there's risk that on the destination contract, that is broken, infinite mint, now your underlying is worth nothing. There's...
Boom. He doesn't even know it. He doesn't even know what he just told us. You spilled the beans, Pellegrino. Boom. Right? Pellegrino's like, I'm making this thing. Citadel's going like, yeah, make us this thing. Isn't that right, Marc? Mr. Anderson. How much are those guys worth? I think I should be worth that much right about now. Horowitz, how much you guys worth? Huh? Oh, 600 million. I think that's a little under, I bet. Oh, they won't tell us their dry power. I think I'm worth about that much. I don't think those guys are. That's what I think. I don't think those guys are worth shit. Are you, Marc? Who's this? Who's you? Oh, that's you, Marc. That's you, Marc. Isn't it? Is it a crime? I don't know. What are you talking to Ken Griffin on February 3rd for? Sounds like he wants to know where his money is, doesn't he? That's what I think.
Risk on the underlying contract that is hacked and drained. Now your IOU is worth.
Did you hear him? It was hacked. Our stock market was hacked. Our underlying was hacked and drained with these products. It's like, what does this guy think this shit is? What does he think that means when he says that? What does he think that means when he's saying we can do this and we can do that? He thinks that that's okay? I'm telling you. These people are fucking nuts. They don't know what they're doing. You got these venture firms and these banks and these market makers and the banks spend hundreds of millions. These kids are making money. They're doing what they went to school for this. They code. They're making money. Guess what, buddy? You're involved in fraud and laundering. I feel pretty confident saying that right now. If I'm wrong, too bad. I mean, I'm a musician. I'm not worth 600 million, am I? You stupid fucks. Look at these guys.
There's nothing.
This
There's
guy kind of looks like he's figuring out, like, aren't they just IOUs?
at the validation layer. There's all of these different layers of risk in the underlying asset existing.
Like, he looks nervous.
So now we're to the point where you have, tens of billions of dollars of assets that are existing in all of these ecosystems carrying the risk. And so
What? This guy thinks that's okay? He just spilled the beans. We caught him, guys. I'm telling you, I caught them. October 8th. We caught them. Citadel's done. Citadel is done. Sequoia, gone. Fidelity. They're involved. They got approved Friday. What's been happening since Friday? I DRS my shares. I own my shares. Do you guys own your shares? Who has custody of your shares? What are they doing with custody, guys? The underlying. That's right. I caught him. We caught him. This was a different video today. You guys were here with me, okay? We did this live today. We figured this out together today, okay? This is our stock. No, it's exposed. It's done. We did it. Cheers. I love you. I'm out of coffee. I'm gonna get some coffee. You guys need anything? You need anything? How we doing? You guys want to pick a song? I like this one. This was like my Blade Runner, like, my synth ambient, right? We got a joke in the synth world, like anybody can make an ambient song, but can you actually make a good one? I give this one like a B-, but it's nice. Getting there. Not really. It's a good lesson. Sometimes you want like just a thrashing beat with just some nice stuff over it, and then you can close your eyes and dance. Should we dance? Let's see here. Somebody mentioned Tartarus. We're gonna do some education here. This is Tartarus, the god of the deep abyss, the great pit in the depths of the underworld, and father of Typhon. Tartarus is a badass. That guy, look at that guy. Now that's a fucking god. Primordial god. He's like one of the originals. Badass. The stormy pit of Tartarus lies beneath the foundations of earth. He was the body of the pit itself, rather. The anthropomorphic deity. He's primordial. You guys are fucking... Look at that. Oh, you guys can't see that. Look at this fucker. That's a badass. That's a god. You know what these guys are? You know what Ken and Marcus are? They're done. Done. Fuckers. We got them. I'm gonna get some coffee. I'll be back. I'm in a good mood today, guys. I'm in a really good mood. Should we have ape day today? Can we just have like an ape party day? Can we? Please? Can we pretty please? We got him. You can just send this video to the SEC right now. Send it to all the authorities. Send this video to Department of Homeland Security. Send it to CFTC. Send it to SEC. Send this to your representatives if you want. I got a whole bunch of videos before this, leading up to this. Today I filmed the whole experience. You guys got to experience. We found it. We got him. It's game over. Power to the players. I'm doing amazing, Grim. I'm doing fucking amazing. How are you, dude? How's it going? How's everybody? You guys doing good? Send it to the Waters. Send it to Warren. She's a badass. She'll go after him. She hates banks. She hates all these fuckers. She'll get him. I love you. I love all you. I love all you apes. We did this. I'm gonna be here all day. You guys have any questions? I'm gonna go over this every half hour. I don't know, man, I'm riffing. I don't even have alcohol. I got my coffee. I pulled an all-nighter. Because I couldn't go to sleep once I saw this. You know, who is it? Where are you? I made a video the other day. I couldn't have done this without you guys. That's why we did this. That's why we did this. Where are you? Yeah, if you go like... I was watching my video, I was reading your guys' comments. Just reading the comments. Where are you? We're gonna find it. This started the start of the rabbit hole for me. That's all it takes, right here. Audio erotic asynthification, you beautiful fucking, you beautiful, beautiful being. Right here, EDMX. EDXM is the missing link. It was totally the missing link. That was the missing link. Thank you so much for posting that. Right, that's Citadel's new crypto firm, right? Their exchange. That comment started my whole rabbit hole. That's what started all this. I haven't slept all night. And we got him. We got him. Cheers. You guys hearing me good? Am I too loud? I got through like compression and shit because I roll like that. Tampa Bay. David, holding him by him. Diamond hands. That's right. This is one of my favorites right here. Diamond fucking balls. Right there. That's right. Mm. You're still listening to Tartarus? Man, that guy's badass. You guys have any? What should we look at? Should we look at more? So I don't, if you guys are Fidelity, they got your stocks and street name. Just authorized. Granted. This says yesterday, but it was really Friday. Announced today, December 7th. It was actually Friday. They've been hot since Friday. Fidelity is doing digital assets with with a TPCAP street name, and I'm just gonna play that video over and over. They have no idea what they just said. I love it. We got them. We got them right here.
You have the ability to at least take some out of the asset. You still have these contracts that hold, you basically have AVE effectively across both chains, but there are so many mitigating factors that you can do to make that cleaner than what we're doing right now with wrapped assets.
Isn't that just sort of a wrapped token of a different description? That you're essentially issuing an IOU on a different ledger, which is
he's like what?
Kind of what a wrapped token is, right? So I stake Sol on one. Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap, you're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
Boom. Boom. That was it. That was it. Now you see what happened? I'm getting a battery. I'm going to throw my batteries. Everybody getting it? They tokenized our assets. Okay? And they can make synthetics anywhere they want, on any chain, everywhere. As many as they want. Quadrillions of them. And when they do that, as long as they're held in perpetuity, because they got LedgerX, and crypto's full of perpetuals. They can drive it to zero. They just print infinite tokens. He said it.
There's
right
risk.
Here.
Thick IOU on chain. Taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done.
That sounds like an NFT, doesn't it? That first one? Doesn't that sound like an NFT? Like they didn't quite figure it out yet? Doesn't that?
With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B.
Okay, so it's all about custody. That first one is custody. Custody. Who has custody? Fidelity gets custody. FTX gets custody. Loomis from Wyoming wants custody. She's on the SEC page. She's trying to write legislation on this stuff, guys. I'd maybe pay attention to that. She wants custody. She's a little greedy old lady, aren't you? Aren't you, Loomis?
And in perpetuity, as long as that IOU exists.
In perpetuity, as long as it exists. So guess what? FTX crashed. But guess what didn't crash with them? LedgerX. LedgerX didn't crash. Right? LedgerX is the only approved perpetual swaps in the country. Who approved it? Teeth Tarbert. Approved LedgerX. Extended swaps reporting. Bypassed Gary Gensler's clause, and they've been fighting it for 10 years. Well, guess what? They paid off the right guy. They paid off the right three people. All Trump appointees, all Republicans. He's now at Citadel. He's at A16. Here's A16 with Marc Andreessen and Ken Griffin. Berkowitz defended all this because he helped Gary, and now he's at the SEC helping Gary because Berkowitz and Gary are motherfucking badasses. Berkowitz is old school Republican. He's by the book. He's fucking honest and by the book and straight to the point. He's actually really fun to listen to. I really recommend this video. This is a historic video. There's only 331 views. Look at this. There's only 331 views. I'm watching it. Ken's watching it. This is the CFTC. We're rolling back foreign swaps reporting that was inserted in the Dodd-Frank Act by Gary Gensler. They've been fighting over this, spending millions and millions and millions of dollars to roll that little fucking line back. That one. Have a direct and significant connection with activities in or effect on a commerce of the United States. Why does that matter? When Citadel or Virtue or any of these fuckers start a little fucking company, a little prime broker in UK, and offload all this fucking risk over there. This guy talks about the risk. You drop that risk and it drops your underlying to zero. All that risk comes back to our country. That's what crashed us in 2008. That's why we put it in the Dodd-Frank Act. That's what. But those greedy little fuckers didn't go to jail, did they? So they spent a ton of money and they rolled it back, didn't they? So what do? Citadel and all these fuckers start these crypto products. And they start doing this overseas. And all this risk is built. And they just, actually, the risk didn't even build up. They just dumped it out there to fucking crash our markets again. Who filed for insurance just last week? Was that last week? Citadel. Send this everywhere. Just send it everywhere, man. I caught him. They're done. Those fuckers are going to jail. They're going to jail. You hear that? Those stupid motherfuckers. We got them. I'm going to be here all day. It's Ape Day. Do you know that? Do you know it's Ape Day today? Do you know that?
The asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
Boom.
There's risk on the underlying contract that is hacked and drained. Now your IOU.
What? Did they just hack our stock market? Yes, they did. That is a cyber attack on our stock market, motherfuckers. You're going to jail. I hate all you. Those guys are going to jail. They stole from us. They stole from millions of fucking apes, and they thought they could get away with it. And instead of paying us, they did what we thought they were going to do, didn't they? They went to go crash our markets, didn't they? Didn't you, Ken? Huh? They did. They rolled back Gary's swaps reporting requirement. Didn't they, Tarbert? What's going on with Tarbert? Do you think Tarbert's going to go to jail? I think he should. I think he knew what he was doing. I think he was paid off to do what he did. I think he created systemic risk in our country, and he knew it. They all knew it, and they were paid to do it. I'll give this Pellegrino the benefit of the doubt. He doesn't even know he's spilling the beans right now. He's telling us everything.
Is worth nothing. There's risk at the validation layer. There's all of these
He's just a dumbass.
Different layers of risk in the underlying asset existing on. So now we're to the point where you have, tens of billions of dollars of assets that are existing all of these ecosystems carrying the risk. And so
they're counterfeiting collateral. They're counterfeiting assets. They're counterfeiting money. They're counterfeiting risk. And what do? They hacked our fucking stock market. Okay? You want to talk New World Order? Destruction of the dollar? It's those motherfuckers. I got them. I got you, didn't I? Marc? You scared, Marc? Mr. Dr. Andreessen? Huh? Is that not a crime, Marc? Huh? Because he's interviewing Ken Griffin on February 3rd about GameStop. He seems to be pretty darn scared about his investments. So what do? A16. A16. Where does Quintens go? Day before Benham comes in. Quintens and this bitch. I'll call her a bitch. They extend swaps reporting a day before Benham got in. You remember that letter, apes? You remember that? That was those two fuckers. What does he do? He joins Anderson's company, A16. Because he's a stupid motherfucker. He's so fucking stupid. Oh my god. These guys... I went to college in Boston, right? These were all the stupid, dumb motherfuckers at BU that get fucking drunk and they end up running our country and they don't know... They're the stupidest motherfuckers out there. Brah. I'm not your bro, brah. Quintans. You stupid fuck. I think he should go to jail too, man. Fuck all those guys. We got you. Where are you working, Quintans? You working at A16? You think that's a sound company? Stupid. We got him. You guys get it yet? It's on the fucking ledger. Jump trading. Jump trading is the crypto side of Robinhood. They have custody. Okay? So when Robinhood tokenizes all of our assets, that goes to Jump. Okay? What happened? Doge goes... Our stocks crash, Doge goes up. What happened on the morning of January 26th? Rendoge, you stupid motherfuckers. It really just doesn't get dumber than this, guys. I love it. I love it. I love it. I love it. These guys, look them up. Rendoge, January 26th. That's not them. Where is they? Where are they? January 26th, they announce it. They link Dogecoin with Ethereum. Okay? Jump trading, pump and dump, motherfuckers. We got him with a fucking pump and dump. How involved is Elon in all this shit? Huh? I want to know that now. Elon's pumping Doge. Elon was really interested in this, wasn't he? He was asking questions. You don't ask questions unless you got money in this. You know what I'm saying? Marc's asking questions.
You know, just more generally, I would.
He's talking to Ken. Elon's talking to... Why am I getting banned permanently from Twitter 2 days after you take over, Elon? Is it because I support Gary Gensler and I'm calling all this shit out? Huh? 2 days after he bans me, he starts bashing GG. GG's a motherfucking badass. Elon, he's coming for you, Elon. You stupid fuck. I got you guys. I got all you guys. What happens after that? They pump it in XRP. You know who XRP are? That's Ripple. SEC's going after them because Gary's a motherfucking badass. You know who XRP is? XRP, for all you tinfoil Republicans. XRP, that's your new world order here. World Economic Forum. There you go. Destroy the dollar. Take it over. This is the international banks right there. They want to. They just hacked our markets and they're going to destroy them on purpose because they didn't want to fucking pay us. Because they're greedy, stupid motherfuckers. They deserve everything that's going to come for them right now. I got you guys. I got you guys. I'm telling you. I feel so good right now. I love you guys. This is a good song. isn't it? I make good music. Do you guys know that? There's a lot of good musicians out there and they need your support. I don't know why you're buying strangers' music. You know people. You have friends. And guess what? You're going to be able to pay whatever you want for your friends' music now. You get to help them out now. We're going to help so many people. These guys are going to jail. I think I need a lawyer. Where are you lawyers at now? Huh? Wouldn't help me before. Fuck all y'all. I did it. Huh? Didn't want to protect your country, didn't you? You wanted your money. Fuckers. I got them.
You have the ability to at least take some out of the asset. You still have these contracts that hold, you basically have AVE effectively across both chains, but there are so many mitigating factors that you can do to make that cleaner than what we're doing right now. Assets is, okay, like we don't need to have perps to do it. So you stake your some, so great. We'll just, I think that
a wrapped token
cleaner.
Isn't that just sort of a wrapped token of a different description, that you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So I stake Sol on one. Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
Boom. The stupid motherfuckers. Did you hear that? We got him. I want some ledgers. Where's my ledgers at? Why can't I find my ledgers? It's on Etherscan? I want to look at them. I want to look at my ledgers. Oh God, it's beautiful. It's fucking beautiful what we got here. It's so fucking beautiful. These guys just tried to crash. They just tried to crash our home markets. You realize that? How fucking crazy is that? We called it. Citadel just filed insurance, didn't they? Oh my God. I've been right this whole fucking time. The whole time. I got the videos to prove it. You go check my videos right now if you want. You can see all of this come out. I did this one live today. We did this together today, Gates. I haven't slept all night.
There's risk.
We got him.
On the underlying contract that is hacked and drained. Now your IOU is worth nothing. There's risk.
Boom. Boom. It's amazing. It's absolutely amazing. Any song requests in here? Let's see here. That's a good one. These are all Greek gods. Pollux? It's Ape Day. Did you guys know that? Cheers. Oh, that's too much. I can't do that. It's totally Ape Day. I got 36 gods here. I think I only had like 4 gods left. I should probably just do those. Yeah. It's amazing. Absolutely amazing. Who's this guy handling the bankruptcy? John? Alex Partners at Wall Street Journal. John Ray? Guess what, John? I know what's going on up there. You can't do what you did in 2008, can you, John? We know. We know what happened, didn't we? Oh, that guy, yeah, that's right. He sweeped his. I think he sweeped his internet presence. It makes sense. It's a big case. Yeah, they had their earnings report or their shareholder meeting yesterday, and they told us that they weren't exposed to crypto. They know. They know what's going on. Did you guys see the meeting? I shared it on Mask Investor because he's cool. If you guys don't follow him, just follow him. Shareholder meeting, GameStop, they know. They aren't exposed to tokens. They told us that in the meeting yesterday. I haven't even looked. What are we at? Should I pull it up here? Everybody can see it? Oh yeah. Yeah, I like that. Okay, okay. Okay. That's nothing. Ain't seen nothing yet. But you know what they say. You know what they say. Oh, after these messages. What are you doing, Wells Fargo? This is the stock right now. This is our stock right now, guys. We see that every day. You guys looking at the chart right now? It looks like this.
Try and bend the spoon. That's impossible. Instead, only try to realize the truth.
What truth?
There is no spoon.
There's no spoon?
Then you'll see that it is not the spoon that bends, it is only yourself.
That is so true, guys. And there's no fucking spoon. They're messing with you. Okay, what we're saying is not real. This isn't the price. It's not. It's not the price. You get that? I mean, it's fine. You can look at the chart. You don't... But why? I know what mine are worth. That's my price. I know what the price is. I got my price. Where's that Twitter post? Was that the 28th? You guys remember this? It's on the ledger. And then where'd all that go? It went into XRP. Jump trading. Kind of. I talked to that guy. Guess what they did? A day later, 2 days later, they come out with this article. He's the head of their crypto unit now. It's funny how that works out. Funny how I'll tell people about this stuff and then... Isn't that funny? That's so funny. Jump. You dogs, you. You dirty dogs, you with your Doge. Your Ren Doge. On our ledger. On our fucking ledger. No wonder Elon's calling up. It's a good day, Apes. It's a good day. I'm sorry I'm so annoying right now. I just can't. I'm like... I've been working on this for a long time. This has been a big deal. You know, my friends and family had to deal with me for the last 2 years. You guys get me for today. On a good day. I made some songs for you guys too. These are my Greek gods. I really recommend my Greek god playlist. I'm really proud of that body of work. What's funny is I didn't record some of those, like high quality. They only exist on a stream. And I wish I kind of recorded a nice high quality version now, but art's not eternal, right? Some of my best songs I never even recorded. Play up almost all the time. But I made you guys some songs. Let's see. Okay, we got YOLO Group. We got FUD PhD TDM. YOLO Holdings Inc. Let's see. We finished To the Moon. He's got some memes. What is YOLO Group? I feel like it's a beat. I've gotten so much better since then, so we'll see. It's hit and miss around this time. Oh, that's nice. Some smooth shit. Okay. Okay, we'll chill. We'll bring it down. YOLO Group. Cause I fucking YOLO'd. I don't know about you guys. I went all in. All in. January 2021. To the YOLO Club. Whales are talking about us. Which whales? There's a whale, there's a whale, there's a whalefish, she cried, and the whale was in full view. Whalefish, whalefish, whalefish. You guys know that one? Oh, I probably can't even play it. Fucking... Man, these copyright people, they've destroyed so many musicians' lives. I don't know if you guys know that. I used to be able to just give you guys a CD. It was done. Now we got like these $1,000 phones. I can't give you music. They make it impossible. All this fancy technology, you can't do anything. They do. I mean, they just destroyed us. The unusual ones. Oh, I like that guy. He's cool. I like him. He's a good source. He just puts it out. Is he telling everybody it's Ape Day? Bum, dum. Dum, bum, 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 bum. Bum, bum. Huh? This is me today. This guy. Look at all these windows, bro. Look at all that. Ain't got nothing. Oh, is this the wormhole one? For better or for worse. Better hope. Yeah, the industry better hope they pull this off, huh? They didn't. Because I got you, fucker. Did you dodge it? Did you dodge that FTX bullet? Did you, Marc? Huh? Did you have a malfunction? Yeah. Oh God, I love it. That guy's worth like millions of dollars. Did you know that? I feel like $1 million. I feel like, I don't know, like 600 million? How much is A16 worth? I feel like I'm worth that much. I like art too, Ken. I think I like some of the art you got. I think there's some public spaces that would really like that stuff. I know a couple museums myself that would love something like that donated. Just donate it. Right here. Looks like they're worth 600. For what? Hiring. Okay, they're worth 600. They're worth 600. They're gonna have A16. These guys are gonna help A16. Where's A16? What's A16 worth? They're gonna hire this stupid fuck? Cause what? He did you a favor? You stupid fucks. And you guys get to watch all these videos, and you get to see all these people I call out. And guess what? We're not gonna vote for those fuckers anymore, are we? No. I don't care who they are. I don't care if they're liberal or Republican. We're not voting for them, are we? No. You think we're gonna let them touch our regulations now? You think we're gonna let them touch our bills? I don't think so. We're gonna have the third largest regulatory reform coming up here, guys. I think Gary talks next Wednesday on the 14th. He's coming. Gary's coming. And guess what? This happened before then, didn't it? We got this done before the 14th of December, didn't we, apes? Gary's coming. Oh, where's my favorite Gary picture? Man, I got some good Gary gifts. You guys have no idea. I can't post that stuff here. Can I find it? email it to myself. I'll do it. I'll do it. Gary, you big lovable man, you. I'm giving you the biggest hug. You guys were drinking the Kool-Aid. I told you. I told you. That's okay. I'm used, you know. We did it. What's going on here? I gotta see if I can find it. Oh, you guys will like this one. I hope. I got some good. I got some of the best memes, man. I was here from the beginning. I'll tell you what. Memes make the ape world go around. I think I can do a couple files here. How many do I got left? Let's see. I want to find it. Come on. Sorry guys, I'm gonna be here all day. It's Ape Day. I'll play the videos like every 30 minutes or so, and I'm having my coffee. Oh, here it is. Oh, yeah. Okay, mail. Oh, he knows. Oh, come on, yeah. And you guys are helping them. Gary's fucking cool. But you know better now. That's what we're here for. Look at that. There's Gary. He's coming. He's coming, Marc. He's coming, Ken. You guys like that one? That's right. That's me right now. We're just gonna pull some out here. That's right. Pull some memes out. You guys know how it is. I got so many. I got some good memes. You guys have no idea. OG Ape here. Bum, bum, bum. You do you. I do me. We're just individual investors here. We like the stock. We invest in American companies to give them capital to be successful American companies because we need them for things, because we're humans, because we need shit. That's why we do this. You know what's cool? I'll show you what's cool.
But I value intellect.
Well, not that. Well, I mean, that's cool, but let's see. I showed this on one of my other videos. I'm not a financial advisor. I'm just a musician. But I tell Robert Schiller here. This guy's cool. So you can do this. There's like Yale courses. And this is kind of cool because there's one from 2008, and then there's one from 2011. So one like right at the crash and one after the crash. And this guy's a really good professor. Really cool stuff in here. If you guys want to learn some stuff, I really like this guy. There's your playlist. There's your free college education, guys. YouTube University. It's together strong. So this is cool because, like, I think he goes into regulation.
Regulation and human misbehavior.
I love this guy. He's great.
Of my previous lecture, in a sense, which was about behavioral finance and about human foibles. But now I want to go on to talk about what we do about some of these things, and that means talk about regulation. So I think that a regulation of finance, financial markets, and institutions is substantially directed at dealing with psychological problems and the tendency for some people to exploit human weaknesses and manipulate. And,
Ken. That's all his business is. So Ken has like a machine learning business. And he just tries to fuck with people. That's what Ken does. Guess what, Ken? You owe me some fucking therapy sessions, Ken. You stupid fuck. You're fucking with all our heads, man. Hacked our... What? Anyway.
Take money from other people rather than help them.
Yeah.
But I think regulation goes beyond this because it also has another more technical side, and that's about making sure that the financial system works well. For example, regulation.
Yeah, Bigums was checking out my stuff. We were supposed to go on last night, but he never got a hold of me. So I ended up just doing this without him, I guess. But yeah, he's cool. Master Investor, Dave Lauer, he's cool. I like Dave. He's working with the Hill, trying to fix things. I want to ask Dave how Mike Lee was. I want to see how Mike Lee was to work on some of these regulations. But that wasn't that fun, was it, Dave? Anyway, this guy. You know what's cool is he talks about like one of the first stock markets. And it's called the East Dutch India Company. And there was a similar event. And there was this really rich guy, and everybody thought he was cheating them. Kind of similar thing, like he shorted the market, right? And so they did what we did, right? They just when you get cheated out of your money like that, like we did, you want to know why and you want to know how. And historically, this happened. Like this happened with one of the very first markets, and Schiller talks about this. Really cool. And so what happened was they ended up having a financial revolution, a financial renaissance. Everybody cared. Everybody they wanted to learn. I didn't know any of this stuff 2 years ago. None of us knew any of this stuff. We got more in 2 years than most people get in 20. Okay? We're talking about swaps and stuff. Like, absolutely incredible. These guys have no idea what they started. And I did this at the end of my last video, but they woke the beast. Okay? Robinhood, all of them. They woke the beast. You guys, and I'm going to do this. Let's see. You guys like movie theaters? They made a new movie for us, just for us. You've seen this? Yeah. That's right.
the one to fear, Prime. There is a darkness coming.
We got this, guys. They woke us up. Okay? This is our market now. Okay, we gotta do this right. See, that's what I'm talking about. And yeah, I put a link for Schiller's classes. Really cool. It's 2011, but hey, man, you got it right there. Some Yale classes. You think these guys up on the hill or these guys working at these companies know more than this? These coders don't even know what they're making. They're making all these crypto products. They don't know anything about trading. They don't. It's amazing. Amazing. We're here all day. These guys, Zero Labs. Everybody look into LayerZero. LayerZero. There they are. Connecting all blockchains together. We got Dogecoin, we got LayerZero. There's just piles and piles and piles. And miles and miles and miles. They don't know where to stop. How to get to Silvergate? Aren't these guys got in trouble? Absolutely incredible. You guys remember Gary talking about the Blancs? Am I too loud? Oh my gosh, I'm just so excited right now. Okay. Come on. You guys remember the Blancs?
Did you know that the first cyber hack actually took place in 1834?
You guys know that? Ba-dum-bum.
So in 1834, the Blanc brothers in
Why would I tell you
Bordeaux,
that?
France, bribed telegraph operators to tip them off as to the direction of...
What? That sounds familiar. That sounds like payment for order
the
flow.
market. Therefore, they gained an information advantage over investors who waited for the information to arrive from Paris. The brothers, they weren't convicted for their actions as France didn't have a law against misuse of data networks. So one could say the Blancs pocketed their francs. Point
Clue, hint, you know?
All right.
First cybersecurity
now you may
hack.
be wondering what all this has to do with the Securities and Exchange Commission. Well, I think it's telling that the world's first cybersecurity attack involved securities. Nearly 200 years ago, after the Blancs hacked a mechanical telegraph, our securities infrastructure remains an important part of the world's and America's.
So what, they paid for order flow? Is that what they did? Market flow? Now, these guys are, Citadel's a machine learning company. You pay for order flow. You use like Instanet, right? And all these social media. All these social media combers, they comb social media and their Facebook and your phones, and they know when you take a piss. Okay? They know everything we're saying on Twitter and Reddit and everywhere. And they tell their machines to make them money. Okay, so that's what Twitter is. It's not advertisers. It's Wall Street. They're paying for data. And I tell you what, humans don't have a chance against machine learning. So they're paying for order flow and social media data. They give it to their machine learning, and humans don't have a chance. Okay, that's what they did. I consider that a hack. But this tokenized asset, where is it? We're going to play this all day right here.
Just sort of a wrapped token of a different description, that you're essentially issuing an IOU on a different ledger, which is kind of what a wrapped token is, right? So I stake SOL on one. Yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap, you're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's
Boom. If it's all held in perpetuity, is it all held in perpetuity?
The crisis created by FTX further confirms the need for a whole-of-government approach to regulating the conflicts of interest event, and where federal authority, after all the answers be triggered.
Okay, go ahead. I gotta find
the crypto industry lacks the customer protections that Americans expect and deserve when trading in U.S. markets. When exchanges accept customer funds for trading, they must not be allowed.
It's like I could just post and tag it.
LayerX.
LayerX.
This story,
here we go.
That there is one exception in this story.
Isn't there? There is one exception.
One exception is LayerX, a derivatives exchange and clearinghouse purchased by FTX and registered with the CFTC. John Ray, the CEO appointed to navigate the FTX companies through bankruptcy, said that LayerX has a, quote, solvent balance sheet and responsible management. Customer money was safeguarded and is accounted for.
Oh, well, if he said so, then that must be what oversight is, right? If he says it's okay. So it's all there.
There's risk contract, if that is broken, infinite mint. Now lock up an asset on chain A. You mint a synthetic IOU on.
So we're seeing the ledger. They get it on chain A, on Ethereum. They mint it anywhere they want. They're minting it on every fucking chain they want.
Chain B. And in perpetuity.
As
long as that IOU exists.
That's what LayerX is, guys. LayerX, the one and only, by this guy who works at Citadel. How about that? But does it still exist?
John Ray, the CEO appointed to navigate the FTX companies through bankruptcy, said that LayerX has a, quote, solvent balance sheet and responsible management.
Yeah, but do they have funds?
Was safeguarded.
Oh my gosh. It sounds like they exist in all perpetuity. And you got our underlying on our stock market. And then you're putting it on Ethereum and Solana and all your stupid fucking shit coins. You stupid fucks. They hacked our stock market.
The asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing.
Boom! You stupid motherfuckers. We got them. You hear that? You hear that? If I'm wrong, call me out. Somebody call me out. I've been yelling this for 2 years. Nobody's been telling me I'm wrong. Nobody. Okay? I've been all by myself. I thought I was fucking crazy. Jump. DevNet, my ass. That was on mainnet, Pyth. Ran by Jump, the crypto arm of Robinhood. Those fucking glitches were on mainnet, weren't they, you stupid fucks? Tried to gaslight me, you stupid fuckers. I caught you. Pyth. Where's my old videos? This is from over a year ago. Where's my fucking videos? Oh, it wasn't on main. Yeah, it was. That was on mainnet. I don't even know where my videos are anymore. Maybe they're gone. Wouldn't that be amazing? And why is Elon interested in all this? I don't know, maybe because they dumped all this shit into Dogecoin, huh? Didn't they? With Ren Doge on the ledger. January 26th, 2021. Huh, jump trading. Robinhood. I mean, we saw a correlation. I thought it was it. But guess what? You're on the fucking ledger, you stupid fucks. When did Ren Doge come out? January 26th, 9 a.m. How about that? What happened 2 days after that? What happened on February 2nd? Huh? Huh, Ren Doge? FTX buys them. What happens to XRP? They dump Doge, and all of a sudden the world banks they're going up 100% in a day. Aren't you? World banks. You stupid fucks. I don't even know where my videos are. It's in there. Glitches. Glitches get stitches, motherfuckers. You stupid fucks. I love it. Happy birthday, apes. It's our day. Dude, I got banned from Twitter. Permanently. For breaking the rules. What rules? You're banned from Twitter for breaking the rules. Done. Gone. And then Elon starts ripping on Gary Gensler. What's that? Like, what? You guys know me. I'm like the only pro GG. I mean, Gary Gensler's a motherfucker back. Hey, Elon. Oh! Oh! Here's Gensler. I love it. These guys are so scared shitless. They're crashing they're trying to crash our market. They're trying to destroy our dollar, aren't they? XRP, world banks. You think that's fun? You think it's fun to crash the dollar? To crash our markets? You want to put all that risk over there? Tarbert? You knew better. You knew better. You all knew better. Didn't you? Tarbert? Quintenz? Stump? You knew better. I see. Chief Legal Officer, okay. Responsible for the firm's global legal compliance, surveillance, and regulatory affairs. Ah, sounds like you get paid a lot, Heath. Sounds like you get paid a lot. Must have been fun going from CFTC, rolling back swaps reporting, allowing LedgerX, and then going over here. Huh. So LedgerX is for sale, guys. It's alive. It's for sale. Who wants it? I don't want it. It's a hot potato. That's a ticking time bomb. Citadel might want it. Sequoia and Paradision might want LedgerX, don't they? I don't know. I'm just making this shit up as I go, man. I'm just a crane-eating ape. I just like the stocks. Am I getting suppressed? Of course I'm getting suppressed. I play music. What do you think happens to musicians? You think we're supposed to make a living? Oh man, I'm so happy right now. So this is crazy. So this this Marc guy, he's got a background. Mr. Andreessen. Lawyers are probably going this like, this guy's crazy. He's got nothing there. They have no idea how happy I am right now. They have no idea who's watching this right now. This guy's got a history. Don't you, Marc? What does Marc like to do? Oh, it looks like he's into web browsers, Netscape, Silicon Valley, software. Wait, are you telling me let's see. I just want to see here. Just Google. Really? You guys have those messages from the lawsuit? Oh, is it sometimes subjective? I'm being subjective right now, aren't I? Am I intelligence too subjective? At least I'm doing it on YouTube. Oh, I guess oh, that's right. I'm not allowed to read this shit. That's how that works. April 25th, 2022. If you are considering equity partners, my growth fund is in for $250 million with no additional work required. Sure, that'd be great. Have you an equity partner? Can I follow up with someone? Jared Burchell. Wow, that's interesting. That's very interesting. So Doge is involved. Twitter's involved. Andreessen's involved. Elon Musk. We're just a big happy family, aren't we? Do you regret banning me yet, Elon? Huh? Doge? Jump? You guys? Does it feel good? This guy, whistleblower, expert, fact checker, senior government official. You. Oh, what's this deleted tweet? I bet Elon knows. All those deleted messages with me and FTX? All of them except for the last few? I bet Elon knows what those messages say. With Brett Harrison, FTX US branch, when I talked to him about this stuff, and what does he do? They buy LedgerX after I talked to them. They knew. He knew. Brett Harrison knew. Because I told him. And then they buy LedgerX. They didn't listen to me. They thought they could make some money. Didn't you, Kanav? Brett. FTX. Huh? Did you make money? Okay, new battery. Okay, new song, new battery. I gotta calm down. I'm just so excited. These guys, I tell you, you have no idea how happy I am right now. They just got permission Friday. They got their digital asset branch. They're sending it over to the UK. They're sending it to Hidden Road. They're doing this right here. What is Fidelity doing with your underlying?
Isn't that just sort of a wrapped token of a different description? You're essentially issuing an IOU on a different...
Do you own your stocks? No, Fidelity owns your stocks, don't they?
Ledger, which is kind of what a wrap token is, right? So I think so long.
Where did apes go? Where did apes go? After Robinhood, because we got screwed by one broker, so we go to another broker. What do? They open a digital assets firm for lending.
One, yeah, sorry.
No. The general problem with wrapped assets is, okay, you use Ethereum, you use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset.
And is that so? Like, do you guys think those are NFTs? Do you guys think those are the degenerate apes? You guys know about the degenerate apes? You know about the degenerate apes. It's in my videos. The Degenerate Apes Academy. You guys not seen these guys? Wow, that looks like an ape. Oh, look at that! It's crane eating. Wow, they got hundreds of these. Man, those are really interesting NFTs, aren't they? Kind of makes you wonder who made them, don't they? Let's see if I could show you guys who made these apes.
Asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's risk.
Boom.
On the underlying contract that is hacked and drained. Now your IOU is worth nothing. There's risk at the validation layer. There's all of these different layers of risk in the underlying asset existing on. So now we're to the point where you have, tens of billions of dollars of assets that are existing in all of these ecosystems carrying the risk. And so you have the ability to at least take some out of the asset. You still have these contracts that hold, you basically have Aave effectively across both chains. But there are so many mitigating factors that you can do to make that cleaner than what we're doing right now with wrapped asset.
Yeah, I bet you can. So clean. So look at this. Hey, there's Citadel. Yeah, if you guys follow my videos for that? Well, who's this guy in the upper left? Oh, well, that's Jordan Prince from Citadel, isn't it? Well, that's pretty interesting. Well, there is Jordan Prince. He's working with the OG Metaplex crew, and there's Bartosz Lipinski, ex-Citadel, and Coder, ex-Citadel, Bartosz Lipinski. Bartosz Lipinski coded for Jump Trading. Bartosz Lipinski coded for Pyth. Bartosz Lipinski coded for Solana. Bartosz Lipinski and these guys made our degenerate apes, didn't they? Yes, they did. But who's this Metaplex crew? Well, that's Adam Jeffries from Citadel. No way. Those are really cool NFTs. Too bad you guys aren't apes. Not real apes. Are they? Oh, and look at this. Here's Wake Up to Bring Doge to DeFi, January 26, 2021. Guess what's on the ledger? Guess what had a pump and dump? Huh? You guys seeing this? You guys getting it yet? Does it make sense? Does that make sense yet? It's on my old videos. Rendoge, look it up. GME to Rendoge. We got it. We got the connection. But, luckily, Robinhood doesn't have... Oh, yeah, they do. Jump Trading has the largest Doge wallet, doesn't it? Don't you, Jump Trading? Kanav. Got them all, man.
Love to hear, and I know everybody would, kind of from your perspective, like what happened? Like, what is the true story of what happened during that period?
Oh, I bet you want to know what happened, Marc.
So, in broad strokes, Melvin Capital was short a variety of stocks that became of interest to rather savvy and sophisticated retail investors.
Oh, we're so savvy and sophisticated, guys. I love that.
Who realized that the amount of stock short was just disproportionately large relative to average daily trading. And these retail investors, realizing that there were these unduly sized short positions in the marketplace, started to buy these stocks that caused the hedge funds that were short these stocks to start to incur losses. And, you know, when firms are losing money, they almost reflexively start to cut their own risk. So in this case, they start to cover their shorts, and you end up in this reflexive pattern that as retail's buying the stock, pushing it higher, the hedge funds that are short are covering their shorts, pushing the same stock price higher. And this virtuous circle becomes incredibly painful for the hedge fund managers that are short the securities of interest. And
I mean, at this point, you know, it doesn't matter if you're short or not. You know, they're creating instruments, right? It's absolute madness. These guys are all in it. It's insane. And I know there's investigators out there, and I know there's crypto people out there, and there's smart people out there, and I've been screaming this for 2 fucking years. Where were you? This infamous blockchain that fixes everything, huh? You can cyber attack our stock market. Didn't you?
Okay. So let's. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that,
still feel like that's a
underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B, and in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's risk.
Boom. That's how they do it, guys. Infinite shares. That's the concept of infinite shares, isn't it? Right there. You create infinite synthetics. And this guy's talking like that's like how markets should work. What the fuck is that? Like, what has he been doing? If that's what he thinks, if he thinks that's how markets should work, and he's building this stuff, like, who told him that's how markets work? Huh? Who handles counterfeits? FBI? Huh? I bet they'd love to see this, wouldn't they?
Risk on the underlying contract that is hacked and drained. Now your IOU is...
Wait, what? It's what?
On the underlying contract that is hacked.
Oh, the underlying is hacked? Like our stocks?
And drained. Now your IOU is worth nothing. There's risk at the validation layer. There's all of these different layers of risk in the underlying asset existing on. So now we're to the point where you have, you know, tens of billions of dollars of assets that are existing in all of these ecosystems carrying the risk. And so you have the ability to at least take some out of the asset. You still have these contracts that hold, you know, you basically have Aave effectively across both chains. But there are so many mitigating factors that you can do to make that cleaner than what we're doing right now with wrapped assets.
Oh my gosh. How the pre-crime. What is this, Tom Cruise movie?
And then the last thing is this concept of pre-crime. So people came from this world of everything being in an atomic state. So you were on Ethereum and you get your smart contract audited, but if it's broken, everything's gone, right? There's just a bug, people can execute it, it's gone. When you're going between chains, you lose atomicity, which sucks for some reasons, but like there's some hidden benefits. And so you cannot have atomicity between blocks, between chains. You have this small amount of latency. Block resolves here, you need to get into the block over here. And so that gap provides a really interesting opportunity. And we built this thing we call pre-crime, which basically takes the state of whatever you're doing, takes the action, forks every chain locally, runs the state transition, and then allows every application to define its own set of invariants, and then checks the final state against that list of invariants. So like what we use for Stargate, one of the invariants is solvents. If somebody is if this message, you know, somebody, a hacker, whoever it is, has stuffed some clever bytes, or whether they're not, if this message says we're giving out $20 million on the other side, is the system still solvent? Do we get 20 million over here? Do all the numbers add up? Is the accounting there? And if it doesn't, then the message is not delivered, right? In a very simple thing, like everybody watched the Nomad hack in slow motion. This was like 2 hours, hundreds of people were just slowly draining this thing. Everybody knew every single message going across was wrong. and there was nothing anybody could do about it. There was
Wow, that sounds like a real safe place to hack into our stock market. Sounds super safe. So secure. Thanks for that, institutions. Really appreciate that. Really appreciate you guys looking out for the American people and humans and human needs. Wouldn't want to risk human lives, would we? Institutions. You get one free pass. That was 2008. That was it. It's gone now. You don't get a free pass anymore. Did you know that? We don't give you free passes anymore for this stuff. We don't. It's just unbelievable. 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 Oh yeah. Here's their investments. Look at all this. All of them. Mr. Andreessen. There's your safe harbor. Mr. Pierce 2.0. There's me. January 6th. I tell them everything. They knew. They knew. I have concerns that these instruments, along with perpetual swaps, are being used as tools to hide and launder FTDs, specifically AMC, GameStop, and FTDs. We know that firms mismark FTDs into swaps and derivatives to hide them illegally. These tokenized securities were created by think tank out of Switzerland that provided tax avoidance advice on crypto safe havens, like Wyoming, including Belarus in Germany. Miss Loomis. Sketch as fuck. It looks as though Binance won't even touch tokenized securities anymore, and CM Equity of Germany has ditched out as well. Because they did. They ditched out in December, didn't they? So this wasn't backed at all. So they've been lying. These tokens aren't backed by actual securities, but instead are called derivatives backed by cash now. Furthermore, FTS acquisition of LedgerX, Brett, allows firms to not only launder FTDs into swaps, but they can now avoid rollovers by hiding them in all perpetuity. Furthermore, by using burner wallets, we'll do that later. It keeps them from getting margin called as a company, doesn't it? You let the wallets burn off, you'll crash the crypto, but you won't get a margin call, will you, Ken? Great for unloading risk. Keeps you from getting margin called as a company. These automated wallet liquidations introduce massive risks into crypto markets. They do. You know what regulators call these? They call them disruptive events. Do you know how long it took me to figure out what disruptive events meant? Do you know how many fucking filings I had to read until I fucking figured out what a disruptive event meant? Assholes. Damn. Could potential. These automated wallet liquidations introduce massive risks into the crypto markets. Exchanges, like FTX, and any related markets, and could potentially wipe them all out. And since they've attached this to our stock market, they've now introduced this risk into our markets, especially when over-leveraging is involved. Well, were they? Yeah, they were. Since tokenized assets tie these markets into a stock market, it introduces systemic risk into our markets as well. You know, I'm pretty sure that one guy calls it a hack. A hack on the underlying, specifically, is what he said, didn't he? He said it was a hack on the underlying, didn't he? Yeah, he did. Considering the tokenization of securities, the acquisition of LedgerX, the umbrella of deregulation and lack of reporting, the skirting of derivatives reporting through recent CFTC changes, specific partnerships of major institutions into this sphere, including Citadel, Paradigm, Sequoia, Virtue, Jump Trading, Jane Street, Memex, etc., it's hard not to think that this is exactly what's taking place. I'd also like to take note that Tarbert recently of CFTC that approved LedgerX as the only perpetual swaps dealer in the States now, works at Citadel, and Quintens, now at A16, a previous member of CFTC, extended swaps reporting for 3 years as well. FTX now owns LedgerX. creating the perfect storm for crime, laundering, and systemic risk. This all stinks to high heaven, including this safe harbor. Pierce has a voting record of being against retail and doing whatever it takes to protect these firms and their crimes. Don't think we don't know, and don't think we aren't watching. Apes aren't leaving, motherfuckers. And we didn't. Did we? I didn't leave. Did you guys leave? That's right. I didn't leave. Oh, that wasn't even the first time. First time was on July 1st, 2021. Getting suspicious of AMC tokens not being backed by real shares. Might be affecting stonks. Market 1-to-1. Naked shorting. Market cap. NA. Sus. Could use some affirmation that I'm not fucking crazy. Or you might want to address this in the harbor. I thought it was fucking crazy, guys. Guess what? I'm crazy. I'm goddamn crazy. I'm crazy goddamn ape. That's right. Go back to these issues. Oh, there's the one that's closed. What is this one? Grace period for existing tokens. M. Taylor on May 7th, 2021. These regulations will create a favorable environment for new tokens in early stages of development. However, the developers are holding existing tokens that do not wish to be regulated as securities, right? Because they made our tokens before May 7th, didn't they? Need to have time to implement changes to their networks in order to operate within the preferred regulatory, not the current regulatory environment. No, they couldn't have the current regulatory environment. They got a saying about America that we're so corrupt, if it's illegal, we'll make it legal. Huh, Loomis? Huh, Republicans? Huh? You want to get in on that regulatory bill, don't you? Right? Implement changes will start a panic with many exchanges, development teams, and token holders, which will destroy large amounts of wealth. Legacy software systems is key. Legacy software systems means it's TradeFi systems. That's TradeFi software. Often require more time to change than new systems. A 3-year period to make changes would be necessary for safe harbor. And which she gave you a 3-year period, didn't she? They gave you a 3-year period on the swaps. She gave you a 3-year period on the safe harbor. Well, guess what? Tell Ken we aren't fucking leaving. July 1st, right there, motherfuckers. And we didn't leave. Did we, Ken? Did we, Taylor? Did we, Pierce? Would pseudonymous names be accepted? We want to be anonymous. Yeah, I bet you do. So she writes that, and then she does this speech. That's a Hester Pierce speech right there. February 6, 2020. Now, what's really interesting about this speech is this is really helpful. It's funny she works at the SEC, because if you read this speech, it sounds like she's trying to give you hints and clues on how to bypass the SEC. Aren't you, Hester? Aren't you? It seems like a bunch of tips and tools for your friends to bypass regulations, which you work for, don't you, Hester? You read it. It goes pages. So if you don't want to be considered a security, you should do this. And if you don't want to be regulated by SEC, you should go do this. And if you don't want to be regulated, you should go do... Wow, those are some really insightful tips from somebody that works inside the SEC, isn't it? Hester. Huh? Wow, these guys are just really insightful with all the information they know. Bodies to go. Snakes. Tarbert, he's got a great paying job, don't you, Tarbert? I think I should be getting paid what you're getting paid, Tarbert. Hester. I think I should be getting paid what you're getting paid off, you motherfuckers. Yeah, I'm fucking angry. I'm saying what I want. This is 2 years of fucking pent-up energy right here. I've been waiting 2 years to say this shit. I thought it was fucking crazy. I need therapy lessons because of these fucking assholes. We all do. Wyoming, little safe haven, huh, Loomis? Huh, Loomis? Where's Loomis? And here's A16. These guys are just security guys.
And the second component is that...
Isn't it funny that Those guys are all security guys, and then Solana. And then they have to go to these guys for help. That's very interesting. I think these cryptos get hacked. That we get all these tokenized assets over on the crypto chain, and then all of a sudden they're hacked. We got flash loan attacks, right? You got arbitrage attacks, don't you? What this guy just talked. I mean, you put them over here, you drop that, and this is gone. The underline's gone, isn't it? I'm so fucking excited, guys. I mean, they admit it. They fucking admit it. I didn't just catch him. He doesn't even know that he's admitting it. The stupid fuckers. Oh, here we go. Goldman Sachs, Alameda. Andreessen, A16, Quintens, Blockchain Capital, Gold Tree Asset Management, KKR. These guys are so dignified, huh? These companies, they contribute so much to this world. Goldman Sachs and all these guys, they really are worth their value, aren't they? I think they might be a little overvalued right now. That's what I think. I think all these fuckers are a little overvalued. I think they need us. I don't think we need them. That's what I think. Isn't that right, Gary? Yes. He's coming. He's coming. He might become for me. I don't give a shit. I'd love some attention. I'd love somebody to talk to me about this stuff so I don't have to feel like I'm a fucking crazy person. That'd be really nice. If any one of these fucking regulatory agencies just fucking talk to me. Anybody. The lawyers, the regulators. I just need somebody to talk to. Maybe I wouldn't have done this. Why are they confessing? Because he's showing off his product to all their clients who want this shit. That's why he's confessing. It's their product. He doesn't know he's confessing. You see what I'm saying? He's a coder. He's not a market guy. He thinks these are good products because they're being asked for him. You get it? Fidelity. All of them. Our clients have been coming to us for the last 15 months asking us for these products. Your clients are fucking crooks, aren't they? So, this is just too much fun. Too much fun. Oh, this stuff. See, I got How We All Doing here. Because I was playing music for my own well-being, man. I needed to calm down. 2 years of this stuff. I made these songs for you guys. It's all over my channel. I made these for apes. And you guys never... I got 18 views. I made that for you guys. I know there's more than 18 apes out there. I never pump my music, but I'm in a good fucking mood today. I'm not pumping, I'm listening. Do you guys ever listen? Next is just like putting up with my crazy ass all day. You could start this video from the beginning. You could see me find this shit. I did it live today because I wanted help today. We did this together today, apes. You guys helped me. This all started because somebody left a comment on my last video. And they told me to check out Citadel's digital exchange, their crypto exchange. Because I hadn't checked it out yet. And that led to A16 and Andreessen and LayerZero and all of them. AMC Big Ums. Yeah, he gave me a shout out last night. That was cool. Actually, I watched it. Thank you. Thanks, Ames. He's contributed. Everybody has contributed. Everybody's been contributing. Get your hand out. Apes, you got this? And there you go. We'll see. I don't know. I should probably shut up before I get sued by all the richest institutions in the world. But they don't know that I'm like some crazy ass music. I don't give a fuck about them. What have I got to lose? Nothing. They got everything to lose. You like stealing from millions of people, guys? They don't scare me. They're scared of us. It's there. I played it over and over, and I got it in all my videos, and I've written it down, and I've written everybody. I should go out. I should just go get some coffee today. I was going to play a synthesizer in the coffee shop today. And you know what I'm doing these days? I'm bringing out like a little FM transmitter, and I can sit there with my headphones. And now I don't have to ask for permission. I'm done asking for permission playing places, guys, because they're all dicks. Like, you go out to play somewhere and they're just like, it's like, you know what? I'm just going to sit here. I'm going to play music by myself on my headphones. I'm going to tune into 106.5. You want to listen? It's an opt-in. They got speakers. They can tune into my station. I'm not bugging nobody. I'm done asking for permission. I'm just going to show up random places with a battery and a synthesizer and an FM transmitter. And that's how I roll now. My music's philanthropic. If you don't accept that, I get butthurt. Somebody wanted to tour my music. I'm going to do that video some other time. That's more important than all this. Right? Right, this isn't important information, right, guys? Is it? I'd like to know. If I'm wrong, somebody just fucking tell me. Anybody could have told me I'm wrong over the last 2 years. Nobody has. So I'm going with it now. Somebody want to tell me I'm wrong? Too late. Okay, I'm wrong. I take it back. Nobody's told me that. Everybody's show goes, this is interesting. You're onto something. What is this? All the people I can. I don't know what time I start this. What time I start the stream? Like 3 a.m. Maybe it took me 4 or 5 hours. Time to find this stuff, guys. You'd have to go like 4 or 5 hours in this video, 3 hours in this video. You'll see me. You'll see me figure it out. We'll figure it out right here. This is history. If this is real, if this is true, we're making history right now. You didn't miss it. It's there. It's there in all perpetuity, isn't it? These videos are here in all perpetuity. And we hold and we hold. And what happens when we hold things in all perpetuity? Let's ask LayerZero what happens when you do something like that. Right? Hey, LayerZero, what happens when these videos are held up in all perpetuity?
How can someone understand why?
Yeah, I mean, so I think there are a lot of things. One, okay, there's like a list of things that I think people do poorly to could.
Oh wait, it's here.
So how does that liquidity?
It has about $150 million in protocol owned liquidity.
How do you basically pay the people who are providing liquidity enough to be interested in doing it?
Am I messing it all up?
Yep. So Stargate. No. The general problem with wrapped assets is, okay, you use Ethereum. You use Uniswap. You're taking some risk of the underlying Uniswap code, right? But at the end of that, you never think about it again. At the end of that underlying transaction, you're done. With wrapped assets, you lock up an asset on chain A, you mint a synthetic IOU on chain B,
Solana,
and in perpetuity,
everywhere.
As long as that IOU exists, the asset over there now carries risk.
Okay, so if these videos are up in all perpetuity, and these exist, what happens to Ken?
And there's risk that on the destination contract.
Because I'm taking a risk posting this, aren't I?
That is broken. Infinite mint. Now your underlying is.
If this video goes to infinite people, the underlying, Ken Griffin,
worth nothing.
all these guys, Marc, A16,
There's risk
nothing.
contract that is broken, infinite mint. Now your underlying is worth nothing.
Boom. That's a really wonderful product. I have some things I could use that product for. I'm a big market maker and I gotta hide all these FTDs that I owe these millions of apes and these human beings. Can I mint this on Ethereum? Can I wrap that to Solana and this coin and this coin and this chain and this chain and this chain, and then we just make so many synthetic shares that it brings the underlying down to zero? Guys, they couldn't. We were buying it so much they couldn't even fucking do that. And they make money and they can't even do their fucking job. They couldn't even run AMC and GameStop down to zero. These guys are losers. They couldn't do it. They had infinite sources. And they couldn't fucking do it. That's the power of the ape.
There's risk on the underlying contract that is hacked and drained. Now your IOU is worth nothing. There's risk at the validation.
It was what? It was hacked and drained. They hacked it. From his words, he said it. Anyway, where's the video with Ken? Where's the video with Ken talking about crypto? You guys got that one somewhere? You guys remember that when Ken calls crypto evil? Somebody's got a link for that. I think it's time to watch that video. You guys remember that interview? I want to hear Ken Griffin talk about how evil crypto is and it's terrorist money and anti-American. I want to hear Ken say it. Where's that video, guys? We know it's out there. Oh. Oh. Oh my gosh, that's a horrifying picture. Was it this one? God, I can't stand that guy's face.
I think we're all trying to make sense of what's happening in the economy right now and what's happening in the markets. Importantly, this morning we saw that inflation rose 6.2% in October versus a year ago.
November 10th.
It's the biggest.
I'm just gonna post this. I'm not reaching nobody anymore. You guys do it. I'm making this video. I'm done. I'm done pushing this. I'm retiring today. This is my last day, guys. I'm done. I've been working on this for so long. I'm done. This is all I needed. It's everybody else's job now. It's investigators' job. It's regulators' jobs. Department of Homeland Security. Investors, voters, apes. It's all your guys' job now. I did my job.
Welcome back. My next guest is Ken Griffin, the founder and CEO of Citadel. Today, the hedge fund manages more than 40.
Are written in America. They're not written in Europe. So I want to make sure that we think about tax policies that maximize revenues to pay for the substantial costs that we have in our
Where does he talk about crypto? Anybody know?
And I'm curious what you're seeing and to the degree.
And making America beholden to the Middle East, solar, wind, deeper and longer than we're going to have today on our time. That as a retail investor, you basically trade instantaneously and you get a better price than you get on exchange. They love that. Now, the whole GameStop conspiracy theory, that's come and gone.
Oh, has it been? Did it come and go? Did it come and go, guys? Because it sounds like it stayed in all perpetuity, didn't it?
It was fascinating to be in the middle of that conspiracy.
Yeah, what was that like for you?
This is like a bad comedy joke. I mean, it's like a Saturday Night Live skit, but
in
real time.
Do you have a Twitter account? Do you follow this?
I do not have a Twitter
Where does he talk about
account.
crypto in this?
Stuff? How does it work in your office?
People come down and just tell me what's going on.
And that was the moment this guy realized he got fired.
To this day.
I mean, it resurged a few weeks ago and then died back off.
What do you think Gary Gensler, the head of the SEC, is going to do when it comes to payment for order flow?
I don't know. I don't know. But here's what I think. The United States has the most efficient equity market in the world. And the SEC unleashed competition with rural NMS, and that has been a huge windfall for all investors, pension plans, endowments, people saving for the retirement, retail investors, day trading. Everybody won on the back
That
of
looks
the
pretty hot
SEC
right there.
Introducing competition with the indirect nature by which ESG policies work.
A couple weeks ago about what's happening in Chicago when it comes to safety.
Club of Chicago just a few weeks ago is the 24-year-old who was shot. Go.
Those funds will outperform.
I think the better question will be, will those companies outperform?
At Citadel, who are either
Anybody
doing
know
this
where
on their own or
Come on, guys. Where's the interview where he just rips on crypto? And he just calls it evil, like terrorist shit. You guys know where that's at, right? We gotta find it. I want to hear it from his mouth. I want to hear him call it that.
on you was saying,
Not
"Hey,
me.
man, we should be doing this."
There was a 21-year-old intern that flew to Chicago from our New York office, assets like the meme stocks, like cryptocurrency, and created spectacular mark-to-market wealth. But the question is what underpins that wealth? I don't know the answer to that. The theories that I hear, the most attractive one is that one of these cryptocurrencies will replace the current payment rails. Visa and MasterCard will be displaced by a crypto solution that will be a lower cost of making payments happen between businesses and consumers. I don't fully buy that. I don't buy it for a lot of reasons. First of all, who deals with fraud risk? You have your wallet. You leave it in the room back there. You walk out and somebody takes it. Are you worried about your Visa card being used by somebody else? That's exactly right. You know the bank will make right by you. But if that wallet was your crypto wallet and somebody spent all the Bitcoins in your account, who's going to make you whole for that?
That's a good question, Ken.
So there's a number of issues that haven't been addressed by crypto in the theory around how payments will be made more efficient. And for that matter, the early generation cryptocurrencies, Bitcoin, for example, Bitcoin's incredibly expensive to manage payments on.
This isn't the one. There's one where he just like calls crypto evil. And then, was this before or after he joined Sequoia? Because like he joined Sequoia like 3 weeks after that, right? I guess I could find out. I mean, we're just hanging out all day, guys. We're not doing anything really special right now. I'm gonna repeat stuff and we're just gonna go over stuff. I'm just hanging out. It's Ape Day today. Okay, January 11th. Okay, so it didn't happen yet.
You've seen the energy footprint of Bitcoin. Huge contributor to global warming if you think about it. Like Bitcoin is a bigger contributor to global warming than any form of payments that we use around the world today in aggregate. It's unbelievable. So if we take a step back, people are very focused in a world of new ideas and new creations.
I feel like he did this afterwards, right? Oh god, that's funny. Let's see. He probably tried to... He's in it now. Because he changed his mind. Oh, here we go. Here we go. Hey.
The future of advice will not be just the human versus the machine. It will be absolutely the human empowered by the machine.
Oh, come on.
I'm
Oh, really?
Huckabrar, and we are Morgan Stanley.
Others would love to know what you think.
Hey, I would like to know. You guys want to know? You guys want to know what Ken thinks about crypto? I do. Oh, come on. Oh, come on. Probably running out of memory. Do we have to do another ad? Look at this.
The future of advice will not be just the human versus the machine.
Like so much
It will
stuff
be
flying at me on
absolutely
that
the
screen.
Human empowered by the machine. I'm
I'll let you
Naima Huckabrar, and
pay
we
an extra
are
5
Morgan
cents for
Stanley.
that ad.
Others would love to know what you think about crypto. Cryptocurrencies have become a $2 trillion market. And a number of other big trading firms, including those in this town, such as DRW and Jump Trading, are making a big push into crypto.
Jump
Do you
Trading.
believe in crypto? And even if you don't, Ken, should your businesses be active investors or traders in crypto anyway?
That is a great question. So first and foremost, I wish all this passion and energy that went into crypto was directed towards making the United States stronger.
Oh yeah? Is that what this is? Oh, I did it again. You shitting me. What a piece of shit. We're finding it somewhere else. Bloomberg? Aren't those guys funded too? I mean, come on. That's baloney. I don't want to play that ad again. I don't. Is that the same one? Jesus.
The future of advice.
We're not doing that. Okay. So what day did they do this? January 11th? January 11th.
You are
October 4th.
early in your career, you are making a grave mistake not being back at work. It's incredibly difficult to have the managerial experiences and the interpersonal experiences that you need to have to take your career forward in a world.
That's not even it. God, I'm so sorry, guys. But we do have to hear this. We do. I haven't heard this in over a year. Oh, it's different. That's good. I didn't see any apes in there, did you? I think I got that all wrong.
Others would love to know what you think about crypto.
Okay, no more.
Cryptocurrencies have become a $2 trillion market. And a number of other big trading firms, including those in this town, such as DRW and Jump Trading, are making a big push into crypto. Do you believe in crypto? And even if you don't, Ken, should your businesses be active investors or traders in crypto anyway?
That is a great question. So first and foremost, I wish all this passion and energy that went into crypto was directed towards making the United States stronger.
Oh. Oh, you got a good laugh on that one. That is
Let's
funny.
face it, it's a jihadist call that we don't believe in the dollar. I mean, what a crazy concept this is, that we as a country embrace so many bright, young, talented people to come up with a replacement for our reserve currency. Which
Oh, is
helps
this the
make
laugh
our
track
standard
one?
of living a reality and accrues incredible benefits back to our country. Let's replace the dollars, the global reserve currency, with Bitcoin. That's a brilliant idea. By the way, let's go ahead and build several hundred new power plants that produce an unbelievable amount of carbon to make that dream a reality. I think I maybe just told you how I feel about crypto.
No, could you please be a little more explicit?
So I will have so much hate mail in my inbox and on my Twitter account in about 30 minutes, I can't count it. But we don't trade crypto because of the regulatory uncertainty. We often make markets in companies whose business models I don't really have fondness for, because one of our jobs as a market maker is to meet the liquidity demands of American families that want to invest in X, Y, or Z. And frankly, it's not my job to tell them if they're right or wrong. It's my job to provide them with the best possible price. Because of the lack of regulatory certainty around cryptocurrency, we just aren't involved today. And I really believe that Chairperson Gensler is spot on the need to have thoughtful regulation around cryptocurrency. I actually think that doing so will make it a smaller market because it'll become a far more competitive market when there's regulatory clarity. And that will be good. A smaller market, less
He doesn't want
people
competition.
involved who are frankly just trying to make a quick buck. And whatever the virtues are of that product, and I think those are pretty nebulous, will become very different in a world of competitive exchanges and competitive pricing by tier one market makers willing to put their best foot forward. So I really believe that Chairperson Gensler is spot on the need for regulation. And the SEC has got a solid history of writing good regulatory policy.
That's funny because it looks like they're doing everything in their power to bypass control from the SEC, isn't it? It looks like Citadel Securities and Ken Griffin announced, when is this? January 11th. Oh, on the 11th. He's with Sequoia and Paradisium. Okay. And then what is Sequoia involved with? All of it. All of it. Oh, man. Isn't it? LayerZero, right there. That video I've been playing all day, isn't it? So, first he thinks it's evil. And then he gets 0.1 billion into it. Not a few bucks, was it? That's funny how that works out. They must have a really good product for you to have that unfair competitive advantage. I don't know if you guys saw that video.
And in perpetuity, as long as that IOU exists, the asset over there now carries risk. And there's risk that on the destination contract, if that is broken, infinite mint, now your underlying is worth nothing. There's
boom. Boom, boom, boom.
And is accounted for. Exchange and clearinghouse purchased by FTX. One exception. And let me just conclude by saying that there is one exception in this story. One exception is LedgerX, a derivatives exchange and clearinghouse purchased by FTX and registered with the CFTC. John Ray, the CEO appointed to navigate the FTX companies through bankruptcy, said that LedgerX has a, quote, solvent balance sheet and responsible management. Customer money was safeguarded.
Oh, well, that's good. That's real good. Wouldn't want to lose those perpetual swaps, would we? Got a little ticking time bomb there, don't you, John? Wouldn't want anybody to know about that.
And is accounted for. The DCCPA replicates these commodity markets.
Oh.
Been long.
Man, my computer can't even handle this anymore. I've been going hard all day. I'm gonna take it out now, guys. I need a break. I didn't sleep last night. I got so much. I'm gonna crush so hard tonight. I need more coffee. I'm not past my coffee time limit. I still got a few hours to drink a coffee. Absolutely incredible. Absolutely incredible. Well, this video, how long is this video now? Like 8 hours? Jesus Christ. We did it. I want lawyers on this. If I'm wrong, somebody tell me. Just find somebody, talk to me. Just tell me I'm wrong. I'll say it. I'll admit it. But nobody's done that yet, have they? Have they? I was right this whole time. And yeah, they should be worried. I hope they're worried. Look at that smug little fuck. Marc, we see you. We see you, Marc.
Saw this playing out in the market.
Huh? This was February 3rd, wasn't it? How, Marc? Is that a crime? A16? Games Fund 1? I mean, they target us. Everything I talked about is pretty much in all my videos except for the stuff at the first few hours of this video. You'll see me find it in real time in this video. We do it together. And I'm probably missing stuff because I saw that video, man, that's all I needed to see right there. That was it. He told us everything. Berkowitz is awesome. Gary Gensler is awesome. Benham's figuring it out. You know, he'll get there. This is a big problem they all got to figure out. So he'll be put to the test. I watched the hearing. He held up well. I just don't think he knows. These guys, they got no excuse. They know exactly what they're doing. He's at Citadel. He's at A16. Is she still in there? I think she had like, what, 12 meetings with institutions in April? And then she extended swaps reporting. She talked to all of them. They didn't talk to them. They talked to her. Right? Security-based swaps right here. Absolutely nuts. Here's the big story. I'm going to post this again. That's where it started, right there. Right here. Gary Gensler helping the Dodd-Frank Act. And then right here, they roll it back. But everything they talk about in that article, they roll back right here in this video. And look at that. 331 views. How ridiculous is that? They're over here changing markets. They're over there changing markets. And they get 331 views. 5 of those are me. That's ridiculous. Ridiculous. You know? Where is everybody? I guarantee you the banks are watching that. The market makers are watching this shit because it fucking matters. We're talking trillions of dollars. Derivatives is like trillions and trillions of dollars. And they got 300 fucking views? You shitting me? It's ridiculous. Run.
You did provide clarity and certainty, ma'am.
And Berkowitz talks about it all right here.
The transfer of return, but yes, these are indeed sort of
completing, and you're involved in that and showing excellent leadership.
And because he wants to know what's going on here, he knows that they're doing something fishy, and he's asking all the questions. He's like, so this means this, doesn't it? And he's getting them to say it, and they're nervous because they know what they're doing is wrong because they're being paid off to do it. So Berkowitz doesn't go to the banks. He doesn't go to Citadel. He doesn't go to crypto. He goes to the SEC to help Gary because Berkowitz is a motherfucking badass and he's a patriot. Okay, we need more people like that. That's who we want in our regulatory power. We vote for people to put guys like Gary and Berkowitz in. Okay, we don't vote for people that put those other guys in. That's not what we do. Okay, this is democracy. We get to look at this data. We get to share it with each other, and we do our job now. We put pressure on these politicians that are involved in this stuff. We put pressure on the regulators that are involved in this stuff, okay? We're going to have, this is one of the most historic moments in markets. We're going to go through our third regulatory reform in history, okay? And I found this before the 14th. Gary talks on the 14th. They're going to be drafting bills. Loomis gave them a safe haven in Wyoming. It's on the SEC website, and they're all following suit. That's what Hidden Road is doing. They're all filing with the SEC to be deregulated. Okay? She's kind of giving them an outlet for that. Don't let her do that. That's not regulation. That's not regulation. That's helping your little rich friends, isn't it, Loomis? Oh, turns out Sam donated to her too, in the dark. How much? Oh, I don't remember. You don't remember, Loomis? When Sam Bankman-Fried donates money to you, or his friends, you don't remember how much money, Loomis? But you're going to talk about how he gave all this money to the Democrats, but you don't remember how much he gave to you. And you don't have to remember because it was in the dark, wasn't it? Yeah, it was in the dark. Because we got him on. We got him in his last interview talking about that. He donated equally to both sides. And I want to know about any of them. If there's Democrats in this, if there's Republicans, we need to do our job. We don't vote for those people. That's on either side. Okay? That's our job. We get to hold pressure on these people, and they feel it. Okay? So we need to find out first, and that's what they're sneaky about. They don't like to get... They don't like when people know who donates to them. They like dark money. They like crypto. They don't have to tell us what they're doing. They don't get to be held accountable. Hopefully this fixes that. I'm excited. This is exciting as fuck. We're changing the world. If we do a good job, they'll be thanking us. I'll read some. Love you guys. Yeah. Share this with that video. I shared the link a few times. You guys have it now. I have my DD. The video before this, I pretty much sum everything as fast as possible in an hour 15. Otherwise, you'll have to. I mean, videos are faster than reading it, right? So it's all there. I try to share as much as possible. Some of the earlier videos, some of it's not totally accurate anymore because I'm learning. There might be inaccuracies in this, but that's for authorities and regulators to figure out from this point. It's out of my hands now. I did my job. So now it goes to regulators, it goes to investigators, and they get to do their job now. So they get to tell me, they don't even have to tell me. They just get to figure out what I got right, they get to figure out what I got wrong, and then go after these fucks. Okay? I did my duty. I want to be at the coffee shop playing synthesizers and drinking coffee. That's what I like to do. I like to play music for people. I didn't want to be doing this. I like stocks. I don't like crypto. I didn't want to be doing this stuff. Okay? That risk that everybody signed up for, I didn't sign up for that. Yeah, I got a battery. But, you guys know how it goes. But I'm sorry, I'm so hyped up to it. I mean, you guys watch, you can see it. You can see this video. I'm sitting here, I'm doing my DD. That was the link. That guy just spills the beans. He doesn't even know it. He doesn't even know it. That was in October. We need to look at Wormhole. We need to look at Solana. We need to look at some of these NFTs. A16 Z Anchorage. Okay, we need to look at what's that other one? They're all in my videos. They're everywhere. But looks like my batteries are dead. That's it. That's all I got. Fucking love you guys. This is amazing. Amazing. Gary's coming. He talks on the 14th. I'll see you all there. Okay? But we got too many synthetics out there. Too many synthetics. Right? They're clogging the system. Okay? All because I looked at Pyth. That's right. I like Matrix. There's so many comparisons to the Matrix in this. So many. We got our synthetics clogging the system. You know? Can't have that. It's detrimental to the whole system now, aren't they? They're a risk to the whole system. Got to clean them out. But they know that. I can't believe Gary did that interview and then turned around and did this. He's coming, Gary. Here's Wyoming. It's on the SEC. It's on the FinHub page. So you got to go to the Wyoming FinHub. In fact, you'll find some pretty interesting comments on this, I'm sure. And you'll find out who they are because they all comment on the FCC website. They almost like, it's like almost like they're turning themselves in. Non-DVP custodial. That means whoever's holding it in custody, it doesn't have to move hands. Fidelity can hold custody. Jump Trading can hold custody. They can tokenize them under FTX and never move them. And then they can do these transactions without ever having to move them. In fact, if they stay there that whole time, like that guy said, even better. Even better. If we can keep these in perpetuals, that's even better. So, beautiful fucking day. It's Ape Day. What is today? 12/8. Happy holidays. May the ghost of Christmas past come and get these guys. Ren Doge, check out the ledger, January 26th. Ren Doge, Jump Trading. Those are our players here. Robinhood to Jump Trading. To XRP, to all of them. Get them all. Okay. They did it in 2008. Get a second one. They don't get a second pass. Right? They thought, oh, we got away with this. No, they didn't. They're not getting away with anything. Not a second time. That's not how we do it. Ain't nothing gonna stop that. Wormhole, zero slippage. If you saw my last video, zero slippage, that means easy to manipulate. Wormhole, zero slippage. Easy to manipulate on one side, affects our stock on the other, underlying on the other. They hacked our stock market. And they know it. And today I proved it. I thought it, and I proved it. That guy just told us. He just fucking told us like a stupid motherfucker. How much is that guy worth? I'm worth more than that guy. That's stupid. Fuck. I can't believe he said that shit. Blockchain Fidelity. If you're on Fidelity, they got approved last Friday. They are tokenizing their underlying, their stocks. Okay? What happened since Friday? You know what happened since Friday. Fidelity. Where did apes go after Robinhood? Fidelity. Who owns your stock? Not you. Fidelity. Okay, we told you. Okay? Fidelity got approved on Friday on Virtue's fucking prime broker in the UK. Hidden Road. TPCAP. Okay? I put all the links up. They're all up here. Digital assets. DTCC started the digital assets August 22nd, same day they issued APE. You're going to see correlation after correlation after correlation. One after another after another. It's just happenstance. It's just happenstance. Just a few hours, you know. These guys. Sequoia and Andreessen. FTX. LayerZero. There's our guy. There's our culprits. Sequoia, FTX, LayerZero. With Virtue. And Hidden Road and Fidelity. Oh my gosh. They got their FCA approval. And they'll say yesterday. It was Friday. They got this Friday. Absolutely madness. Forward swaps. They're doing forward swaps on these. They could set an activation so that if they tokenize these on January 26th, they could have done a forward swap that said don't activate it for like 3 months. Just let it sit there. Shit, they could have done a year. So a forward means that it doesn't activate until the forward date. Okay? And that's what these things are good for. They could have easily done this. They could have minted those on January 26th. They could have activated 3 years later, as long as they keep them somewhere. And now that they got rid of FTX, do those get deleted or they just sit there forever? Do they? Do we know? Do all the FTX assets just sit there forever now? Do they? These are important questions. Who has custody? Who's copying synthetics? We know it has correlation. They told us it has correlation. I had like 6 or 8 theories. These guys are involved with that. What's that one? It starts with an F, I want to say. It's their fucking chain. It's super fast. Anyway, this is for smarter people than me now. People that get paid more than me. Because you know what? I'm done doing their job. I'm done doing everybody's job. I called authorities on this. They didn't listen. They hung up on me, man. Oh, here you go. Fidelity hiring 100 workers, build a digital blockchain, Ethereum trading. Here you go. When is that? October 20th. Man, they're moving fast. They're hiring 100 people on October 20th. They got approved last Friday. Got to get it in before the 14th. Don't you? Who knows? Who knows these dates, man? They're all on time crunches. But here you go. Fidelity's track record. Boom. It's in here. Combines our expertise, market infrastructure, of Fidelity's track record. Is custodian pending FCA approval. They got that Friday. TPICAP. Follow the trail. Here we go. Outside independent analysis. That's me. That's us. I want that. I want that award. I do. I want it. All of these guys. Wait, that's not a crime, is it? That sounds rhetorical to me. You think he knows what that word means? Who's the dumb ape now, motherfucker? Yeah, that's me. That's how it all started. Thanks for the message. Somebody told me about EDXM. Forgot to look into it. I mean, who knows? I went one way. There could be a million things in here. Fidelity, Citadel, Charles Schwab with EDXM. Citadel's new crypto exchange. I mean, they're telling us. Memex. I found them with Pyth and Solana and all of them. That's all of them. Memex. They're one of the data providers for Pyth. Who knows? Maybe there was the glitches on Pyth. How would I know? It's all anonymous. Fucking crypto. Motherfuckers hacking our market. Who do they think they are? Fidelity Digital Assets, Paradigm, Sequoia, Virtue. Right here. All in here. All on EDXM. As of Friday. There you go. I DRS my shares. I own my shares. I don't know about you guys. I own my shares. They can't lend them. They can't do this shit with my shares. In fact, I can get mine on. I'm going to get one printed. I'm going to put it framed on my wall. I'm going to keep it forever. I'm never selling it. That's what I'm doing with my shares. My shares are worth way more than $250K in insurance than me. They have no idea what my shares are worth to me. They have no concept of what value is. These people are so out of touch. Ken Griffin has no concept of reality. These people have no concept. They decided they were going to try to crash our markets. I can't believe it. They couldn't pay some apes, so they decided to crash the American market and get insurance on it while they're at it. Those motherfuckers. Read the Goldman Sachs report. Goldman Sachs. Beauty is not in the eye of the beholder, is it? Goldie. What's their whole game in this? Read this report. They knew. That's how I found all this stuff. They told me. They talk about the liquidation events. I think this is how I found out about it was disruptive event. Read disruptive event and all the regulator reports. It wasn't until here. That's when I got it. That's when it clicked. They talk all about it. They talk about how crypto is a systemic risk to our entire market, right in here. And then what do? They got into crypto too, didn't they? Didn't you, Goldman? They knew what these products were. All of them did. You think we're going to forgive you after a second one? You guys do 2008? You think you can do it again? No. Think you can sell us some fucking pictures of monkey and crash our markets? I don't think so. These guys are going to... I'm done with these guys. We're all done with these guys. They don't deserve anything. Look, there it is. FTX had 100x. Gary goes and talks to him and goes, you can't do that because Gary's a fucking badass. At least got it down to 10, which is still disgusting. And we can't ignore Binance in all this. Binance threw FTX under the rug. Binance introduced FTX to these products. Okay? For all we know, FTX is we don't know. We don't know. But Binance started the run on FTX. Binance introduced them, started the run on them, got access to their books, and continued the run on them. Okay? But anybody in this market now, they hold that risk. They all hold it. Binance, all of them. And it's not their risk now, it's all of our risks. Because they're fucking assholes. It's right here in the report. Given the decentralized nature of an ecosystem and the absence of a lender of last resort to stabilize the markets, not only will accounts likely be wiped out, like a chain, but the exchanges, so like FTX, other entities in the digital asset ecosystem and stablecoins that are partially backed by cryptocurrencies could be wiped out as well. So anything tied to our markets, basically. They hacked our markets and they introduced all this risk into it. And these automated liquidation events can wipe out entire fucking markets. Right here, in writing, from Goldman Sachs. Annualized average funding rates of Bitcoin perpetual futures. Okay, they talk about the leverage. You know, because when you have more leverage, any little movement's going to wipe out those wallets. And there you go. Boom, wipe it out. Wipe it out. So all these kids are going in staking, right? They're going in staking for like an annual interest rate, not knowing that all this risk is going to be dumped on those chains. And it's just, you know, there's customer funds right there. There's your customer funds. Get all these little kids and they're staking. Let it move a little bit, their wallets get wiped out. Wipe out 20 wallets, it drops the underlying. Wipes out 30 wallets, drops the underlying. Drops out 100 wallets, and then you got a feedback loop. It just never stops. You can wipe out our entire stock market, couldn't you? That seems really handy dandy for somebody who might not like us. Might want to hurt a lot of people. As in, like, well, a lot of people. Absolutely insane. Absolutely insane. Read this report. This is a good report. I think it's internal. So I think it's like half truthful. You know what I mean? Risks. They don't get to it till section 3. Absolutely fascinating while you're learning here. But that's it for the day. I need a break. I need a shower. Ugh. Amazing. Okay. I love you guys. I'm out. My battery's dead. So that's that. What should I end on? We gotta end it on something here. Let's see. Oh yeah, let's just do this one. There's all you guys. Wake up! We're here. We did it. I love you. Let's go. To the moon. It doesn't even matter at this point. Diamond hands forever. We just changed the world.